normal.
Yeah.
You got to get used to it. It's been a week and a half.
I'm trying. You should ask the
The first day there was a double take. There was like, what happened?
Firstly, Eid Mubarak, Onam Mubarak, Market Mubarak.
Very good.
Perfect.
There you go.
Yeah, it seems good. I mean, oil off the boil, and that should be construed positively. Does this bring about a sustainable swing? Remains to be seen. But the thing that's happening whenever the markets start to look a bit okay is that the quantum of, and we'll talk about in the trade setup, but the quantum of blocks and IPOs and the paper supply just zooms up, and therefore just gets taken up.
It's as if they were waiting at the door, all of these investors, and they said, hey, we have these great investments, whether it's Grow or Lenskart or XYZ or Meesho.
You know, I don't know if you remember, but so me and Tamanna on the day of the budget evening of the budget had gone to a budget party thrown by one of the market people, and one of the sales people in his team had said that market 26,000 जाएगा तो मेरे पास इतने 1,000 करोड़ का पेपर सप्लाई रेडी है तो थोड़ा फाइट है ऊपर जाने में.
Yeah, but the global picture looks good. The global picture looks good, and it's mostly fatigue of the two sides in the middle of the war that has choked the Strait of Hormuz, if I were to put it simply. So US markets closed in the green as oil prices have slid over war tensions easing. We'll pull up the US rates for you as well as the futures, and you had 0.66%, 171 point uptick on the Nasdaq ahead of those Nvidia numbers, by the way, and then you have the PCE going to come in on Friday as well. Your US futures saw Nasdaq futures slide a bit. Treasury yields have softened as oil prices cool off. And the other big event, all eyes on the Fed chief's speech at Jackson Hole Symposium later this week. He's slated to speak on Friday. The 10-year was at 4.63%. Oil prices, meanwhile, have cooled with multiple signs of tensions easing. And I'll just go through some of them quickly. One is Scott Bessent, the U.S. Treasury Secretary, saying imposition of economic sanctions means it's unlikely kinetic warfare or full-scale warfare starts again. News reports, meanwhile, are claiming that the U.S. is planning to reinstate its diplomats in the Middle East. That's a big one. That means they're sensing that it's not going to be as dangerous. Iran and Oman, meanwhile, are mulling how to begin a temporary route in the Strait of Hormuz. And Trump has claimed that the strait is now demined completely and is safe to travel through. Look at what's happened to the Brent as a result of all of these factors and more. So Brent prices have slid 86.26 on the Brent, and you've seen this firmly at the 92-93 mark for most part of the week. Let's pull up Asia, and that's generally good news for Asia. You're going to see it in India as well. Hang Seng up about 1%. Nikkei is mildly in the green, and just want to look at the Kospi, completely flat for a change. We pull up the India implied, and you're going to see a bit of a gap up opening, nothing massive, but 87 points up. Mark Franklin, Deputy Head of Multi-Asset Solutions, Asia Manulife Investment, joining us this morning. Mark, as an asset class, what is crude and Brent looking like right now?
From a technical point of view, what you've seen is, even though an oscillation within a wide range, you've seen some lower highs and higher lows forming, which suggests that we're consolidating ahead of a potential break in a certain direction. That direction will be driven by whether the conflict and the standoff in the Middle East is resolved either peaceably or if it continues. But what's clear is that inventory levels, both seaborne and onshore, have been significantly depleted. And so if there is a quick and imminent resolution to the conflict and easy throughput through the Strait of Hormuz, then you'd expect oil prices to move further down. But if it's not, and there's an ongoing standoff, then you'd potentially see a bit of a move back higher towards the top of the range that we've seen in the last few weeks.
Mark, good morning. And what's your opinion, and what would you look forward to when you watch for the data coming out of the US this week and the commentary from Jackson Hole? Is that going to be a major trigger, in your opinion, in how global money flows in the near term?
Well, if you look at the data progression in the last few weeks, you've seen some further softening in the employment data in the US. There was some welcome relief on the inflation side, although that coincided with the pullback in oil prices that we saw in June and early July. But subsequent to that, of course, we saw a bit of a bounce back. And so maybe the core PCE data that we see later today, this evening, Asia time, may see a bit of a pickup again. And so the outlook really is still somewhat murky. On the growth side, signs of moderation, or certainly a narrowing of the contributors to growth, whereas inflation and price formation still remaining somewhat unclear. And so if there is an upside surprise in core PCE, because of Jackson Hole coming up on Friday, you could see a bit of a bond market reaction. Whereas if it's an inline print or a downside surprise, you could actually see a bit of a bid, given that shorter term investor positioning is quite short duration. Of course, that also coincides with the recent, at least verbal intervention by the US Treasury to increase their buyback operations for longer dated bonds. And that's just kept the shorts a little bit on edge in terms of the trends that we've seen form in longer rates and the sell-off in rates that we've seen in recent months. Fast forward to Jackson Hole, we've had quite limited communication and guidance, not just at the last Federal Reserve meeting, but also subsequent to that, both from Chair Walsh, but also other voting members as well. So to some extent, it is all to play for. From Walsh's perspective, what you probably want to do is create the impression that there is definitely a balanced approach towards how the data progresses and a willingness to respond in kind in either direction. But at the same time, he's probably not incentivized to inject a bout of volatility in both risk assets and bond markets more broadly, because as we get closer to the midterm elections in the US, and bear in mind, we're only sort of 2.5 months away now, there'll always be a situation where the Federal Reserve leaves itself open to accusations of effectively, not necessarily intentionally, but effectively intervening in the political process in the run-up to that.
Got it. Mark, do you get worried about the extent of money flow that the US chip AI companies are doing to global flows per se, and does that starve EMs of capital in the second half, even if fundamentals were to improve? Because the first port of call maybe, just maybe, the paper that these companies are issuing, because there is growth there for sure.
Well, the rally in semiconductor and AI related stocks and themes has not been a purely US story. There's also been significant flow into certain EM markets such as Korea and Taiwan, of course, and some of those sector names in Japan as well. The bigger question really is the extent to which the sheer heaviness of new bond financing to fund the significant capex cycle that we're seeing, is that a contributing factor to the steepening of yield curves and effectively the buyer's strike that we had seen for longer dated bonds because of that crowding out effect, or whether actually the move in bond and yield curves is really more a function of very pro-cyclical fiscal policy and a somewhat neutral monetary policy setting. That steepness of curves, the rising term premium, a significant investment cycle in the US, which is helping to support GDP growth, those to some extent have been drivers of capital flow back into US assets post the Liberation Day last year. I think what would likely see a broad-based shift back in capital flows to the wider set of EM opportunities, not just the semiconductor names, would be driven by a couple of things. The first would be a softening of the US dollar, either as a result of oil prices cooling down or actually via FX intervention. And therefore, people would become more interested in taking risk outside of US assets. And then the second factor as well would be an easing of monetary policy indications by the Federal Reserve, which is certainly not base case at the moment, also partly driven by oil price formation, that would trigger demand for carry-seeking currency exposures in the EM complex as well.
Mark, just wondering how you're looking at Indian markets, because you spoke about emerging markets, but India specifically, we're seeing at least global flows or foreign flows, and the outflow of them stem in the month of August is improving. What is your take on India?
Yeah, it's certainly served as a bit of an anchoring position in the last few weeks when we've seen a pickup in volatility of those high momentum markets and the profit taking that we saw over the last 2 to 3 months. And the challenge for India remains the fact that even though it's lagged significantly in absolute terms, it's not as if the market has come off a large ways. And so you're still left with valuation multiples, which to a significant extent discount the structural growth story that India continues to have. And that being said, though, if oil prices do come off significantly, software as a sector, as a theme globally gains traction rather than just via short covering, then India's equity market, given its construction from a sector point of view, could see a bit of a bid. from asset allocators both globally and regionally.
Okay, fair point. So therefore the assumption and the interpretation, my interpretation of that is that you'd wait for a little while for it to get more attractive in a relative sense. Mark?
I think it's absolute attractiveness as well as relative attractiveness as well. India continues to trade a significant premium over the broader EM complex for justifiable reasons. But if you look at relative to its valuation history, both relative and absolute, the true buying opportunity, the sort of the close your eyes and buy no matter what opportunity hasn't quite emerged just yet.
All right. Thanks so much, Mark, for taking the time, and have a great day. Okay, let's talk about what happened in trade yesterday. It was quite an interesting close to the series of August, and quite a bit of action at the end of the trading day. You had, first of all, flows data that came through. Foreign institutions once again net buyers to the extent of close to 1,600 crore rupees. Domestic institutions net buying to the extent about 230 crore rupees. There was a late surge in the Nifty 50. In fact, in the markets as a whole, in fact, the Nifty 50 115-point gain at the end. You had the benchmark gain over 70 points, in fact, to be exact, 74 points during that CAS window. And a large part of those gains actually came through from the heavyweight HDFC Bank, which ended higher by as much as 0.5% during that CAS window. The Nifty 50 ending about 0.9% higher than the intraday low, so the climb back was pretty ferocious. The Nifty Bank actually ending flat, gaining about 0.5% from the intraday low. A few heavyweights actually stood out. You had Adani Enterprises that was the top gainer on the Nifty 50, ending higher by as much as 3.7%. But the hospital stocks also gained ground, and so too did Interglobe Aviation, as the signs of easing of geopolitical tensions meant positive news for Brent crude moving lower. Market breadth improved at the end of the session, but it still favored the declines. You had the broader markets that recovered in line with benchmarks. The mid-cap index ending with gains of about 0.4%. Small cap index coming off the lows, but still ending lower by as much as 0.2%. Pharma, PSU Bank, consumption were the top sectoral gainers, and most sectors ended up in the green despite that market breadth, with energy and metals underperforming, and those cuts were not significant. So it was an interesting session, still narrow in the larger scheme of things, Neeraj, but I think the buying at the end of the session was heartening.
Yeah, I mean, as was probably the case day before as well, right?
Yeah.
That the last half an hour, 1 hour produced some buying. But frankly, I spoke to a bunch of market participants yesterday, just had the opportunity to do that. And there seems to be a bit of a worry around the rate hikes, part one, but also the constant blocks and IPO paper that keeps on coming. And just look at the quantum of blocks that are happening today. And if indeed the Sequent or the VS Scientific block were to happen, that's a large set of paper that comes in today as well, which has to be absorbed. So a pretty serious quantum of paper coming in nearly every single day, and that worries people. I mean, of course, remember the two large IPOs are yet to hit the street, and they will presumably, both of them will hit in the second half of this current calendar. So there is enough paper supply out there which may have a bearing on the upsides. And yes, crude has come off today, but no major triggers either side, and therefore a lot of people believe that it's better to be on the side unless there is very strong conviction, because trading has become very, very difficult currently with news flow and market moves negating sometimes even positive news flow as well. And hence, despite the fact that chemicals are seeing a flurry of discussion, careful trading is advisable. Now think of this. The prices, and I've used a couple of instances out here, there is serious price uptick that has happened at the China level too. In bromine, in phenol derivative prices, they are up strongly month on month, year on year, and you would argue that with such an uptick in prices, there should be, or there would be, a no-brainer uptick in the companies which are dealing in these products out of India as well, because for them at the same volume, the revenue or the realizations move up because value moves up. But somehow we are not seeing that evidence because there is a bit of circumspect behavior when it comes to trading very, very heavily. So trade with caution, but yeah, there are certain cohorts which are promising some fairly strong Q2 numbers as well. You might want to keep an eye out for those at least.
I think the mood has also lifted because of the recovery that you described, Alex, that 200-point recovery from its intraday low for the Nifty. This is boosted by a 75-point gain during CAS itself, the closing auction session. We've reclaimed the 20-day EMA and settled at 24,335 on the Nifty. So the bias has turned positive above 24,300. Immediate supports now at 24,200 to 24,180. A crucial base is at 24,100 to 24,040. Immediate resistance 24,375 to 24,400. And a target resistance band at 24,480 to 24,500. For the Bank Nifty, broader structure remains positive as the index continues to hold above its 50-day EMA, but remains slightly below the 20-day EMA, keeping the short-term trend sideways. The Bank Nifty appears more range-bound or indecisive, whereas the Nifty has a stronger bullish structure. Immediate support at 57,305 to 57,205. Crucial base at 57,045 to 57,000. A pivot resistance at 57,630 to 57,730. Upward resistance at 57,890 to 58,135. So those are some of the key levels you should watch out for today. But Puneet joining in for the FNO setup.
Well, thank you for that. As you mentioned, there are two key things that we saw in yesterday's session. One was, of course, the recovery at the end during CAS, as well as how we ended above the 24,300 mark, but also was the rollover data that pointed out with some positive cues, both for the Nifty as well as for the Bank Nifty. So we are yet very hopeful of what we were expecting in the month of August. Maybe that translates into September, because there have been a lot of positions that rolled over. Some stocks like Vari Energies yesterday, and we discussed that in the closing show as well. Almost seeing 96 to 97% positions being rolled over for a bunch of individual names, and hence while the index level for the month of August continues to be in that range that we've highlighted between 24,100 as well as 24,600, hopefully this last hour gash helps us with a better outcome for this monthly expiry too. For the Bank Nifty too, it's similar. What we are watching out for is the cash markets. I mentioned yesterday that August could be the first month where you see positive cash balance come through for the foreign investors. A couple of days yet to go, and we are keeping our fingers crossed. But the index long, as of now, continues to be very depressed at that 10 to 11% mark. So we started off August with some good buying. 14 to 15% is where we had reached, but then that momentum just fizzled out despite good earnings that we saw in the first half of August as well. On terms of what you have seen in open interest distribution is also very, very simple. 24,000 continue to have the highest put open interest. Maybe this could change with this new monthly expiry that we will be starting off today as well. But on the calls, there's not too much that, at least for now, is visible on the screen. Between 24,400 as well as 25,000, all levels currently seeing limited open interest action. But stocks is where consistently we've been highlighting some action. Like NMDC, like SAIL and Bajaj Holdings, all of those counters were in focus on decent change in open interest. For the losers though, you did see some action also on Nippon Life as well as Shree Cement, both Shree Cement seeing short covering, but again the open interest just collapses here as well. But overall, two big key events that we'll be watching out for, and that you also should watch out for: the Nvidia earnings coming tomorrow, and that will be a reaction that I'll see on the markets. The Jackson Hole Symposium could have some impact, but right now, as August stands, there's not been too much action on the index. Hopefully, these events get some rigor back into the markets.
We look forward to your report on the Nvidia numbers tomorrow as well, Puneet. All right, stocks this morning that are on my radar. I'm starting off with Varun Beverages. And this is actually interesting news and exciting news perhaps for the company. They've incorporated a new subsidiary for alcoholic beverages. The board has approved the incorporation of a company called Kiva Spirits and Company. That's a wholly owned subsidiary. What will this company do? They will undertake the business of ready-to-drink alcohol beverages and allied products in India. They've had a new appointment as well, Mr. Prathamesh Mishra as the CEO and Managing Director, who brings over 30 years of experience in the space and has had leadership roles at Diageo, India, Korea and Japan, and Pernod Ricard as well. Why is it interesting? It shows that Varun Beverages intends to build capabilities in the alcobev segment The new growth vector expands their total addressable market beyond non-alcoholic beverages. And this creates an incremental long-term growth optionality for the company. Scaling the business will, of course, require navigating a complex regulatory environment. A lot of brokerage notes this morning, just giving you a précis of some of them. It says Varun Beverages is bigger even in terms of revenue, profit pie, competition, and will get tough for existing Alco-Bev companies. It expands international footprint with a Tunisia joint venture as well. And that, of course, is a joint venture focused on production and distribution of carbonated drinks. So a lot happening with Varun Beverages. Watch out for that stock. Cipla is the other one. And, this is a story that we first reported on the 21st of this month. It's now been confirmed by the company. The US FDA has completed re-inspection at the Pithampur plant. The inspection was conducted from 17th to 25th August, and the company has received 7 observations in Form 483. We talked about the ongoing US FDA inspection on 21st August. That's when NDTV Profit had reported it. The re-inspection and observations are now officially confirmed. This plant was already under OAI, that's an official action indicated status. Revenue dependence on Pithampur though has reduced, and the company has shifted significant US supplies to other facilities. But you could see this as a sentimental downtick. Perhaps so, more sentimental than anything else for Honasa as well. Honasa has called off an acquisition they had planned. That's called Fluence. They've called off the proposed acquisition of 58% in Fluence Pharma. That acquisition was because conditions required to complete the deal under the share purchase agreement were not fulfilled. The company has not disclosed which specific conditions were not met. The original deal was announced in June for a value of about 135 crores, and the company, that's Honasa, was to first acquire 58% and then the remaining 42% over the next 5 to 7%. What does this mean? So this was a nutraceuticals acquisition which was going to happen. So Honasa loses that immediate inorganic route, but the company says they remain committed to the strategy and will continue to evaluate the right opportunities, organic and inorganic. So like I said, it's no major hit for them because they didn't end up buying it. It's a decision which has been changed, but you might see a sentimental move one way or the other.
Yeah. Okay, interesting stocks, and I have relatively smaller updates to tell you about. Advait Energy is one of them. It's gotten an order, 135 crore order from the Madhya Pradesh Power Transmission Company, and this is a turnkey contract for design, manufacture, supply of emergency restoration system for a specific type of project, and the order is set to be completed in 18 months. That's it. That's the update. Sai Parenterals is the second one, and this is actually, I think, quite interesting. So pay attention. ARM has renewed the over-the-counter medicine supply agreement with an Australian pharma chain, and that renewal of contract is actually for an extended or expanded product portfolio and a higher agreement value. That agreement value has been projected at 30 million Australian dollar, which is 204 crore over the course of the next 3 years. And along with another order that was renewed earlier in the year, now their total Australian OTC book stands at 1,506 crore rupees in aggregate. It's not just over the next 3 years because one of those is a longer term contract, but it's a sizable book. And what is more interesting is that the volumes for that Australian OTC book are currently sourced from third-party manufacturers by and large. Eventually, that is going to shift to the company with the commissioning of an Adelaide facility and the expansion of Indian capacity. And so it will move from a distribution margin to a manufacturing margin, which should be positive for the financials of the company as well. So keep an eye on Sai Parenterals. It's an interesting one to track. And the last one is actually a Jeffries note on ports. So they're talking about both Adani ports as well as Gujarat Pipavav. They've got a buy call on Adani Ports with a target price of 2160, and they've maintained an underperform with a target price of 131 on Gujarat Pipavav. What they're saying is that there are encouraging signals on concession extension. The economics hold the key in fact, for this pair of stocks. The media reports are suggesting that the Gujarat government intends to rule over port concessions for both Gujarat Pipavav and Adani ports, key ports in that area. Mundra, of course, exists there. Await the final terms of that agreement, though. The article states that extensions will be granted based on the port operator's response to stated tariff slabs and investment commitments. They believe, Jeffries, that this removes a major overhang and lends growth visibility for operators as well. Pipavav, for them specifically, the extension removes the overhang, but it's priced in. For Adani ports, the extensions improve visibility for their key ports. So watch out for this pair. Of course, Adani Ports has gained and then has cooled off from those heady highs earlier in the year. Well, wonder how much upside there is at this point.
Yeah, a steady mover, right? So you kind of believe that it'll likely do very well. But we were talking about block deals and galore, and I'm not even talking about the much spoken about Viyash or Sequent Scientific one block. But look at Grow. Ribbit Capital likely to sell about 1.6% stake at a floor price of 195 rupees per share. So small bit of a discount. It's not a very large stake either, so therefore may not see too much of a reaction on the downside, if at all. But keep an eye out for that one. Certainly keep an eye out for Welspun Corp. I mean, that's the interesting one, simply because one, that it is a slightly higher stake, 2.4. Again, nothing dramatic, but 2.4. But the nature of the sellers, Welspun Investments and Commercials, and the MD and CEO Vipul Mathur too, selling about 2.4% stake at a floor price of 2250. Again, the floor price suggests that they believe that the demand for this is very strong, about 5-6% discount to what it is right now. So nothing too dramatic on the discount side, but the MD CEO selling some stake could be, well, interestingly viewed. So keep an eye out for this one. And on GMR Airports, there is of course news flow, but I'm resting on the Jeffries note to kind of make that point. So Jeffries has of course maintained a buy with a target price of 135, which is fine. But more importantly, the authorities have approved GMR Hyderabad Airports FY27 to 31 tariff order. The aero tariffs of 540 to 630 through FY29 are broadly in line with estimates, maybe higher versus FY25 and 26 levels, or flattish, but also that there is no large bump up, but it is positive. And I think most brokers, in fact 2 or 3 notes out there, and all of them are saying that because of the capex ongoing, the main accrual of this benefit gets delayed to once the capex cycle for GMR is over. So bear that in mind. The stock had gone all the way to 110, 115. In the subsequent correction has come off a little bit as well, trading I believe sub 100. So pricing is not bad. Let's wait and watch if there is a bit of a reaction to this particular piece of news or no. So yep, my top 3.
Yeah, just wanted to highlight the announcement from the Defense Ministry last evening, and I think that's going to be important for a clutch of defense stocks. So the Raksha Mantri approved a transfer of technology of DRDO developed missile systems to Indian defense industry to bolster indigenous manufacturing. Now, on the face of it, very important announcement, but what does it mean for various companies? And this is, of course, some notes out there which are doing this analysis. It's negative for Bharat Dynamics, as this will increase competition and will put pressure on margins. Could be positive for Bharat Electronic entering this domain with private company tie-ups. Apollo Microsystems as well, they have gotten approval some time ago to manufacture 12.7 mm above caliber missiles, ATGMs, torpedoes, rockets, etc. Solar Industries, Adani Defense, Tata Advanced, Bharat Forge have existing tie-ups with Israel's Rafael for subsystems of missiles, and L&T existing tie-up with Europe's MBDA for missile subsystems as well. Nibe manufactures rocket and missile launcher systems, etc. So positive maybe for this clutch of stocks. But we'll take a very short break. Let's pull up the implied before we get into that break. On the other side, of course, Parag Thakkar and Kush Bora join in for their breakdown of what's happening today. We're coming back with a whole host of ideas for you. Stay tuned.
When outcomes matter, you trust accuracy and precision every time. Because cricket ho ya medical care, trust is earned with consistency. Welcome to Lord's Med. Empowering health, touching lives. Accuracy that shows up when it counts the most. State-of-the-art innovation, made in India. Or trust, puri duniya ka. When it comes to medical care, choose Lord's Universe. Precision with care.
Lord's Mark Industries, हमेशा आपके साथ.
We are turning a page in Nepal's political economy. On the bedrock of good governance and bold reforms, we want to accelerate the pace of economic catch-up.
In rapidly changing global landscape, foreign policy must be anchored in strategic clarity and shared prosperity.
Hello, I'm Shashi Tharoor, and beyond statecraft and formal treaties lies the true heart of our partnership, our deeply rooted cultural diplomacy and people-to-people bonds.
I look forward to sharing our vision for industrial cooperation at NDTV World a week share.
Seamless trade and strategic cross-border investments are real drivers of modern growth.
Understanding the past and present is the key to unlocking the future in India-Nepal tie.
Join me at NDTV World Anveksha, Ideas Across Border in Kathmandu on August 27th as we explore Nepal's role in changing the world. Don't miss it.
Arunesh Chawla, the DPAM Secretary, speaking exclusively with us on NDTV Profit. How do you see the momentum from here, and what's your reading on the expectations around the Hindustan Copper OFS?
This is in line with Prime Minister's vision of sharing the national wealth with ordinary investors, minority stakeholders and citizens of India. Hindustan Copper, has a good futuristic investment plan. And if you see the market analysts and the feedback, this is a stock which is forecast to go upward.
80,000 crores, Mr. Chawla, is the target. You've already hit 52,000 crores in FY27. Do you expect to comfortably? Very good morning. You're watching India Market Open. Kush Bora, Parag Thakkar in our studios this morning. All right, it's middle of the week, but things are beginning to perk up. Kush has a TGIF smile today.
And both of them have midweek blues.
And today market should be in blue.
Yeah.
Because oil is down, US 10-year is good.
Yeah.
Oil is 85.3. So I would say that good day.
Good day. Good
Hope
day.
it is a good day for markets.
Okay, so what do we do on this good day, Kush?
Yeah, so how about we spend a minute or two on CAS, what happened yesterday? है ना? I think
interesting that.
काफी interesting that this was the first monthly expiry that we saw in CAS, and while you can't attribute the entire up move on CAS, because if you see from 115, 130 onwards, the market actually made a bottom and then had started to move up. There was definitely an uptick in the CAS a settlement as well. This is turning out to be a bit of a trend. Now, as the saying goes, if you can't beat them, see how you can make profit out of them, right? So let me see if I will monitor this for the next couple of weekly expiries, and if it turns out, then possibly trades also on this. But like I said, this is a little too early and preemptive, but it's still turning out to be a trend. So definitely something to keep an eye out on. Now, as far as indices go, sadly nothing new to report, right, except for the fact that you're looking at an 80-90 point kind of an uptick because of crude and yield coming down. We're still in that range of 24,400 to 24,000 on the Nifty, 57,000, 57,500 on the Bank Nifty. Bias mildly positive on Bank Nifty continues despite it underperforming the Nifty for the last two sessions or so. But like I said, there is definitely strength in some of the heavyweights because they're very close to support zones, missing an uptick. So remain constructive on Bank Nifty a little more. Nifty, if it crosses 24,450, 24,500, that's when you start to turn constructive. Up until then, it's just a range play.
Okay. And what about stocks today?
Yeah, a mix of large cap plus some chemical names, by the way, come to the party. Larsen and Toubro. Remember, we had spoken a couple of days ago that if you want to look at a heavyweight, Reliance HDFC Bank, despite the promise not doing much,
Larsen is, right? So it's given you a breakout above that 4100 mark. I think this also has to do with the expiry play, because you know the 4100 call option had serious congestion. That overhang now goes away. So yes, you've seen a closing above that. The near-term trend for this one is starting to turn positive. That's when you want to get in. 40 to 25, 4350. These are your targets. 4000 is where you keep that stop loss. The other two names, IOL, CP. This one too. Very healthy uptick on the verge of a cup and handle formation breakout. So maybe slightly preemptive. 175 is that level, by the way, but the volume action fairly healthy. So 177, 182, these are your targets. 167 is where you keep that stop loss. And the other one is Vishnu Chemicals. Here too, you've seen a good run in the last 15-20 odd sessions. Key averages being taken out, accumulation seen over the last few sessions. So 657, 680, these are your targets. 617 is where you keep that stop loss.
Just on the point of Larsen and Toubro, it's making it to your list after quite a while. Parag bhai, on the fundamentals, this is a company we haven't spoken about in the recent past at least, and there are quite a few very large orders that it has gotten. But see, ultimately it's not really the size of the order book that has ever been a concern. It's about external factors, it's about execution of that massive order book. What do you think about that aspect along with the valuation picture?
No, I would say that, see, first of all, L&T is a big beneficiary if there is a cool off in the West Asia war conflict. Second, the amount of orders that they are getting in last, I would say 10 to 15 days, I think they can easily overshoot their order inflow guidance. And so structurally, I am also very positive on L&T.
Valuations?
Valuations wise, see, 23, 24 times for its standalone business, if you exclude subsidiary valuation of IT and all, it's okay. You know, there are some capital good stocks which are trading in some other orbit only. Compared to that, L&T is, and see now L&T is getting orders from various segments, new segments also, data center. Yesterday they got order from BESS segment in Middle East.
Any thinking of what that would do to the blended margins?
Yeah, so that needs to be seen. That needs to be, we need to have that guidance from management, because all these businesses, as you rightly said, order books are there, execution will happen, but margins will have to see. And optically, margins will be lesser in Middle East contracts, but ROCs will be higher because receivables are coming faster.
Yeah, so there's some estimates that just in August they've got 50,000 crore worth of orders only from Middle East.
Middle East, yeah.
And now that you have the diplomats going back, the US is sending its diplomats back. It means they're finding it safe enough, and these countries will start reconstructing.
Absolutely. So it's a huge opportunity for L&T.
Yeah, the good part also was that through that conflict as well, L&T consistently said that they are not seeing any major delays in any of the sites too. So
correct.
I mean, that is one good thing.
Comes through now.
Yeah, true. But you know, just in addition to that, Parag bhai, therefore L&T is one, but some of the smaller ones, we were speaking to Seagal yesterday, there is the PSP projects and Simplex infrastructure and a clutch of those, which are all talking about order books burgeoning and they having the capacities to execute. Do you like the road construction or the infra companies? They traditionally have had low ROCs, low margins, etc. But can a large order book and higher execution mean higher profits and therefore more fortunes?
So as I keep saying, you know, we have seen NCC promoters also buying, which is also a good signal. In my view, this particular space will do well, and heads off to government, I would say, so thumping the table buy for India in terms of what we are doing. Yeah, we have navigated
thumping
this
the table buy for
India.
Okay.
We have how we have navigated through this crisis. You know, energy crisis, oil going up so much, and rupee depreciating. You know how. Disinvestments are also happening every day. 3,000 crore, 4,000
we spoke to
crore.
the disinvestment.
So up till now, I think 54,000 crore done.
Yeah.
Including LIC 31,500. Yesterday, Hindustan Copper 3,000.
3.4 times.
Yeah. So I would say that intelligently handled economy. We have not increased petrol, diesel prices too much. We have not burdened our consumers too much. RBI has not increased interest rate yet. Of course, they can increase in October or in the following policies, but I would say that the way we have managed it is fantastic in my view.
So what is so you're saying thumping the table buy on India? What is that India portfolio looking like? It can't be the 5,000 stocks.
No, I think, see, I'll tell you, first of all, one thing which I would like to make it very clear to these international investors who are selling India or hedge funds who are selling India. See, look, if you see oil at 91, if you see rupee weakening, you short India's banks or whatever you want to do, you do. Okay, but India has managed it beautifully, superbly in my view. If you ask any banks, yesterday Axis Bank interview came, credit growth is booming, asset quality is superb, ROAs are good. The only thing worry is NIM, and NIM can remain under pressure optically for some time because the banks will take some time to deploy this FCNRB money which is going to come in.
But Parag bhai, okay.
So what is the message?
Yeah.
So my message is that you should not short India right now. Message is you should buy India out.
Okay.
And especially
I thought
banks,
we'll get some
dialogue. Dialogue is short mat karo. Well, see, and valuation, like for example, SBI at one time book, Axis at 1.4, ICICI at 2. Valuations are also good. Credit growth is 18%.
Basically, आप कह रहे हो कि short करने की कोई मतलब नहीं है.
कोई मतलब नहीं है. LNT, for example, firing on all cylinders in terms of order book.
Yeah, but they're not restricted to India. No? Their heart does not bleed
Let
blue.
them do whatever.
They can see what other countries are doing, emerging markets are doing.
That is okay. Let them enjoy that party. They will come to here for sure. The way government, RBI and the corporates have managed this entire crisis situation is fantastic.
Yeah.
Mere Karan Arjun.
Good line. That is a good dialogue. I like it.
Thank you.
Okay. All right. Want to get your take on Varun Beverages, Parag bhai, because I thought that was an interesting announcement, and we have some brokerages on it, and we can pull up some of those over his commentary. But it's very exciting space, but highly regulated. Jab dekho, every state government will come in with its own rules, taxations, etc., etc.
But the total addressable market expands for Varun Beverages, right? And last time when they had this contract with Pepsi, where Pepsi exclusivity is not there, right? They can now do other things also. And plus Pepsi's contract is now extended till 2049. So I think it has a long runway for growth, this company, and it trades at 40 times only, not very expensive. Stock has also corrected nicely. I think the stock has a great potential. Even if you do FY28 EPS of say 13 rupees and apply just 40 times, it is 520 rupees stock.
Yeah, just clarity, I'm not 100% sure here, but ready to drink alcoholic beverages can be picked up off the shelf, right?
Yes.
Yeah, that's what it seems like. Basically,
it is not
pre-mixed ones.
Yeah, exactly. It's not off a liquor store, right? You can pick it up off the shelf at supermarkets, etc.
But that's not in this country.
In India,
not in India.
You can't do that.
It's still regulated.
You have to check this because
I'm asking. I don't know.
No, not in India.
You can't.
You still have to pick it up from
when you've seen that when you go outside the country, in some places you can. Right now, these premixes would also be sold at a liquor store.
So therefore, still regulated.
And the hiring that they've done, Prathamesh Mishra, who is of Diageo India, Japan, Korea, Pernod Ricard. So I think the hiring is also phenomenal. I would say.
This is 100% because even if you go to certain stores where you see groceries, you'll see a separate section.
Exactly.
This is your high-end store.
Like a Nature's Basket or something like that.
Which would have your wine cellar, etc., etc. Yeah, so highly regulated, no doubt about it. On charts, Varun Beverages?
It's not as exciting just yet because there was definitely a recovery that was underway, but that got sold into and quite spectacularly. So I would rather wait. I would rather wait on this one. There are some key headwinds or technical levels. For example, the biggest one at the 200-day moving average and the 50-day convergence of 470. So you might want to avoid this for now from a momentum perspective for sure. Risk reward ratio favorable, yes, but like I said, because there isn't enough momentum, why play this at the current at the current level?
Fair call. But remember, again, a well-priced FMCG name, so fundamental purists might actually like it. I wonder, Parag bhai, Tamanna highlighted it, but I don't know if we spoke to you about this, the transfer of technology of DRDO developed missile systems to Indian defense industry. Now, the presumption is, and the brokerage notes seem to suggest that this will be a big one for various Indian defense names. And I think the names that the brokerage had given were Apollo Micro, BEL, etc., maybe a Solar, maybe a few others. Is this good enough to activate you to invest into a defense name?
So BEL is the name which I have already invested in. Others I looked into it because valuations are sometimes very expensive in this. Stocks run ahead of fundamentals, and there is too much of lumpiness in the quarterly results. That much of lumpiness actually I cannot handle.
Okay.
I'm used to seeing a compounding.
Yeah, but that's not the kind of business where you will have it.
But then your multiple should be lower. That is my point.
Or you're saying okay.
If the results are so lumpy, see, one is the technology moat. Okay, if some of these companies will have, for example, Apollo Microsystem or whatever names are mentioned, you have to give some premium to that technology moat, because these are not easy products to make. These are complex products, and regulatory, for just getting through all the entire regulatory requirements to supply to defense, you need 2 to 3 years.
So this is a strong argument, Parag Bhai. I'm just wondering whether this is again another growth versus value kind of an argument to say that. I was speaking to somebody yesterday, for example, and his argument was that the tendency is for most people to look at 2 years out and to look at forward multiples on the basis of 2 years out. But what if I want to hold the company for the next 4 to 5 years? If I extrapolate the earnings, and I'm fairly confident that the earnings trajectory
will come,
and the durability of that earnings will be there for 4 or 5 years, why not buy it now?
No. So I'm also of the view that if that kind of opportunity is available at a lower market cap, so it will not be right to see the PE multiples here, because most of the earnings are going to come later.
Okay.
So you will have to see market caps. So if the market cap is cheap and the technological expertise of the company and the moat is very good, then you should buy. But you should have understanding of the business.
Okay. I mean, so I don't know if you're going to have multiples of these businesses look sane in a time when the world is so trigger happy and aggressive. So that is something that you're going to have to figure out for yourself. But Soumya Sarkar joining in with all the chatter this morning, telling us what he's heard on the street. Soumya, good morning.
Good morning. A host of stocks that remain in focus. Firstly, 3 names that dealers have highlighted. It's Bharat Electronics, PB Fintech and Shriram Finance. Dealers indicate that there are buy flows on the DI desk in all these 3 counters, and delivery volumes are also seen on the higher side. On the flip side, when it comes to Reliance Industries and Tata Steel, there are sell flows on the institutional desk. Both foreign and domestic institutions have been selling this counter, and apart from that, if you look at Mankind Pharma and Shadowfax are 2 counters where dealers are saying that the last leg of selling is ongoing in both these counters, and the stock should rebound from the current levels, because they're expecting the selling to get over for Mankind Pharma and Shadowfax. When it comes to Imami and Ikra, there's a buzz of a potential buyback that could be announced in both these names. And lastly, when it comes to Northern Arc, there's a buzz of a potential block deal that could come in very soon when it comes to Northern Arc. And lastly, we spoke about Gujarat Themis yesterday, where we did mention that a QIP is likely to open, and today the company has announced that they are looking to raise funds around 400 crore rupees. The QIP has opened. Around 400 crore is what the company is looking to raise via QIP.
Okay. Fundraisers in the offing. Thank you for that, Soumya. Another duo of stocks that I want to talk about is Federal and Jana Bank, and clarifications came from both. We have some brokerage calls also on what this deal could potentially mean. So those clarifications were interesting, because they didn't say that no, we're not talking to each other. They didn't say we are talking to each other. They said, it essentially said we have nothing to report right now. So here's how Citibank looks at the developments and the news reports. They've maintained a neutral with a target of 360 rupees. They're saying Federal Bank and Jana clarified no material event or information that requires disclosure, though stated it evaluates various opportunities in the ordinary course of business. So this is standard boilerplate legal statements which came through. But what they go on to say is that Jana can potentially accrete 14% to Federal Bank's advances, 11% to deposits. Meaningful fund cost arbitrage is also available. Granular, high-yielding PSL, compliant, secured franchise complements, potentially offers bank geographic reach into under-penetrated markets. The stock reacted negatively as market perceives risks in any such transaction. And you saw that actually at both ends, but more so for Federal. So is it a good idea for them to talk to each other or not? Is this a good idea for Federal or not?
So basically, see, when Mr. Manian came in, he clearly said that they are looking at lending to high yielding segments and which are priority sector lending compliant, right? PSLC. So this fits, Jana fits into that particular thing. You know, where you have a PSLC compliant loan book, granular loan book, and a high yielding loan book. So I don't think that it makes it doesn't make sense for Federal Bank. Plus now Jana is.
So it doesn't not make sense. So it makes sense for Federal Bank.
It makes, based on what they have stated publicly, that what their goal is to have a granular high yielding loan segment which is PSLC compliant. So it fits into that particular category. Jana, and now Jana is also backed by TVS Group, right? TVS Motors has invested. I think promoters also have invested. So, and Jana promoters had some issue in between also been discussed, right? They have 17% stake which they will like to sell. So, in all probability, I am just assigning probability. I am not knowing anything, but this deal can happen in my view.
This deal can happen, should happen.
Can happen, but should happen. I don't know.
But it's good for both.
It can happen, but should it?
I think
that's exactly the question. It can happen, but should it?
Yeah, it can. It serves the purpose. But right now, I don't own Federal Bank for sure, and I don't own Jana also. So it is just outside view, external view.
Okay. All right. Let's talk a bit about Persistent Systems. Persistent Systems has been one of the best performing mid-cap IT stocks, backed by strong growth, record deal wins, and solid execution. But with valuations now at the top of the sector, the key question is whether the premium can sustain. This is our For Your Profit piece this morning that Puneet is bringing to you.
Well, thank you for that. As you know, we've seen Persistent has been in focus, of course, with post Q1 earnings as well. Stock has also rallied substantially in Q2 post the lows what we've seen in July. But there are some key aspects that you have to watch. Now, the first aspect that it's now becomes the most expensive IT stock in terms of valuation that we've seen has also turned positive on a one-year basis. But overall, the large cap players, of course, trading at a substantial discount, but it is also expensive now compared to its nearest peer, which is Coforge. Now, why has Persistent outperformed is also the other key question, because you've seen Q1 growth come through. There was disappointment after Q1, as well as after the Nagarro acquisition, that because it was on a lower margin profile compared to its existing margins, and hence that was the backdrop and the context. But despite that, all of that now in the rearview mirror, you've actually seen some buying come through. Constant currency growth was also decent while for Q1, but I think the Nagarro acquisition took some steam out of the stock price. Since then, as we've seen buying in the larger IT pack, seen some buying come through on Persistent as well. Point number 3 has been that deal wins have been quite strong in this one, but Nagarro acquisition will be something to watch, and how that integrates over the next few quarters will be the key one. But the bigger question, if this premium can survive at this point of time, because the AI investments as well as the wage hikes are some of the other factors that could impact margins. So will this acquisition, and brokerages have now remained divided actually on Persistent. Earlier it was a clear winner in that sense along with Coforge, but now brokerages are looking at the other IT players too, and hence I want to come to the valuation race too, because we've seen over the last couple of weeks multiple brokerages coming in and preferring names like Hexaware, Emphasis amongst others. So you are seeing a lot of valuation comfort here as you look at the current PE as well as the 12-month forward PE, and this difference is leading to a lot of value buying coming into these names as well. Finally, for analyst recommendation, also you're seeing a similar trend play out as we're seeing on valuations, that Coforge continues to be the bellwether of buy ratings with upside as well from the current market price. But you are seeing some more positive buying visible on Emphasis as well as on Hexaware and LTM. So Persistent, while has done well, the Nagarro acquisition has put some question mark on the valuation premium if that sustains, and certainly a preference for the other mid-cap IT players at this point of time.
Thanks, Puneet. Thanks for that. But, Persistent valuations have actually come off in 2026 relative to 2025 and 24, right? Used to be northwards of 50 times, if I'm not wrong, and currently must be what? 45 times.
I think it's just that acquisition of Nagarro has put a lot of question mark if that premium is justified for that margin profile, and hence the difference between that and the other mid-cap players is what we are trying to put that as a question, because there's certainly a preference as growth has evaporated for most players. you're looking at the bottom of the barrel as well for these players now.
No, and Puneet, it's a very good point, simply because we've seen a lot of companies struggle with large acquisitions across industries, right? It's not unique to any particular industry, but acquisitions, if they turn successful, it's great, but otherwise there is a question mark. So it's a valid point, Paragwai. It's been the bellwether, if you will, in terms of returns for investors in the mid-cap IT space.
The way they have executed is phenomenal, but right now, what as he pointed out, the valuation gap is very high, very high. For example, if you see on 1 year forward basis, Hexaware is 20 times, Emphasis is 20 times, on Persistent on 1 year forward basis will be also 38, 39 times.
It's always been that way. Right?
Yeah, that way it is there, but when you are in a sector which is not going to grow by leaps and bounds, you have to buy something which is cheap, right, to give you margin of safety.
Yeah. Where is the margin of safety? Where is the growth potential? Both those questions is something that we're talking about this morning. We're taking a very short break, but on the other side, we're getting a lot more. The big brokerage call of the morning. We'll also be speaking to Premier Energies on their business outlook and, of course, your pre-open session. All of that when we come back. Don't go away.
New rules of engagement, ambitions crossing borders, voices refusing to wait their turn. India is chasing gears, faster, bolder, more restless. It doesn't stop. Neither do we. NDTV, when it really matters.
We are turning a page in Nepal's political economy. On the bedrock of good governance and bold reforms, we want to accelerate the pace of economic catch-up.
In rapidly changing global landscape, foreign policy must be anchored in strategic clarity and shared prosperity.
Hello, I'm Shashi Tharoor, and beyond statecraft and formal treaties lies the true heart of our capital, our deeply rooted cultural diplomacy and people-to-people bonds.
I look forward to sharing our vision for industrial cooperation at NDTV World a week share.
Seamless trade and strategic cross-border investments are real drivers of modern growth.
Understanding the past and present is the key to unlocking the future in India-Nepal tie.
Join me at NDTV World Anveksha, Ideas Across Border in Kathmandu on August 27th as we explore Nepal's role in changing the world. Don't miss it.
Welcome to India's biggest grassroots innovation movement.
Vande Bharatam, Bharatam, Vande Bharatam.
हमें ये पूरा रोड मैप क्लियर करके ज्यादा से ज्यादा लोगों तक पहुंचाना।
स्पंदन एक पोर्टेबल ईसीजी मशीन है।
सिर्फ यहाँ पे थेरेपीज डिजाइन की गई है।
If you need any manufacturing help, do reach out and I'm more than happy to get your product to all of them.
हर हफ्ते आइडियाज के असली ग्रासरूट इनोवेटर दिखेंगे वंदे भारतम में। Coming soon on NDTV Profit.
Arunesh Chawla, the DPUM Secretary, speaking exclusively with us on NDTV Profit. How do you see the momentum from here, and what's your reading on the expectations around the Hindustan Copper OFS?
This is
Welcome back. You're watching India Market Open. Interesting data coming through from the Reserve Bank of India on credit cards, and that's where the focus is. It has stayed robust in the month of July, but really the devil lies in the details. And let's find out which banks are leading the pack in credit cards in the month of July and what the data is throwing up, including what brokerages are saying. Sharad joining in to give you some insights on that. Sharad?
Well, yes, HDFC continues to dominate the card issuance, especially on the spend volumes. HDFC Bank has added roughly 2.3 lakh cards on a month-on-month basis. Remember, this is the highest absolute addition amongst the pair. Also, ICICI is gaining share in the cards, but the spend growth, that is coming weak if you compare that on a year-on-year basis. SBI cards have shown the strongest spending momentum going ahead and the highest spending growth at almost 22%. SBI has added almost 1.83 lakh cards on a month-on-month basis. Looking at Axis, It's witnessing slower card growth as relative to the peers, and the spends remain volatile. However, on a month-on-month basis, there is a recovery for ICICI, Kotak, Axis and Bank of Baroda. Weekend spending is there that has witnessed in SBI, and flatter trends coming in HDFC. Bank of Baroda has posted the highest month-on-month credit card growth at 2%, and overall credit card outstandings rose just 1% on a month-on-month basis, and the total card spends have gone up by 3.4% on a month-on-month basis, and on a year-on-year basis it's up 7%. Brokerages, however, have given a mixed cues coming in from Jefferies. They have stated that spending per card has moderated sequentially, so a little bit of concern coming in from there. And Morgan Stanley also has stated that largely the industry trends have been coming down, but some market share gains coming in certain banks as well.
Okay. All right. Thanks so much, Sharad, for that. So overall, not the most attractive set of numbers with regard to growth there. But when you're talking about credit growth, actually the growth is in certain other pockets. Of course, gold loans have existed, and that's where a lot of growth is taking place. But also, Parag bhai, corporate loans, and on the shorter end of the spectrum because of ECLGS as well, that's going to have a bearing on the NIMs as well.
No, so yeah, corporate loans, when they grow faster than retail, there is always a NIM pressure.
Compression.
Yeah. So that is one, and that is why I am saying that for next 1 quarter at least, till this FCNRB money comes in and they till they get deployed, I think NIMs will be the wrong metrics to look at in banks.
Okay.
It will be asset quality, growth and ROA in my view, and of course OPEX, and ROA captures everything. So I would say that, plus I think credit card spend and all, I think will pick up from September, October when festive season starts. Right now they might be muted a bit, but at least there is no big defaults happening, which is creating a scare amongst banks that not to lend in credit cards. At least that I am not hearing.
Okay, the first sticks are in. Let's pull that up and see where the benchmark's starting out. It's just about 0.1% lower. Let's see where that settles. It's already moving higher though at this moment. And there are a few big swings for some of the large entities which will settle down over the course of the pre-open session. A few stocks that stand out among the gainers. Once again, you have Kotak Mahindra Bank that's gaining about 1% or thereabouts. Eternal is up about 1% or so. HDFC Life, Max Health once again gaining ground, and Adani Enterprises up about 0.5%. Again, these are very early rates to see how that settles. Of course, on the other end of the spectrum, you have Cipla, you have Infosys, Mahindra and Mahindra, all trading with cuts of over 1%. So too is Trent. From the broader markets, and really there are a few to speak about. Take a look at Varun Beverages to see what it's doing this morning. That's where significant news flow came through. United Breweries is also acting up in the sense it's moving higher. It's up as much as 7%. Eris Life Sciences, Radico Khaitan. So quite a few of these Alco Bev players are moving higher at the moment. Varun Beverages up about 2.7% as well. Among the losers, you have a few that stand out. Triveni Engineering is starting off lower. So too is Dr. Lal Path and Glenmark Pharmaceuticals. Are you guys seeing anything else?
No, so just the whole Alcobev space is looking very interesting, and I wonder whether this is an opener to the entire ready packaging kind of space that Varun Beverages is entering. Because ideally, if you have a large player coming in, maybe sometimes you have a negative kind of reaction with the others. That's not what we're seeing in this case. If you're looking at the whole Alcobev space, what are you liking, Parag bhai? If I look at UB, Varun Beverages now, and a Radico?
So I think Radico has done phenomenally well over last 3-4 years. Their earning growth was phenomenal. Tilak Nagar is something which has done recently well after that acquisition of Imperial Blue and now I think with Varun Beverages kind of already 3,000 crore profit making company and around 1,50,000 crore market cap entering into this space, I think Varun Beverages looks very, very interesting. Because India's Alcobev market is $50 billion, so it opens up a huge, significant TAM opportunity for Varun Beverages.
We don't have first world problems where the youth are no longer drinking.
Is that true?
It is.
Yeah. Oh, interesting.
It is. They are, you see that in pockets in urban India as well, where, matcha raves are happening.
Yeah,
and,
they're not drinking alcohol. I thought that was the case here in India as well.
No, in the very, very limited circles that, that you're seeing. But overall, in the country, no. That is more, I think, a Western trend which is here in some parts of the country. I want to talk a bit about QSRs. Macquarie has an interesting note out. And they've had a lot of action on some key players. That's all on your screen. Jubilant Food has been upgraded to a neutral from an underperform, and the target price has been hiked to 520 from 375. Big move there. Devyani, they maintained an outperform, but also hiked the target price 130 to 190. Westlife maintained an outperform, hiked the target price to 730 from 520. Sapphire maintained outperform and hiked the target price from 200 to 300. They have a constructive outlook because you're seeing channel checks point to the Q2 same sales store growth ahead of Q1. They see demand recovery over the last 2 quarters. EPS volatility seen from Turkey, that's earnings per share volatility seen from Turkey and India recovery. They see dine-in led demand recovery as well. And the operating leverage will be drawing 20% plus EBITDA CAGR. They prefer Devyani, Sapphire, Westlife. Devyani earnings per share to gain from Pizza Hut. Devyani over Westlife over Jubilant. It's just interesting how this entire space seems to be on recovery mode. I don't know, and you've not even gone into festive season. There's no big match or sporting event when sometimes these things help. But something on ground seems to have changed.
That is what yesterday I was referring to. Out of home thing is picking up. Hotels, QSR, PVRs of the world. I think everywhere there is a bottom clear cut. The worst is behind.
Is QSR an out of home play?
I'm saying generally it was subdued from last 2-3 years, right?
Yeah.
Suddenly you saw a very good same store sales growth from Restaurant Brand Asia, and that has started this wave of the markets have started looking at this space after that Restaurant Brand Asia results. Then Domino's also gave, Jubilant Foods also gave good commentary. So I would say that Devyani has also done well as a stock from I think 114 to 150 now. So I would say that, and see, these are some of the sectors where if you look at market cap perspective, when I looked at the bottom, when Restaurant Brand Asia result was not announced, the entire QSR space in India was available at 60,000 crores. So sometimes it is like that, you have to look at market cap. Market cap became so less that it had to do something, and that Restaurant Brand Asia result triggered the entire thing.
Yeah, very interesting. Thanks, Parabhai, for that insight. Just before we get in, Chandan Tapare and the conversation as well, just want to see that as we come into the close of the pre-open, what are the block deal candidates or companies doing? So Viyash, Welspun Corp, Grow. All of these three should come up on your screen. Viyash Scientific, well, not a very big, it's supposed to happen at 260, 271 currently the price. Grow 1.61%, nothing too dramatic out there either. Welspun Corp, hardly any movement. It is supposed to happen at 2450, about 2.4% block. So 2 or 3 names, 3 names in particular, which have that to themselves. Keep them at the back of your mind. Chandan Taparia, thanks for joining in. And I wondered, Chandan, if you are constructive today because crude prices have fallen and that could lead to maybe some near term. It is a catalyst for some bullishness. Are you initiating longs today or not quite on the indices firstly?
Good morning. Thanks for having me. So, in fact, the data setup are turning positive in Indian market. If I look at the rollover data of last 4 series, this time the Nifty managed to close about 24,000. Otherwise, in the month of April to July, the index was just consolidating and expiry was happening slightly below 24,000. This time the Nifty managed to close about 24,000, precisely at 24,334 marks. Nifty has seen the rollover of 77%. Bank Nifty has seen rollover of 79%. India VIX has corrected from 28 to 11 in last 5 months. And the important part is Nifty mid cap is continuously heading upwards from last 5 months and trading at all-time high. And if I look at the Bank Nifty, that remained in a range of almost 1480 points for most part of the month. And this is the lowest trading range in last 8 months. So I believe that most of the supply is being absorbed in the market. In fact, FIs are also turning slightly positive. with decline in the volatility, which indicate the bullish sentiment. And the good part is many heavyweights counter are witnessing positive rollover. So let's say most of the auto name, few pharma counter, selective mid-bank, real estate counter, most of these stocks are having the positive rollover. So I believe that momentum could extend. Already the index has seen a decent consolidative move in last 4 series. So now with higher base of 23,800 to 24,000, I'm looking for an upside move towards 24,750 and beyond in the Nifty index. Those who are looking for intraday point of view, 24,224 could be the support to extend the move towards 24,450 to 24,500 marks in the Nifty index.
Okay, all right. We'll come back. We'll circle back, Chandan, to get your individual stock picks. But before we do, we've got to get across to Sharad to get the big brokerage call of the day. And that is on Gujarat Energy. And Morgan Stanley has a view. What are they saying, Sharad?
Well, there is a double downgrade happening for this Gujarat Energy. This is formerly called Gujarat Gas. Downgrade coming into underweight from overweight. In the target price, significant undercut from 523 to 246 rupees per share. Higher spot LNG exposure and competition from alternative fuels is the concerns raised by the broking houses, and they prefer refiners going ahead. The downstream assets remain underutilized, and the global LNG market is expected to remain in a very tight range in the second half of calendar year 26. Core business gas retail remains exposed to costlier LNG gas, while alternative fuels are becoming cheaper. That's why some concerns being raised by Morgan Stanley for Gujarat Energy.
Okay, well, Gujarat Energy and certainly some concerns laid out there by Morgan Stanley. Thanks for that, Sharad. Keep an eye out for this one too. Keep an eye out on ideas, and we haven't still managed to get in Chandan's stock recommendations for the morning. So Chandan, in light of the view that you've given on the indices, what are the stocks that you're recommending today?
Yeah, so first it will be buy on TVS Motor.
Okay.
Quite positive on the name. In fact, it has been consolidating from last 12-13 trading session, and before that it really rallied well, and I believe the momentum could continue. In fact, the stock is up by more than 10% in this series. So now the fresh breakout cannot be ruled out. With support of 4320, TVS Motor can head towards a higher zone of 4600 marks. Second trading idea, that is buy on Divislave, one of the strongest counter in the pharma. In fact, rollovers are better, and the counter really rallied well in last 2 months, has been making higher top, higher bottom on the monthly, and on daily it has given a consolidation breakout of last 15 days with a decisive hold above 8550 marks. So one can buy Divislave with support of 8500 for an upside target towards 9100. Last but not least, that is buy on Paytm. I believe the ongoing momentum could continue. Those who are holding can continue to trail. And for fresh buy, one can buy the dip with 1675 as a support for an upside target towards 1800 marks.
Okay. Just going to quickly ask you, Chandan, about some of the movers that we can spot after the pre-open session. One of them is Cyient, because they've had those analyst meets and positive brokerages today. Stock about 1.5% up. Are you liking Cyient on the charts? Are you liking Jubilant? Are you liking Sapphire?
So to comment on Cyient, the counter was making lower top, lower bottom in last 32 months, but finally it bottomed out on weekly and the daily chart. It has given a decisive hold above 950, and now a decisive move beyond 1000. Can see some bargain buying here. So one need to keep in mind that major trend was negative, but short-term trend is bottoming out. So with support of 945, look for an upside target towards 1000, 1020. And talking about Sapphire, some positive bias could be seen here. In fact, we have seen higher tops, higher bottom on the weekly chart. With support of 242, it can head towards 260 kind of levels.
Okay. A few others that we should look at this morning. I want to look at Cochin Shipyard. I want to look at some of the shipping companies, because one other important thing, Mazagon Dock, GRSE included. Yesterday, an announcement by the shipping ministry that India plans to add 100 new vessels over the next 5 years, and as part of their larger plan. Maybe you might not see an instant reaction over there, but Parag Thakkar, because we spoke a little while ago about defense and the lumpiness, etc. And if you want to just put that in context of when there is a policy push and a clear governmental push in one direction, how do you see it? Do you think the story is pretty much priced in for some of these stocks that I've talked about?
No, I would say that, for example, Mazagon and Cochin Shipyard have consolidated a bit, and these are really, I would say, very highly moated businesses. So, I think they are decent buys in my view, from long-term perspective.
Okay.
Mazagon and Cochin.
Kush Bora, Mazagon, Cochin, GRSE.
Nah, you can avoid. Perhaps if at all, if you want to, then Mazgaon is the only one showing any kind of signs of picking up or breaking out from these levels. So if you want to, it's not really a very hard and fast momentum trade.
Speaking of momentum, what's the view on Paytm? Let me go across to Chandan Taparia just to get his sense. We're seeing levels last seen in 2021. Chandan, what's the view on Paytm?
Yeah, so positive on Paytm from last couple of weeks. In fact, looking for next leg of rally. Counter has been making a high top, high bottom, given a decisive breakout on the monthly chart. My only concern is the rollover were lower. Paytm has seen the rollover of 79%, so need to understand what is the reason behind the same. But we have seen massive short covering that we are getting the early sense. So almost I'm looking for an upside rally towards 1775 to 1800 in Paytm. Those who are looking for positional, they can also look for a target towards 1955 to 2000, which is all-time high for the count.
Yeah, 2150.
2,150 was the issue. It was the IPO price. So, I mean, if you've held since then, I'm just great words of wisdom for you is all I could say on Paytm. Varun Beverages, any view very quickly, Chandan?
Yeah, so talking about VBL, the counter has bottomed out, but we need to keep in mind that selective FMCG counter has got stuck in a range. So just looking for a swing as it formed a bottom out process. With support of 435, look for 460.
Support of 435, look for 460 on Varun Beverages is what Chandan is saying. I think Kush doesn't like it as much if I'm not wrong. Parag Thakkar likes it. Keep that in mind. It's one of the newsmakers of the day today. On a day when the markets are actually starting absolutely flat. Let's see if there's a bit of a bump up as we proceed. Banks are doing really well. And the market breadth is looking positive too. I wonder what is sulking. Actually, the Sensex is doing okay. Can we get the Nifty IT on the screen for a moment and just see what that is doing? Well, no reason for the Nifty to be as flat. I'd love to see the constituents here. But very quickly, mid caps and small caps on your screen. Just to see. Mid cap index is 0.21%. Small caps, 0.5%. Very good. Let's get the heat map up on the screen to show you what is actually putting pressure on the indices. Is it... no, I don't see even Reliance in the top 10. Airtel is 0.77% lower. Infosys is 0.7% lower. Those two certainly putting pressure. Max Health, Tata Steel are lightweights per se. So interesting. HDFC Bank marginally in the red or flattish actually. Has to be Infi and Airtel, which is actually essentially doing this. And not too many gainers. But this is a very deceptive start for the Nifty because ICICI Bank is up 1%. And banks are actually doing very well. Despite that, the Nifty is flat. I'd love to see the point contribution, by the way, because Ultratech, Axis, SBI, amongst the others, which are doing okay. Reliance, Infi, Airtel. Those two and Reliance effectively negating the positivity of the banks this morning, but not a bad start for banks. Something that Parag Thakkar mentioned in the morning as well. So, good start. Let's see if we build on from here.
And I would say a bit of a disappointing start, maybe as well, considering the macro factors, right? You have bond yields which have softened, you have oil which has cooled off. You would expect more from the Nifty, and that's what the indication was for the implied open as well. But let me pull up the mid cap and the small cap stocks for you and take a look at what's happening there. About 0.25% up on the mid cap, 150. Small cap 250 is about 0.5% up. Market mood is definitely positive. Look at the advance decline ratio. 1829 advances to 478 declines. The VIX has just pretty much collapsed, 4% down this morning, 4.5% down at 10.57%, as it should be, because tensions seem to be easing quite significantly in the Strait of Hormuz and between US and Iran. Let's pull up the sectoral heat map for you and see what's working this morning. Do you have enough green on the screen? Not really. I mean, metals are seeing a bit of pressure, about 0.5% down. Nifty Healthcare, about 0.39% down. What's working are a clutch of banks and realty, that kind of mix. Very interest rate sensitives, I would say, are in play today. 1.5% up on the Nifty PSU Bank, Nifty Realty Bank are okay. And then you have, again, more financials coming in. I wonder if we can pull up the full Nifty PSU Bank charts and see its constituents as well to see what's really moving there, because we saw ICICI Bank there on top. It's UBI, Indian Bank, all of it doing fairly decently today. Punjab National Bank also doing pretty fine. But I want to go to specific stocks and look at what's happening there. We have defense in focus after that big announcement by Raksha Mantri. about transfer of technology plans, BDL, about 0.27% up. This was supposed to be worst hit as per an Incred note. That's not what's happening. BEL was supposed to be a beneficiary. It's actually 0.68% down. So is Apollo Microsystems. India is planning to add 100 new vessels over the next 5 years. It's a long-term plan, about % up on Cochin shipyard this morning. Varun Beverages, the one with the big news, right? Entering the Alco-Bev space. 0.23% down, actually. Highly regulated sector. So maybe investors waiting and watching what happens next with Varun Beverages. I want to look at Cipla as well. There's an FDA inspection. We had reported this on the 21st. It's now been confirmed. There are 4 observations, 0.86% down. There are a lot of block deals happening. I've picked Grow and Wellspun. And let's look at the impact there. Both down as expected, 3% down on a Billion Brains Garage, and Wellspun about 2% down as well. Gujarat Energy has a double downgrade from Morgan Stanley, but the stock is holding up. I wonder if we can quickly look at Honasa. Maybe not on the AR but on the wall, and see what's happened to Honasa. Of course, crude prices cooling off has been a good thing for HPCL, BPCL and IOC, but Honasa had called off one of its acquisitions, and that's the other one that could be interesting to watch out for, Alex.
Pull up that chart and see what it's doing. Honasa consumer is just about flat, 0.2% higher. A few stocks from the broader markets are in focus, of course. Beyond the newsmakers, you have Ola Electric, that's up about 5%. NetWeb Technologies up about 3.5%. Capri Global as well, gaining ground. Devyani International, we spoke about earlier today. The QSR plays are back in focus, 3% higher. Hindustan Zinc from the metal pack. There was initially buzz about this metal, but then copper ended up being the one where the OFS came through in. The stock is up as much as 3% at this moment. So is Cyient, by the way. We will talk about Cyient in some more detail. The stock is up close to 3% at this point, 2.8% higher. Among stocks that are losing a little bit of ground, you have Graphite India, so too Shriram Finance, that's down about 2% or so. Wellspun Corp was where there was a block deal. The stock is down about 2.2% at this moment right now. HEG as well, the other graphite electrode manufacturer, is down about 1.8% or thereabouts. So the question though has to do with the benchmark and how you would read this right now, Kush, because if I look at the close from 315 yesterday and the last tick, we're still about 50 points higher. So you would take that, wouldn't you?
Yeah, but are we really surprised? I mean, look at Nifty, it's consolidating flat right now. Bank Nifty is up. I think what happened in the last 2 days with it underperforming, versus the Nifty was largely to do with expiry. There were call option congestions for SBI, ICICI, even HDFC Bank for that matter. And lo and behold, right, ICICI Bank and SBI, these are the two where you've got that big up move. Imagine if HDFC Bank joins the party. So I still remain very constructive. Immediate resistance at 57,900, 58,000. Broader one at 58,500. Once that is taken out, I think Bank Nifty is on course for 60,000 and higher levels also. But let's take each day as it comes. So for now, I remain constructive. If that's the view on Bank Nifty and IT even consolidating, I don't think there'll be a big downside on the Nifty. So 24,000, 24,150, that support zone still remains very much intact. Just a quick word on a stock. IOL CP we discussed. Abhi hi run up sorry, you want to?
No, finish.
So IOL CP is actually run up already quite a bit, so I don't think anyone got it. But if you did, I think it's a good idea to book it out partially. And the other update is on Timex, the weekly pick this Monday that we discussed. From that price, approximately 5% up, target one closely hit. So yeah, you can book profits partially and then hold the rest for the second target of 660.
Okay, pull up Sapphire Foods, because the stock was buzzing, but then it's cooled off just a tad bit from what I can see on the charts from that opening level. Okay, it's still up about 2% or so. Chandan, I believe this was one of your picks. Do you want to revisit this? How far away are the targets?
Yeah, so I can discuss about Sapphire. But apart from that, a couple of more stocks are on radar. But as of now, first to comment on this, I believe the support-based buying could continue. It has been making a high top, high bottom. Those who have took for intraday can trail the position. As of now, the upside is intact. Now I'm looking for 260 to 265 kind of level in the counter. And just to add one more thing, recommended Divis Lab in the morning tick, and selective pharma counters are doing well. So Divis Lab has given a major breakout on the daily, weekly chart, and momentum is intact. So here one can look, already we have given a target of 9100. Those who are holding can trail for next leg of rally in the counter.
Yeah, very interesting, because the numbers have also become positive for divis in at least the last quarter and even earlier. So from being a silent participant while watching some of the other CDMO players rise, Parag bhai, divis has come of age, right? Is it now worth investing at the current levels, valuations in divis?
Company just continues to do so well that every time you look at valuations, it will go wrong. So it is a phenomenal company. Continues to do very well. So I would not like to comment on say that this is expensive, because it just keeps performing, and in a sector which is very promising, where you have long-term orders. We have got 35-40% margins. So I would say that. Not easy to replicate business. So this as I've always said, this kind of business actually deserves high valuations.
Yep, certainly doing well, divis, for the time being. As we said, Cyient, Persistent, and some of the others, and those names also in focus, and QSR names in focus too. But if you have to leave us with a key trade, Kushbora, what would that one key trade be now that 10 minutes have passed on open?
I'm so glad you came, to me for this question. So this segment that we discussed, L&T, Seagull, NCC. NCC is setting up so beautifully from a technical lens that you might actually get as much as about 25 to 30% kind of an upside on this name. Risk reward ratio massively favorable. At least 1.25 to 1.3. 15-20 रुपए का stop loss रखो. यहाँ पे 50-60 रुपए का uptick है. If you want to make a positional bet, of course, a couple of days of follow-through moves will be very, very essential on this one. But like I said, it's actually broken a long-term falling trend line resistance, accumulations seen, momentum picking up. So it's got a few things going for it. So if you want to take that positional bet, 3 to 6 months kind of out, with a stop loss at 125, levels, you can actually consider NCC as a positional bet. Something on my radar for sure.
Let's talk about Cyient. Let's pull those lines up as well, because that is turning out to be the stock of the morning. That investor call was seen, I think it came during closing. Here's what Morgan Stanley is saying on it. They have maintained an underweight with a target of 820 rupees, and they go on to say execution remains key to medium-term aspirations. The company laid out plans for increasing annuity-based revenue. Benefits of such changes, however, could be more medium-term. JP Morgan, on the other side, has an overweight with a target of 1,050. They're saying the company is driving predictable and profitable growth. Strategic focus has yielded some success, but more needs to be done. FY27 will be year of transformation, and FY28 the year to scale. Medium to long-term goals, industry-leading growth with 16% plus margin. So this is what they did in their investor day. If you're wondering what the core news is, they laid out a 3-year roadmap. They've expanded their total addressable market to $2.4 to $3.2 trillion. And they've said the DET EBIT margin will be rising to 13.2% in the first quarter of FY27. The company targets around 15% margin by FY28. FY27 focus shifts from stabilization to transformation, and the FY28 roadmap centers on scaling up. They are targeting a 15% plus EBIT margin through FY28 to 29. Order intake growth targeted in double digits. Revenue growth expected to outpace industry peers. Their FY31 target is 16%, and the company aims for industry-leading growth by FY31 as far as margins are concerned. Now, it's not unusual for managements to come and put out those goals.
Aspiration.
The story always is if it's believed or not. In this case, it seems that it is being taken at face value, Parag bhai.
Yeah, I would say so. And see, the entire intent of industry-leading growth with 16% margin and building up more on the annuity side of the business, the aspirations are very good. But as I said, this name has not demonstrated that kind of execution. So we need to give it some time, in my view.
Yeah, you could argue that that's true, but great start today. I wonder, I don't know if Chandan is there with us or no, but Chandan, if you're there, I wonder if Cyient or some of the related names look interesting, because Cyient has clearly started off very, very well.
Yeah, so we discussed about Cyient in the morning that the major trend was negative, but the short term it has bottomed out, and because of that bargain buying is likely to see in the counter. It continues positive momentum for third, fourth consecutive weeks. I believe the ongoing swing could continue. Those who are holding or want to take can buy small dip with support of 995, and I believe this time it can attempt towards 1060 to 1085.
Okay. Okay, all right. Just a couple of other stocks as well. Sagility stands out. Let's very quickly take a view from Kush on this one. The stock is at 45 at this moment, but up as much as 6%. Is there upside?
I also want to add something, by the way, completely non-related with banks. Banks are really rolling off the charts.
Yes.
So Sagility and banks, Kush Bora.
Hands down, banks, I'm very, very confident on. The only thing is HDFC Bank. Kuch to kara do iska, barabar. If that participates, I think you're going to see a big bump up in Bank Nifty. The rest of the pack is actually on a good footing. Sagility very constructive. I've been getting questions on this on Ask Profit very regularly. Good to see that it's moved up from those 35, 38 levels to 45. I think further upsides on Sagility very likely. And Alex, I'll also add one more stock that I think you mentioned, NetWeb Tech. This is also a buy on declines, positional stop somewhere near 4900 or thereabouts. But this one also on a very strong footing. So banks strong, Sagility also shaping up well, and NetWeb Tech buy on declines.
Okay, Jamin, all of you, thank you so much for taking the time out and being with us. Really appreciate your time this morning. Now, we talked to a premier company in the
premium space,
renewable energy space. Let's put it that way. Premier Energies stepping up capacity expansion, new module plant operational, TOPCon cell plant nearing commercial launch. So lots happening. To discuss the expansion plans, we'll be joined by Vinay Rastagi, who's the Chief Business Officer at Premier Energies. But before that, Varsha joins in to set up the conversation. Varsha.
Well, as you rightly said, a lot of things, working in favor of the company. Let's start with their capacity expansion plans, where, the new 5.6 gigawatt module plant is now operational, and their new 7 gigawatt TOPCon cell plant is nearing commercial launch. Now, if the first revenue from new cell plant is expected in September, and the total order book, if you see, stands around 15,000 odd crore. Now, transformer business is their next leg of growth, I would say, where management is expecting this business to triple in next 3 years and to stay above, the margins are expected to stay above industry average. Talking about the battery energy storage system, well, they're planning 12 gigawatt battery storage manufacturing capacity. Land acquired and construction has been started. Talking about margins, so they're maintaining 29 to 30% of EBITDA margin guidance. Transformer business mix will actually aid margins. Lastly, onto the global expansion plans, well, US cell manufacturing JV is under development, and US plant could take almost 24 to 30 months. So a lot of segments playing out in this company, especially the transformer business, which is the next leg of growth.
Yep, thanks for that, Varsha. And as we said, Vinay Rustagi joins in, Chief Business Officer, Premier Energies. Vinay, great having you as always. Thanks so much for taking the time out. This is Neeraj here. Good morning. Just before I get to the capex and other aspects, just one top-down view, Vinay. Almost every analyst that we speak to tracks renewable energy as a space. It could be wind, solar, a combination of other things, including BESS, etc., that they are doing, that companies are doing, including you. Now says that the growth rates of the past 5 years and the margins that were enjoyed might not get repeated over the next 5. So companies which are agile enough to add pieces might be able to show slightly better growth than a lot of others. But the growth rates of the last 5 years are a thing of the past. Would you concur, or would you believe that you, maybe some of your peers, but you in particular, are adding dimensions to ensure that the growth rates stay?
Sure. Good morning, Neeraj. Thank you for having me. So, I think if you look at the sector on the whole, about 5 years ago, we were growing at adding about 10 gigawatts of solar capacity. Today, we are adding about 55 to 60 gigawatts in DC term. So we have come a very, very long way. The sector has grown extremely rapidly. Going forward, I agree with you that there is more maturity in the sector, and we expect a more moderate pace of growth at about 10 to 15% over the next 5 years. Having said that, as a company, as your story also mentioned, we are not just relying on growth in the domestic solar market. We are adding new capacities, new capabilities in terms of transformers, batteries, and EPC services. We're also looking at international market growth. So as a company, we definitely expect to be growing at a much faster pace than the industry average. Second thing you touched upon, the margins. Again, I would broadly agree with you that at the industry level, with more maturity coming in, with more competition and more players coming in, margins will moderate. But then again, in terms of in favor of our company, I would say that we are today one of the largest cell manufacturers in India. Our 7 gigawatt line will be the largest such single line in India. We will be the most integrated player in India, and in 2 years' time, we will be making ingots and wafers. So this large capacities in the upstream space, which is where the margin comes from, will help us, we believe, in maintaining our margins and industry leadership.
So Vinay, excuse me, you saying that the last 8-9 quarters or 7-8 quarters that you've actually notched that 30% mark, you might well be able to continue to keep that for the foreseeable future. How long? Maybe the next 6 to 8 quarters, 30% could still be realistic as a margin number?
See, I think, in the short run, there could always be, 1 or 2 periods where the margins, go up or down a little bit. But like I said, because of the backward integration, particularly into ingots and wafers, over the next 2 years, and the cell line coming in, the new cell line coming operational from next month onwards, we are very confident that even over a period of, I would say, 3, 4, 5 years, we can protect our margins and maintain the current trajectory.
Vinay, hi, Alex here. This next 2 years where you have this build out and you're building backward integration, obviously this is well described in the way of capex, but I'm just wondering what the implications would be for your ROCE, and once that backward integration does take place after that 2 years, so therefore we're talking about 29, what is the level that you think that you will be able to achieve, and how long will you be able to keep it that way?
Yeah, sure, Alex. So, if you look at last year's results, we reported an ROCE of more than 30%. I think it was about 32%. As we integrate backwards, it is natural that the ROCE will come down because some of these industry investments, both in cells as well as ingot and wafer, are extremely capital intensive, and it is natural for ROCEs to come down. I can't give you any kind of guidance, but what I will say is that as an industry, we believe that a 25% return on capital employed is the minimum threshold for a business to be sustainable and profitable on an ongoing basis. Because you have to undertake repetitive capex to upgrade technologies and integrate backwards and to expand capacities, etc. So that is what we are targeting, I would say, in the long run.
Okay. And if I were to ask you about the projection on revenues for FY27 heading into 28, because purely on the back, Vinay, of the order wins that you've had in the first quarter, which stand at what, 3,000 plus crore rupees, and maybe you can give us a sense of how things stand right now, because we're pretty far in to the second quarter as well. But your order book at that point was standing at around 15,000 crore rupees. Quite a chunk of that will be executed over the course of this year and next year. So what are the kind of projections that you have in mind with respect to the revenue?
Sure. So in terms of the order intake has been very healthy even after the end of the last quarter. In terms of revenue, expected revenue for the year, again, I can't give you any specific number, but if you look at the first quarter, we did about 2.5 thousand crores. So that is a run rate of 10,000 plus. And with new cell and module capacities coming in, over the next few quarters, we expect a growth on a quarter-on-quarter basis. If you look at consensus estimates for us, most analysts are projecting revenues of between 12 to 13,000 crore rupees for the year, which will be almost 50% over FY26. I think we will end up somewhere in the same territory, is what I can say right now.
Interesting. And once that backward integration takes place, you're heading into a new trajectory. Vinay, would it be safe to assume that?
Yes, I mean, definitely. I think we are very, very excited about growth because of growing capacities, increasing vertical integration, and adding new portfolio, adding products to our portfolio, including battery storage, transformers, etc. So yes, I think the business is undergoing transformation. Not just in terms of operations, but in terms of the day-to-day execution, the financial structure of the company, etc. So, lots of things to look forward to as far as the company is concerned.
Got it. Okay. So, decent showing, if you will. I love the confidence, Vinay, and wishing you all the best for that and more. Just one quick question before we round off. Any equity raise in the near term? I asked this to you last time as well, if I'm not wrong. Any equity raise in the near term?
Yeah, sure. My answer remains the same.
Remains the same.
We have been pretty transparent with the market. That entire capex program is fully funded. We have a very healthy balance sheet with enough liquidity, and our total debt to equity is less than 1. Our credit rating is A+. So as things stand, there is no plan to raise any more capital. We have taken an enabling resolution, which is just designed to give us flexibility in case we have any further growth opportunities that we want to capture and leverage on.
Got it. Okay, Vinay, on that note, thanks so much for taking the time, speaking to us. Wish you all the best for the rest of FY27.
Thank you so much. All the best. Thank you.
Very interesting and quite confident. 50% revenue growth and capex building towards backward integration in 2 years' time.
Yeah. This cohort of companies has just become very exciting for the market, which is looking for the new, which is looking for the alpha. Axis Max Life also in focus. It's entered the spotlight after receiving major regulatory relief, with SEBI dropping proceedings against Max Financial, Max Life, and Axis Group entities and imposing no penalties. This comes alongside a strong first quarter performance marked by healthy APE growth, improving margins, and robust traction across annuity, protection, and partnership businesses. Amrit Singh, Director and Chief Financial Officer, Axis Max Life, joining us this morning on India Market Open. A very good morning to you, Mr. Singh. Thank you so much for your time to us. I want to just get a quick response, and since this is the most newsy bit, we'll talk about it first and then get it out of the way, about SEBI's decision, which has come yesterday, I believe, dropping all of these proceedings. Is it a very clear regulatory relief?
Morning to you. Absolutely. I think we welcome the final orders which SEBI has given. Provides ample clarity, and I think maintains the fact that we have been conducting business with high standards and governance. It's a reaffirmation of the same, and we're very pleased to receive this order.
Apart from, of course, I'm sure you are pleased to receive this order and that kind of clarity that you've got, there was no overhang thanks to these proceedings that you were bearing per se, right?
Not really. I think we have been indicating that we have adhered to the associated laws around some of these things, and we were fairly confident about it.
These transactions continued from 2010 onwards, which were being looked at very clearly. In terms of credit ratings, any kind of now relief or tangible relief that accrues to you, Mr. Singh? And this is just for me to understand if there's anything more to be said on this.
Not really. I think there was not necessarily such an overhang on this particular topic, so we don't expect anything here.
Okay, let's move to what your quarter looked like in Q1, and we're pretty much got the bulk of Q2 behind us as well. Your VNB margins, your value new business margins, shot up sharply. We're seeing quite a healthy growth in Q1. Are you seeing that trend continue through the second quarter as well?
Look, I will not comment upon specifically short-term outcomes, and we'll have to wait for the results to come through. But the first quarter, the improvement that you saw, and we indicated on the call as well, was coming out of a healthy protection volume lift that we saw for all SIPs, and also the environment yield curve, which actually aids the margin profile, also helped the margin boost up. But we philosophically want to remain in a healthy margin range trajectory. 25 to 26% is a range that we would like ourselves to be maintained over long horizons. But more important for us is consolidating the distribution build up, the growth differential that we demonstrate from the market. I think those are which remains priority. Margin is something that we like to keep it range bound. It's not as if we work towards only enhancing margin. It's an overall holistic building of the business where distribution build up is a very key critical thing for us.
Amrit, good morning. Neeraj here. Actually, I'm trying to ask quite the contrary as well in the same vein, because the industry is, I mean, it's been known in the past, right? And there have been formal mentions by a lot of your peer set as well that sometimes some companies would sacrifice margins in order to gain growth. So I think, just taking a leaf from the previous question, would you believe that there might be a need to do that, if at all? And would you do that as well, which is sacrifice margins for the sake of growth in a couple of quarters in order to get growth to the levels that you ideally want?
Look, there is a philosophical thinking and thought process. I think for us, we want profitable and sustainable growth, and that's the key thematic from a strategic priority that we have for ourselves. So we always like to keep the margin range bound. The point that I'm trying to reiterate is that if the margins are running up higher, let's say, we're kind of outlooking 28, 29% margins for the full year, we rather invest that extra margin that we're seeing for ourselves in building distribution and accelerating distribution. But at the same time, at no point will we say that we will let the margins fall off only to just chase a top line growth.
Hear you. Okay, thanks. That's great clarification, Amrit. The other one is, there's a lot of chatter. I start my question with that disclaimer. A lot of chatter about how much of an interest would one of your key shareholders have or stakeholders have to up the stake. You would know this. I'm just trying to understand. One, are there formal talks about this? Is there a mention about this happening now, sometime in the future? Any light that you can shed on this? It'll be great clarity, because like I said, there's a lot of chatter. Some of it might be unfounded. So good to get it from the horse's mouth. What is the exact scenario?
I think firstly, this is a matter which pertains internally to Axis, and what they have done is they have provided clarity on that to the markets as well. This is not something that we can actually talk at this point in time from our perspective, because there is no conversation from our end on this. But the internal SS chatter, or what you're calling is a chatter, is actually is a public statement made by the bank themselves that they are evaluating this opportunity, which they think is come alive, that they can increase the stake from upwards of 20% up to 30%. And it's a matter of their internal deliberation. And I think what they have indicated out there in the domain is that they are deliberating the same. And as and when they would have anything to say more about, you all will hear from them, and then subsequently by us as well.
So yeah, just to rephrase, what I meant by chatter was that about whether there is a conversation that has happened between the two sides about some formal or informal expression, but nothing like that as of now.
Not really.
You're saying it will.
Yeah,
okay.
It's an internal topic pertaining to the bank. Yeah.
Okay, fair call. Thanks for that, Alex.
Amrit, hi, Alex here. So I want to ask about this entire conversation about the broader space, and maybe you can give us some insight on what you're experiencing as well about bancassurance and how that distribution channel is really working, what the future of that is. I'm not talking now about the next quarter or the next 2 quarters. Ultimately, the informed buyer of insurance will gravitate towards pure protection. And for you as a business, if you simply look at the margins and the way that these products perform, you would benefit actually from having a higher share of pure protection. So how do you see this progressing in FY27 and beyond?
So I think you're asking 2 questions here,
yes.
Alex. You're asking how do we see the protection momentum, and more importantly, the long-term view on protection. And then you're also asking the overall bancassurance as a distribution channel. So that's a product and a distribution related question. Let me take the first one, which is protection momentum. I think we as a company have indicated there are 2 segments of choice for us, which is protection and annuity. And we want to continue doing well and outperforming in that particular space. We're already, from a protection perspective, in the first quarter from our results, you would have seen that 15% of our business from a volume perspective was protection. From a value perspective, was protection. And it's growing at a very healthy pace of 44%. And not just one quarter, you go back 3, 4, 5 quarters, you will see very healthy growth rates of 40-45%. We do believe that there is still a significant opportunity when it comes to this metric in India called sum assured per capita, which basically means whether Indians are adequately insured or not. We see deep underpenetration, and even people who have bought not the adequacy of that protection component in their policies. So for us, and I think for the sector, we see this category should continue growing, and especially as the country becomes richer, per capita income improves, this product actually becomes very relatable and understandable by the consumers as well. So, I mean, frankly, we will remain focused on this category. We will continue working and ensuring that we are the leaders in this particular space. And as this category is a risk category, more you spend time, more data you build, more moat you build for yourselves. And those philosophies and thoughts will remain with from our perspective. Coming to the second one, bancassurance, I think it's a very important distribution channel. At the end of it, the product requires a distribution to kind of carry itself and reach the consumers. Bancassurance has a significant share in the overall sales of a life insurance product and will remain an important channel for the industry. We are blessed to actually have Axis Bank as our promoter, who is also provides a very strong bancassurance franchise. In addition to that, over the past years, we have been now working with many banks actually, trying to ensure that we are present in their platforms and selling to those platforms. So it's an important channel from an overall scheme of things.
Interesting. All right, Amrit, thanks so much for taking the time. Pleasure speaking with you and wish you all the best.
Thank you guys. Bye.
All right, let's talk about Turtle Mint next. And it's in focus after a very interesting report by Jefferies that indicates that the company's revenue is likely to grow at 38% compounded over the course of FY26 to FY29. Before we speak to the management, we've got Mr. T. Badrinarayan Sanjeevi, who's the Chief Financial Officer of Turtle Mint, joining us to talk about the potential going forward and to understand the outlook for the business. Before we do that, let's bring in Shivam to give us a few details of the contours of that report so that we have a little bit of context. Shivam?
Well, yes, Turtle Mint is in focus as the company has posted recovering financial metrics. In fact, the platform revenue that has rose by around 49% on YOY basis. The company has been also expanding as the digital partner base that has crossed more than 6.9 lakhs. In terms of renewal revenue, that has also grown up by around 66 odd percent, and that has also aided in margin improvement. In terms of the Jefferies report, they have also come up with an outlook in which they expect the revenue growth to be expected to grow at 38% CAGR for FY26 to 29, and also the beyond top 30s market that is expected to grow around 400 to 500 basis points faster than the top 30 markets in health and motor insurance. Also, investors should look at the few key monitorables such as the active partner growth and productivity, the partners additions, and health insurance cross-sell. And also any development from the regulatory front on the insurance commissions will be a key monitorable that we should look for.
All right. Let's talk to the management about some of this. And thanks so much, Shivam, for that. The question to you, Mr. Badrinarayan, Sanjeev. Please, first let me ask you, sir, how would you like to be addressed? And let me address you that way.
Call me Badri. Thank you. Badri. Good morning to all of you.
Good morning, sir. So, Badri, let me ask you about this, right? So, the projections heading into FY28 are pretty robust. If we're talking about 35+% compounded growth at the top line level, is that something that you find par for the course, or do you think that you can even better that?
Good morning, all. The growth, first of all, thank you to independent analysts who have kind of reflected and validated our how we are executing in the market and how we executed for the last 10 years. The growth comes from the fact that 75% of our customers or policyholders are based in the B30 markets, meaning over 19,000 PIN codes in India, and which is where the insurance penetration gap is the widest. In fact, the HCA report has constantly pointed out that the growth in the B30 markets is actually about 60 to 70% higher than growth in some of the other markets. And over 75% of a premium comes from those markets actually. That really is a foundation of the growth. From our own execution perspective, in the last 7 to 8 years, the number of digital partners that we've been adding on our network has actually grown by more than 50% CAGR. Most of these people who join our network are new to insurance, and we have a great platform that enables us to recruit, activate, and then encourage them in producing these or selling these policies to the end customers. So A, we are addressing the large market opportunity of B30, and B, over the last 8 years, we have kind of demonstrated ability to recruit digital partners from all over India and enable them to produce insurance premiums for us and for the insurance partners that we work for. That really is the underlying thesis of our growth over the next few years.
Badri, and just in case somebody was wondering what B30 means, it's a terminology to reflect the markets beyond the top 30. It's that simple. It's essentially moving to the relatively smaller towns and cities in India, which are moving up the value chain in per capita income. So Badri, this is actually reflective in mutual fund data as well, where you're finding more SIP coming through from the B30 cities and towns. But let me ask you this, what are the kind of products that are being sold in the insurance space in those towns and cities?
See, the initial product that are bought by people is really the simplest of two-wheeler insurance. In fact, even the digital partners who kind of onboard onto our network, the simplest thing for them to offer is two-wheeler insurance or motor vehicle insurance. What our platform then enables our digital partner to do is give him tools and the confidence to start selling products from more insurance companies and products across multiple categories. You see, for the customers at the end markets, they really don't have choice. To be offered a choice by the digital partner saying, hey, do you have a two-wheeler? Here are about 10 different quotations for your two-wheeler, and you can pick any one of them that suits you. Ability to offer the choice, ability to offer simple products that they need for themselves. That is where the journey begins. We also seen, of course, in health and life insurance as well, penetration in B30 markets to grow well. In all those cases, we see both indemnity products in health or benefit products in health, or starting off with simple life products, life savings products or term products. So we see a good mix of underwriting across GI and LI, and within GI between both motor and health.
Badri, so then that leads me to ask you, as you move up the value chain from the most simple product of two-wheeler, do you benefit as a company by your agents or by your partners selling life insurance, selling general insurance? Do you get a larger slice of the pie? One, two, what is the kind of insight that you have about the vintage of the partners that you work with? Because in certain other businesses where there is an advisory nature in the financial space, as the vintage goes up, the productivity also goes up. So is that something that you anticipate and expect in your network as well?
No, great question, sir. There are two questions you asked. We certainly benefit from a broad range of portfolio that we're able to offer to our insurance partners as well. The more we offer a diversified portfolio, whether it is two-wheelers or motor cars or various types of commercial vehicles, or let us say health products, then we are able to offer a very high quality of a book to our end insurance partners. The second thing that we care about is that at the time of sale, the product has to be right for the end customer. We want to get 100% contactability of the end customer, and we want to be able to secure the renewals. So if you see a growth as well, you see while our overall revenue in Q1 grew by about 40%, the growth in renewal revenues has actually been 66% over the prior year. This shows that the right product is being sold to the right customer, and which keeps him persistent and continuously engaged with the insurance company. In terms of digital partners themselves, you're absolutely right, exactly as you see in the wealth business. What we see in a digital partner journey is that nearly 70 to 80% of them are new to insurance. Initially, they operate more from memory. You can think of it like that. They know a few products. They pitch the same products to the customers. But once they get comfortable with our platform, they know how to communicate the quotations that the platform throws to the customers. They know how to take the partner through the customer through the digital purchase journey. Then they become really, kind of software sellers. Their confidence in selling multiple categories and multiple insurance companies increases with time. We see that actually. For example, in 2026, when we look back at the performance of partners who were, let us say, recruited on the platform in 2017, 18, 19, 20, 21, we see that the premium production that they are able to do increases year on year.
Okay.
That growth in productivity over the years gives them confidence to be good insurance salespeople and gives strength to our platform, that we don't only just rely on adding number of digital partners on the platform, but also we can rely on them growing their own business through increasing the sales every year or increasing the renewals every year.
Badri, hi, Tamanna here. I just have a couple of quick questions. One is I want to talk about your POSP pathway, which is what, and you talked in the beginning of your interview about analysts, independent analysts looking positively at your business. One of the reasons is the POSP pathway. Explain to our viewers what this is, why this is a differentiator, and why you're ahead.
Thank you, Tamanna. One of the key, the company has actually built two key capabilities over the last few years. And what you're alluding to is one is a large distribution network that we have built of nearly 6 to 7 lakh partners throughout India, down to the last 19,000 pin code in India. We are able to recruit all these people to become financial product sellers, and through our app and the platform, they're able to do the mandatory training on the platform, and they're able to kind of get themselves certified to sell products on our platform. These POSPs come from various backgrounds, to be honest. They can be small business people, they can be two-wheeler garages, they can be battery sellers, they can be Xerox shop owners, they can be small financial advisors, they can be housewives, they can be students wanting a career in insurance selling.
So if I understand it, and excuse me, just for paucity of time, I just want to get the right picture. This is a modern version of the insurance agent, which was usually, your neighbor selling you a policy. You're saying this is now inculcated in businesses. How do you do this? You give them a device, you give them training, and they sort of log on like someone would for an Uber or Ola service?
Yes, absolutely. We expect the POSP to actually be somebody within your personal social network. Every POSP has this natural social network, be it a social network built through the business or the community in which they live. And we expect the POSP to use primarily our app that we give them and the WhatsApp and the contacts that he has himself. And we take him on a journey that is really taking him through the baby steps, selling simple products, selling a few insurance companies at a time, gaining confidence in converting the first sale, getting confidence in converting the second and the third sale, and then getting confidence and eventually seeking the renewals. So there are absolutely people in our community, and our platform enables them to be confident insurance sellers over time. And as they mature on a network, maybe confident sellers of other products as well.
Okay. Trying to understand now, of course, your losses have narrowed over the last quarter. What is the path to turning EBITDA positive and then ultimately profitability looking like?
Yeah, thank you, Tamanna. So, path to profitability, as we laid out in the quarterly results, really comes from growth in volumes. We are confident of continuing to grow at the growth rates that we gave in the first quarter of this year. And as our top line grows, a key component of top line is how fast the renewal revenues have grown within the top line. And that's grown significantly faster than the overall top line, which is a key driver for profitability for us. We also disclose a metric called service EBITDA. Service EBITDA is actually our measure of profitability after you consider all the direct and variable costs of the business. 3 years ago, back in FY23, our service EBITDA was actually negative at minus 13%. And in quarter one, we were happy to report a positive service EBITDA of about 13%. We expect that as the top line grows, our service EBITDA margins should expand even by some small few percentage points, and hence improving the underlying profitability of the model. Finally, we are highly tech efficient. We keep our fixed costs the same. Over the last several years, our fixed costs have remained within a narrow range, while we have grown our top line by 3 times to 5 times in the last few years. So our ability to maintain high operating leverage, almost the same level of fixed costs subject to inflation-driven increases, that leads to improvement in our adjusted EBITDA. We closed the quarter at slightly less than 10% as an adjusted EBITDA loss as a percentage of revenue, which was significantly lower than last year. And we certainly look forward to this trend of reducing losses and clear path to profitability and achieving a full year adjusted EBITDA break even for the current year. So that's the path that we are executing.
By when, Badri? It's a when, by when?
So it will be for this year. It will be for this financial year, Tamanna. And what we've guided is that most of this should come in the second half of the year, given our business has some natural seasonalities. So this year we guided for adjusted EBITDA profitability.
Okay, we look forward to that. We look forward to having you back, Badri. Thank you so much for your time and answering all of our questions. Settlement there in focus. The new listing is also in focus. We're talking about Gaja, and just let's pull up how Gaja has fared in its first few minutes. It's a different play on capital markets and seems to have listed pretty decently, 21% up. That's what the debut looks like. Nimit, who is at the National Stock Exchange, telling us more about Gaja. Nimit, we saw some of those visuals of the bell ringing, etc. A lot of excitement there.
Yeah, absolutely. It's a little bit of history, and that seems to be the environment here as well, as the first alternative investment fund in India to be listed here, Gaja Capital, and it's listed at quite a premium. The upper band was 160, it's settled at 185 on the NSE where we are today. So that's a positive, very positive listing. The whole thing was oversubscribed about 33%, 1.7 million applications, and as Mr. UK Sinha earlier said in his speech, that this actually aligns India with global markets in terms of the listing of financial services companies, which is a very big achievement for the country. Is what he's also the non-executive chairman at Gaja and the former SEBI chairman. He said this earlier today. Now, some things that work for Gaja are actually that it has firstly a first mover advantage, as we explained. It's the first to do this. Second, it has scalability and an asset light model, a platform that can be scaled easily, a consistently profitable platform. And lastly, it says that its key moat here is its know-how, the people that it hires to make its investment. It says very interesting phrase uses talent without capital. Now, what investors should look out for in the future is that 50% of its revenue is actually from carried interest, which is really dependent on how well the funds itself, the underlying funds and the market has performed. So if that can be sustained through, and whether the predictable management fee can actually grow and form the larger chunk of that revenue, is something to be seen. In any case, there are lots of new growth opportunities here for this historic listing. They're investing in secondaries. A new secondaries fund is announced, and also their fifth fund has been announced at 2,500 crore, and it's a small piece of history that we're witnessing here today.
And it's had a good debut as well, about 20% up. Thank you for that, Nimit. We'll take a very short break. A quick look at markets before we go into that break, please. Just want to see how the Nifty is faring and what the advance decline ratio is looking like. Nifty is just as flat as ever, but managing to keep its head in the positive. Advance decline ratio is looking good as well. On the other side, we have an interesting chat coming up with Gaura Sengupta of IDFC First Bank. We have prices rising across commodities from sugar to wheat to milk. What does that mean for food inflation? All of that when we return.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो पतवारा हुआ रे केसरिया से मन जोगी
हर पल मनाओ केसरी त्योहार। विमल बोलो जुबान केसरी। अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
When outcomes matter, you trust accuracy and precision every time. Because cricket ho ya medical care, trust is earned with consistency. Welcome to Lord's Med. Empowering health, touching lives. Accuracy that shows up when it counts the most. State-of-the-art innovation, made in India. Or trust, puri duniya ka. When it comes to medical care, choose Lord's Universe. Precision with care.
Lord's Mark Industries, हमेशा आपके साथ.
Well done on that ESOP sale. Thank you. Now that you have this extra money to invest, let's build a staggered deployment approach and balance things out between aggressive and safe bets.
Ionic Wealth is your co-founder in your journey of wealth creation.
Hold up. Let him get a second opinion first.
Sounds good.
You can continue.
Ionic Wealth is putting the power of institutional grade AI in your pocket. so you can get your second opinion first. Ionic Wealth AI.
New rules of engagement. Ambitions crossing borders. Voices refusing to wait their turn. India is chasing gears. Faster, bolder, more restless. It doesn't stop. Neither do we. NDTV, when it really matters.
We are turning a page in Nepal's political economy. On the bedrock of good governance and bold reforms, we want to accelerate the pace of economic catch-up.
In rapidly changing global landscape, foreign policy must be
Back with India Market Open right here on NDTV Profit. The markets are okay, and well, at least the equity markets are okay. The question though that we are posing right now is that with the food basket heating up, onions, milk, basmati rice, coffee are all adding to inflationary pressures. Now, what does that mean for what lies ahead on the inflation print? Before we get in Gaura Sengupta of IDFC First Bank to talk about it, Shreyanshi joins us to set up the conversation. Shreyanshi.
Well, absolutely. And when you talk about onion prices, you're seeing quite the sharp surge also coming in. When you talk about the average price, also when you talk about the city comparison, you're looking at 3 cities that are worst hit, where prices have nearly doubled when you talk about onions. So Chennai, Delhi and Kolkata make it to that list as well. And when you talk about what's happening in terms of the surge in prices, it's quite seasonal because August to September, you do see that volatility come in, but this time it's much sharper, the rise. Now, when you talk about what's the path forward, the festive demand could also make it slightly more complicated, and the weather disruptions could be adding to some trouble when you talk about onions. And on the back of that, you do have the center also stepping in with the Kanda Express, where they've come in with the buffer stock, which is close to 1.2 lakh in terms of the buffer stock. And when you talk about the resultant impact, you do have the Kanda Express that's going to be making it simpler, at least for some of those cities. Chennai and Delhi make it to that list as well. And when you talk about basmati prices as well, that's why you're seeing some pressure also building up in terms of prices rising. So it's really across your dinner table basket, and trade disruptions, higher fuel and transportation costs, also something that you're looking at. Sugar prices, although they've cooled slightly from that peak, so 18% decline coming in terms of the correction from the peak, but that comes in with a caveat when you talk about the ex-mill price, because it's just against the peak. But when you compare July and August prices, you're still seeing sugar prices at quite those elevated levels. So that does mean that your morning cuppa does get even more expensive. Add to that coffee as well, that's near that 6-month high on the back of Brazil and Colombian supplies, where Brazil was hit by rain, and Colombia, you do have the earthquake impact also trickling in. So the bottom line really is that the weather disruptions are something that you're looking at. Add to that supply disruptions on the back of the war. So lots to watch out for when you talk about prices.
Yeah, a cup of coffee, the meal, and many more things. Gaura Sengupta, Chief Economist of IDFC First Bank, joins in. Gaura, is this a worrying sign about what could happen to the inflation print over the course of the next few months?
Yeah, I mean, what we are seeing is every single month there is a new sort of a spike in vegetable prices. For example, a few months back it was tomatoes. Now this month it's been onions. Last 2 months actually it's been onions. But these supply side surges, we also saw that last year also, where we had successive supply side shocks. Certain vegetable items, the price spiked, and one after the other. But I think this year what's happening is that you are getting this pickup in food inflation against a backdrop of global crude oil prices staying at $90 per barrel. Global food prices have also picked up because your fertilizer prices really have surged because of more expensive gas prices. So it reduces the comfort on inflation. But for now, our models are indicating that headline inflation should be averaging around 4.9%. Despite the weak start to the monsoon, the distribution of the monsoon also not being very healthy, with 40% plus of the country still receiving deficient rainfall, and the fact that we had a very, very weak start to the monsoon in the month of June. The good bit is that reservoir levels are close to normal, and the fact that Kharif area under sowing has picked up. But you will see these sporadic pickup in prices, which will tend to push the headline. So for now, we are still tracking along the lines of where RBI's estimate is at 5%. But yes, it does reduce the comfort on inflation.
The focus has been, and good morning to you, Alex, here, even in the commentary, and of course, a lot has been said about the tone between what the RBI governor said and what came out through the minutes, right? But what he was talking about was core inflation, and that has been relatively benign. If you remove food and fuel from the basket and you look at core, it has been benign. It could well remain benign. So therefore, from that perspective, there is a little comfort.
Yes, so I would say the minutes were on the hawkish side. I think the emphasis but to be fair to the Reserve Bank of India, they had put a paragraph in the governor's statement as well as in the MPC policy statement where they talked about the need to recalibrate rates based on the outlook on inflation as well as growth. That was a new para that was added in the statement of the policy. The minutes gave us a sense that the discussion on inflation was far more widespread, and quite a few of the members are discussing the possibility that the next move would be a pickup in policy rates if there is generalization of price pressures. So we are still maintaining a pause, at least in this financial year for FY27. So the minutes do raise the possibility that you could see, I would say the minutes have increased the probability of a rate hike. But as you mentioned, if you look at the composition of inflation, core inflation is still at around 2.1% in July, which is you remove gold, silver from core inflation. That is showing you that the inflation pickup remains a supply side challenge. It's led by food, it's led by fuel. Monetary policy is not the correct tool to respond to a supply side surge. Fiscal policy, for example, the government trying to resort to redistribution of onion supplies or increasing imports for the affected commodity, or basically if you look at the way the government has handled the fuel price surge, where majority of the shock is actually absorbed by the OMCs and the government of India. That is also one of the reasons why your generalization of price pressures that is spread from non-core items to core item has been less, because the consumer has been largely protected from the surge in energy prices. So I would still say fiscal policy or the government is the tool that is more appropriate to deal with a food price shock or a fuel price shock. Monetary policy, at least at this stage, is still not required because, as you mentioned, core is still relatively benign.
Mm-hmm. Gaura, thank you so much and for explaining that so well. Food buffers have come to the rescue so far, and which is why we are not seeing too much of concern, at least for now. Thank you so much. Moving on to our big conversation this morning on Talking Point, Vikas Prasad, Portfolio Manager, Asian Equities at M&G Investments, joining in. Vikas, great to have you on the show as always, and thank you so much for your time. I want to start off with your take of why we're not seeing as much of a relief rally as we should have. The long-awaited diffusion of sorts of the Strait of Hormuz crisis is in front of us. Crude prices have cooled down, and the chances of all of it escalating again now are definitely lesser than a few months ago.
It's a fair question, Tamanna. Good to see you. I was going to practice my Japanese and say hisashi buri to add to your list of expressions, which means it's been a long time. Yeah. It's a fair question, like I said. And what is encouraging is that year to date, after March, we've seen a lot of dispersion in the Indian market, intra-market, within sectors. So for active stock pickers with a long-term horizon, it's actually been a very good market. We just had an earnings season that I would say was better than our expectations. I think better than the expectations of many. So you're starting to see a recovery in earnings, a stabilization of the rupee. I think the question for foreign investors is how sustainable is this stability of the currency?
Are we going to see more volatility in commodity prices? What happens geopolitically? But the underlying story is intact, and that is very encouraging. We have the market that was the best performing in the world for a quarter century, compounded at mid-teens rates for well over 20 years, and it's just had its largest relative mispricing relative to other emerging markets and most other developed markets around the world ever, the largest ever in 40 years. And so we think that the setup for Indian equities is constructive from here. And yes, there are some concerns company by company, sector by sector, but that makes for good stock picking.
How is that stock picking endeavor going, Vikas? What are you looking at which is exciting right now? And there seem to be two schools of thoughts. One of them is that let's stick to the banks and some of those safer plays, and then the other is that there is just no juice left there. Wonder how you're looking at it.
So that we're in the second camp. If I look at the portfolio today and I compare it to the pre-COVID portfolio or the portfolio 10, 15, 20 years ago when I first moved to Asia, the names that we were very overweight back then, staples, banks, oil and gas, IT services, all of them are underweights as sectors. Now, we do have some overweights within each of those sectors, but net, each of those sectors remains an underweight for us. We have reduced some of the underweight in IT services. Staples, it's still there. Oil and gas, it's still there. Private sector banks actually comprise the lowest portion of our portfolio in many, many years, if not ever. Taking their place have been the NBFCs over the last couple of years. What's also interesting is if you look at the underperformance, it continues to be concentrated in these large cap, the winners of yesteryear. And what you're seeing is the returns are being driven by small constituents in the benchmark, and then the off-benchmark names. Even the IPOs are doing better than some of the long-standing listed names. And that's where we continue to spend our time. India is a wonderfully diverse market. You just look at some of the recent IPOs. If you look at the AI trade beneficiaries, but for deep tech, you have transformers, transformer oil, cooling solution providers, optical fiber cable companies. A lot of the AI build out is manifested in the Indian market. So if that's a theme that you're tracing through Asia, across the region and around the world, then you can come to India. But there's a lot of other things that are worth spending time on as well. Healthcare services is a large portion of our portfolio. It's not very well represented in the benchmarks yet, but we'll get there. But to answer your question, we're in the camp that the winners of yesteryear, probably on a 1 to 2 year view, aren't what's going to drive returns.
Vikas, good morning. Can I just probe that a bit? Healthcare services, because it's now a wide bucket, a fairly wide cohort as well. What falls within that frame, just so that our viewers understand it better? And two, is this a multi-year view that you're taking? Because it does seem like that bucket might be here to stay.
Yes, it is a multi-year view that we're taking. Coming into 2026, our healthcare services exposure was the largest exposure that we had as an overweight. That includes hospitals, that includes dialysis. If you broaden it out, that also does include CDMOs and healthcare services that are not consumer-facing, but B2B healthcare services. I know earlier on an earlier segment of the program, you were talking about CDMOs. That is also an area that we're very excited about. There's a very long tail to growth to that. Yes, the multiples might seem optically high, but you have to look at what you get in return for those multiples. It's very high growth for a very long time, and that's what's getting priced in. But to answer your question, healthcare services includes both B2B and B2C. If you broaden it out even further and you include domestic pharma names, biotech names, there's a lot to like on that front as well. And that opportunity set will only continue to grow.
Include, for example, I'm just trying to understand, hospitals, diagnostics as well, or that's a separate vertical?
No, diagnostics, dialysis, hospitals, all included. All included.
I hear you. Okay.
Vikas, hi, Alex here. I'm just wondering, when you look at the stocks that you've been tracking and that have been on your watch list in India, what is the growth rate that you find would be appropriate for you to revisit some of your allocations to other parts of the world? To say that if it crosses, say, 22%, I'd look at this more favorably.
Well, first of all, I think more important than that, I like the look. It suits you.
Thank you.
So our foundational view, as we've talked about in the past, is that stocks follow earnings. And the earnings growth in India for decades has been the highest in the world. the economy will continue to be the fastest growing in the world. Earnings will grow faster than that, given the formalization taking place and the shift towards the formal listed sector. So we underwrite a low to mid-teens earnings growth and hurdle rate cumulatively over the next few years. And what we're looking for are sectors and companies that can materially outpace that growth. And the ones that cannot, we take capital away from them, and we are underweight those sectors, hence the underweight in staples, oil and gas, and some of the other sectors that I mentioned earlier. There's no magic formula to this. Everything for us is stock by stock, bottom-up stock picking, while being aware of the macro. Now, as you know, we invest across the region. We have had material exposure to North Asia over the past couple of years. That does include South Korea, that does include Taiwan. Within that, we've made some allocation changes. We have reduced the exposures to South Korea and Taiwan. South Korea is a market that is up 400% in the last 20 months or so. We've shifted towards China, Hong Kong, China, where we remain overweight. And in the regional strategies, we've gradually been reducing our India underweight. In our India dedicated strategy, we remain fully deployed, given the opportunity set that we see.
Guys, I'm probably going to ask you a question that doesn't have a simple answer, but the point is that a lot of AI build out, capacity build out is currently taking place. This is being funded by debt and to a certain extent equity as well. It's actually sucking out liquidity or money from even governments, and so therefore there is a crowding out taking place. Is that what is going to cause a problem down the road? To say that if a company that is currently in a massive build out is starved of capital at some point in the next 1.5, 2 years, is that going to be the start of the tip of the iceberg?
It's a fair question. And so what we have spent our time doing is not answering the question, is there an AI bubble? I don't know what that means. What we're trying to look for are bottlenecks. What we're also looking for are companies that benefit even if hyperscaler capex slows down, because there are huge transitions underway. If we can get into some of the details, there's a transition from silicon-based computing to photonics-based computing. There's a demand for optical fiber cable. We have exposure to that. Just within that, if you couple what's happening in optical fiber cable technology with what's happening in defense technology, just over the last couple of years, demand from tethered drones has gone from 0 to nearly 20% of optical fiber cable demand. Well, a single drone has, if I recall correctly, more than 20 kilometers of optical fiber cable. That's single use. When a drone is shot down, when it completes its useful life, then you need another one. And so defense and technology are coming together in novel ways, and many of those ways are captured by Indian corporates. So there's a lot to look at within the AI build out. Where we are not so exposed is in the data center operators themselves. That's what we are finding is where the risk lies, the risk of a slowdown, the risk of lower utilization. But when it comes to the build out, cooling companies, water treatment companies, ultra pure semiconductor grade water, all of those companies or all of those solutions are provided by many different Indian companies that we know. Actually, just after this conversation, I'm speaking to a cooling company based in northern India to talk about just this topic.
Important point, and quite a bit to talk about there. But Vikas, paucity of time, we have to wrap things at this moment. But thanks so much for taking the time. And since you began in Japanese, I'll end in Japanese. Arigato gozaimasu.
Thank you very much. Domo arigato.
All right. Well, there you go. Hey, I got the bow as well. Let me bow as well. Okay. All right. Thank you so much.
Yeah.
You know, at some point, our viewers are going to be confused about why we're suddenly all talking in Japanese and about Japanese.
But you know why?
Because
we should tell them as well.
Yeah, we should, because Rishabh Bhatnagar has, our correspondent has been in Japan covering the Commerce Minister's trip, and he gets a pop quiz every day on what new Japanese terms he's learned. So we're brushing up as well as we go. That's all the time we have on India Market Open. So from the entire team at this table and behind the scenes who puts our best foot forward every day, thank you so much for watching. But stay tuned. Ask Profit up next. You shouldn't miss it.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी। अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
When outcomes matter, you trust accuracy and precision every time. Because cricket ho ya medical care, trust is earned with consistency. Welcome to Lord's Med. Empowering health, touching lives. Accuracy that shows up when it counts the most. State-of-the-art innovation, made in India. Or trust, puri duniya ka. When it comes to medical care, choose Lord's Universe. Precision with care.
Lord's Mark Industries, हमेशा आपके साथ.
Sorry, I'm late.
No worries.
So our daughter, she's starting university in a few years. How do I safeguard against these dollar fluctuations?
So factoring in LRS, the route, and the currency hedge, here's your best move.
Ionic Wealth is your co-founder in your journey of wealth creation.
What's the rush? Let them get a second opinion first.
Yeah, this works.
Great. Please continue.
Ionic Wealth is putting the power of institutional grade AI in your pocket, so you can get your second opinion first. Ionic Wealth AI.
Welcome to India's biggest grassroots innovation movement.
Vande Bharatam, Bharatam, Vande Bharatam.
हमें ये पूरा रोड मैप क्लियर करके ज्यादा से ज्यादा लोगों तक पहुंचाना।
स्पंदन एक पोर्टेबल ECG मशीन है।
सिर्फ यहाँ पे थेरेपीज डिजाइन की गई है।
If you need any manufacturing help, do reach out and I'm more than happy to get your product to all of them.
हर हफ्ते आइडियाज के असली ग्रास रूट इनोवेटर दिखेंगे वंदे भारतम में। Coming soon on NDTV Profit.
Arunesh Chawla, the DPUMP Secretary, speaking exclusively with us on NDTV Profit. How do you see the momentum from here, and what's your reading on the expectations around the Hindustan Copper OFS?
This is in line with Prime Minister's vision of sharing the national wealth with ordinary investors, minority stakeholders and citizens of India. Hindustan Copper, has good futuristic investment plans. And if you see the market analysts and the feedback, this is a stock which is forecast to go upward.
80,000 crores, Mr. Chawla, is the target. You've already hit 52,000 crores in FY27. Do you expect to comfortably exceed this target?
I would say we are working hard and will achieve the target.
What is the dividend picture looking like for CPSEs?
Dividends, we have a plan, but you will see that plan becoming active in the second half, which is when the dividends come in.
We are turning a page in Nepal's political economy. On the bedrock of good governance and bold reforms, we want to accelerate the pace of economic catch-up.
In rapidly changing global landscape, foreign policy must be anchored in strategic clarity and shared prosperity.
Hello, I'm Shashi Tharoor, and beyond statecraft and formal treaties lies the true heart of our partnership, our deeply rooted cultural diplomacy and people-to-people bonds.
I look forward to sharing our vision for industrial cooperation at NDTV World a week share.
Seamless trade and strategic cross-border investments are real drivers of modern growth.
Understanding the past and present is the key to unlocking the future in India-Nepal tie.
Join me at NDTV World Anviksha, Ideas Across Border in Kathmandu on August 27th as we explore Nepal's role in changing the world. Don't miss it.
3 decades of watching the world change. Of asking the questions that couldn't wait. Of telling the story.
Hello and good morning. You're watching NDTV Profit and you're tuned into Crypto Minutes powered by CoinSwitch for your daily dose of news and updates from the crypto world with me, Sharad Dubey. Now let's take a look at the top headlines. Bitcoin remains steady near the $79,000 mark on profit booking. Japan officially moves government bond market on blockchain. 39 US banking groups build blockchain network. And lastly, Thailand's SEC releases draft rules for spot, Bitcoin and Ethereum ETFs. Well, after a very strong rally, Bitcoin has stabilized near the $79,000 level mark. Little bit of profit booking coming in, but the momentum still remains bullish. Technicals are still suggesting overbought positions are there, as Bitcoin ETFs have marked their 6th straight day of inflows, which total roughly $2.26 billion. Well, Japan has officially moved to put its $8 trillion government bond market on the blockchain. The Financial Services Agency, Ministry of Finance, Bank of Japan and the country's 3 mega banks are building a system for instant 24/7 settlement of stocks and government bonds. This comes weeks after Japan ended its 4-year crypto freeze and moved to treat digital assets as financial products. 39 US state banking associations are joining forces to build a nationwide bank-run blockchain network. The Bank Chain Alliance is targeting a 2027 launch and will support regulated stablecoins, tokenized deposits and smart payments as well. Well, the industry-owned network will represent thousands of banks and be interoperable with the other networks as well. And Thailand's Securities Exchange Commission SEC has released draft rules for spot Bitcoin and Ethereum ETFs. The proposal aims to broaden investment opportunities for investors and the capabilities of the business operators, promote product diversity in Thailand's capital market and establish consistent standards for the offshore custody of digital assets across relevant fund types. And before we wrap, here's a quick check on the changes to the crypto prices over the last 24 hours. A cool-off coming in after 4 to 5 important sessions of rally coming in. Bitcoin, Ethereum, XRP, all of them falling between 2 to 6%. Little bit of correction coming in Solana and Tron as well, as we see the resistance levels being tested going ahead. Time now to take a look at the crypto strategy for the day. Here's what's there to keep in mind today. The market outlook is showing bullish consolidation. There's a technical breather happening after a very powerful rally. Remember, the medium-term technical structure still remains strong. The support continues because of 2 reasons. First is the ETF inflows and the second being the regulatory clarity. You should know that the Bitcoin key support range is still there between that 76 to almost $78,000 mark. Now, as we wrap, remember you can reach out to CoinSwitch's dedicated helpline where anyone can connect with the in-house experts to get their queries resolved, whether it's about crypto, regulations, taxation or the broader industry. The team is available to provide guidance and help users make informed decisions. Well, that's all on this edition of Crypto Minutes powered by CoinSwitch. Thank you so much for tuning in.
Welcome to NDTV Profit. I am Mahima Vachrajan, and with me is Puneet Zaveri, and this is Ask Profit, a show that gets all your stock-related queries answered. For viewers tuning in, you can either give us a call or send us your queries on the WhatsApp number that's flashing on your screen up there. And while you do that, a quick look as to how the markets are doing at the moment. The Nifty 50 is hovering above the 24,300 levels, holding above the 24,300 levels and taking support near the 20-day exponential moving average is what we're seeing, up by about just 0.1%. The bank Nifty, however, is doing very well as compared to where the benchmarks go, because 57,900 levels is what we're tracking, and if we try to cross the psychological level of 58,000 levels, then a further upside could be expected on Bank Nifty is what technical analysts believe. and a 0.8% uptick is what we're seeing in terms of where the bank Nifty goes. Let's also pull up the Nifty 50 heat map and see as to what are the counters that are buzzing and contributing towards the minor gains coming in. You have something like a Kotak Mahindra Bank, which is up 2.7%, SBI Life, HDFC Life, so life insurance companies as a pack doing well, and you also have Ultratech and ICICI Bank, contributing towards that gain. But there's Bharti Airtel, which is now, they're seeing some profit taking coming in, down 1.4%. Infosys, Nestle, BEL are some of the other names, and Apollo Hospitals also that continue to trade under pressure. Let's also quickly pull up the sectoral heat map to see as to what sectors are buzzing in trade right now. And you have your PSU banks largely leading that bank rally, coming in up 1.25%. You also have pharma and realty in the green, but there's Nifty IT, which is down by about 0.5%, and defense also continues to see some profit taking coming in. Let's also quickly pull up the BSE 500, and before that the mid cap 150 and the small cap 250 in terms of how the broader markets are looking like. The mid cap 150 is trading 0.3% higher, and the small cap 250 slightly doing better than that, up by about 0.5%. So that's how the broader end of spectrum looks like. Quickly, the BSE 500, some specific names and specific action. You have something like a Quest Corp signed, of course, on the back of takeaways coming in from their investor meet. You also have Five-Star Business, Route Mobile, etc. doing fairly well. But Spin Corp is something where profit taking is coming in. Both your Graphite India and HEG seeing downtick of around 2%. And you also have Rajesh Exports and Varun Beverages. The street is not probably liking the new development coming in with regards to the Alcobev space and the new subsidiary that Varun Beverages has decided to incorporate. So that's with regards to where the broader end of spectrum goes. But one important update coming as Commerce and Industry Minister Piyush Goyal leads India's largest ever business delegation in Japan for a 4-day visit. NDTV Profit's Rishabh Bhatnagar reports from the ground about the conversations and business agenda. Listen to what he has to say.
Konnichiwa here from Tokyo in Japan. The Commerce Minister has just winded up a roundtable with startups. He has given 4 calls to action for Japanese as well as Indian entrepreneurs and investors. Let me list those. The first one is a Japan-India Deep Tech Capital Corridor. This is essentially a two-way street where you'll have more and more patient risk capital that will be waiting for startups to take action on. The second one is the fact that India offers a design to deployment bouquet of services, and he has urged a lot of Japanese companies to actually come, test, build and deploy their products and services in India, given the fact that India has scale while Japan has high-tech manufacturing, high-tech solutions. The third one is a two-way innovation bridge, essentially connecting universities, incubators, R&D funds, as well as venture capital funds. That's what we're seeing when it comes to the third point. The fourth point is India and Japan could look at developing a Shark Tank-like pitching series. That's the interesting one. What we'll essentially have is Indian startups pitching for Japanese investments. And what we'll have is also Japanese startups pitching for Indian partners, essentially, to establish joint ventures. That's what we're picking up. This has been the 4 calls to action that the Commerce Minister has given. Stay tuned to NDTV Profit for more coverage coming in from Japan.
But India is pitching itself as the launch pad for the next wave of innovation as well. And speaking in Tokyo as well, Commerce Minister Piyush Goyal called upon startups from India and Japan to deepen collaborations from early stage funding and deep tech innovation to manufacturing and market access as well. Listen to what he had to say to wrap up this coverage on Japan as well as what's happening with India as well as the convention.
Japan and India, if we work on 4 areas, I think we can significantly impact each other's economies and each other's future. 1, I suggest the Japan-India Deep Tech Capital Corridor, where larger pools of patient capital, not only for mature unicorns, but particularly early stage funding, can help catalyze these startups, ideas and innovations into success stories. 2, India offers a complete bouquet from design to large-scale deployment. And I think India as a market, not only to test your products, but finally get a large market to sell your products. I think a two-way innovation bridge connecting our universities with Japanese universities, our incubators with Japanese incubators, our venture funds with Japanese venture funds are all areas in which this partnership will support startups both from Japan and India. And finally, the fourth point, India and Japan can develop pitching series where Indian startups pitch for Japanese investments and Japanese startups pitch for partners in India.
All right, so that was Piyush Goyal addressing, of course, the 4-day delegation that we just talked about. But let's start digging into your queries, and to answer them, we are now joined by Tapan Doshi, research analyst at catapan.in, and we'll soon be also joined by Rajesh Bhosle, senior technical analyst at My Advisor Alpha, who will be soon joining us. Tapan, the first question that we have is coming in on MCX. Our viewer Nagesh from Bengaluru is holding 200 shares bought at the levels of 2805 and wants to know whether to continue to hold this one or exit. He's not mentioned the time frame, but in general, what do you recommend for MCX?
Yeah, of course, good stock. Good morning, Mahima. No, if you see again, the volumes hopefully will be coming up. Of course, the stock already corrected, now recovering. If you see the options volumes are quite strong. Again, new contracts are quite supportive. If you see the institutional participation increasing even in FNO side also. Only the thing is regulatory risk will always be there. And it will always be a volume link earnings. But looking at the lower penetration of commodity market in India and one type of 98% market with MCX, I am quite positive. Again, asset light, high ROE. So please hold this stock for the long term.
Got it, Tapan. On MCX, Nagesh also sitting on some good gains. But let's also look at the next query. This one's on PNB. Anita, who's from Hyderabad, has bought these shares at 39. So very attractive levels yet again. Asking what she should do with this counter. Tapan, would you recommend PNB to continue being held by Anita here, by Tapan? What would you recommend here?
So first of all, congrats to a good level. She entered a good profit, sitting on a good profit. If you see for PNB, credit growth will be around 11 to 13% from here, and for them, retail and MSME growth will be catalyst from here. The main thing is asset quality, whether they are able to maintain these NPAs or not. See, PSU valuation discount will always be there, and capital adequacy now there is no issue for that. Of course, strong PSU turnaround we have seen. My take is at this valuation, hold this stock for at least 2-3 quarters more, and for at least for 1 year, she can hold it, no problem.
All right. The next one that we have is coming in on Aadhar Housing Finance. This is from Neelam, who's writing us from Jaipur. Has bought the stock at the levels of 315 and says that it's not moving much of a needle. Do we have Rajesh, by the way, online? Because this is a slightly short-term query that she wants to know about. 2 to 3 months is the time horizon that she's looking at. Rajesh, very good morning to you. What do you make of Aadhar Housing Finance on the charts?
Yeah, very good morning to you as well. So if we see, I mean, in the last couple of sessions, we have seen a bounce back from the 460 level, and in the June series as well, the stock had rallied from the levels of 460 to 500 level. So it has reversed from a strong support, and it can expect a bounce back towards 500 levels. But overall trend remains negative. So as of now, hold on to it. But when it re-enters 500 levels, that would be ideal levels to lighten up the positions.
Let's also look at Gaja Alternate Asset Management today. The company listed on the exchanges and see what that's doing, up almost 14%. And my colleague Nimit is actually in conversation with UK Sinha, who's the chairman of Gaja Capital. Let's listen into that slice of the conversation.
I didn't imagine it would come so soon. In 2012, we framed the AIF regulations. And after that, the industry has grown in a very, very big way, around 13.5 lakh crores. But listing is something which was always in my mind, whichever company, but Gaja has become the first one. And let us understand it in the context of development in the financial services market. if you go back to the reforms starting in 1991, broking firms were not listed. In fact, they were all proprietary, and they got listed. Public sector banks were not listed, and SBI got listed, and then private sector banks also got listed. Then came the mutual funds. Mutual funds got listed in the country. There was a huge problem and difference of opinion about whether stock exchanges should get listed. In fact, one very eminent expert who was heading a committee on behalf of SEBI, he had recommended that stock exchanges should not get listed because they also perform the function of a first line of regulation, and only the 10-year government security yield, that is what should be allowed, and rest of it should go to the investor protection fund and things like that. But SEBI came out, fortunately during my time, with a set of regulations for a stock exchange listing. And one of the important landmark decisions was that there would be no self-listing. So one exchange can get listed on the another exchange and things like that.
But that's what's happening. I mean, there are NSEs listing on the BSE, but they're permitted to trade. I mean, they're going for a permitted trade.
Yeah, but two exchanges are already listed. So the conflict of interest that was visualized in the minds of certain people, that how can you regulate yourself and also be profitable. So that SEBI solved in 2012 by coming out with a non-self-listing requirement. And that is doing very well. BSE is listing, MCX is listed. And the last frontier, today even InvITs are listed.
Yeah.
REITs are listed. Depositories are listed. So this was the last frontier. And I'm very happy and I'm thankful to SEBI for taking this very progressive and far-reaching decision. And by doing this, we are now at par with the best in the world. What is going to happen now is that the capacity to raise money for the startup ecosystem, for innovation ecosystem, that will go up in a big way. For sake of comparison, in 2012, the mutual fund industry, the size was hardly 6 lakh crores. Today is 86 lakh crores. Yeah. So this development today of Gaja alternate asset management company getting listed will pave the way for others also to be able to raise money in India. One thing we must realize that over the past few years, foreign money into alternate management companies has slowed down. On the other hand, India is sitting with lot of savings, lot of surplus, which is looking to find an option. They are investing in mutual funds, they are investing in other areas, but alternates provide a very good option for them to do it. So my thinking is that this listing will change the face of a startup ecosystem in the country.
That's a good note to actually lead on. I also wanted to understand, an alternative investment fund has its own strategic goals and outcomes. Sometimes it makes bets that don't work out. Sometimes it makes long-term bets that don't pay out very soon, right? In an environment like that, in India, where the retail environment can be volatile and the markets react to your quarterly results, how does that change the management and investment style at something like Gaja or for others in the space that are looking to get listed? Does that change the way you think about profitability and about return?
This debate or this question is a very genuine and valid question. But let me remind you that the same question arose when the mutual fund industry was getting listed. At that time, the same problem came in. In fact, the first problem which had to be addressed by SEBI and the larger system was that where do the assets of the funds, the funds floated by schemes floated by the AMC will lies. And obviously, they are a separate entity. They lie elsewhere. And the parent company, the asset management company, lies somewhere else. The two are different. And there are enough safeguards built into the mutual fund regulations and other regulations such as the listing obligations and disclosure requirement regulation.
Well, that was, of course, the management of Gaja Alternate Asset Management. And paving the way for a new segment of companies to be listed as well. But let's now start the rapid fire round in this edition of the show. Rajesh as well as Tapan, you know the drill. Keep your answers as short as possible. The first one, it's on Bank of Maharashtra. Sasi from Navi Mumbai holding shares at 56. Tapan, should he continue to hold since it's bought at such attractive levels?
Yeah, please hold.
One is coming in on NMDC. Shankar from Bengaluru wants to know if he can go ahead and buy 500 shares of NMDC at the current market price. The time horizon is 1 or 2 months, and what could be the target price that he can expect on this one, Rajesh?
Yeah, can buy for a target of around 92 levels.
Next one's on Chalet Hotels. Shobhit holding shares at 730. Tapan, and wants to know a 1-year view for what he should do now.
No, currently hold this stock.
Okay, the next one that we have is coming in, and this is from Madhav, who's writing us from Hyderabad, asking about whether this is the right time to enter into ICICI Bank, and he's looking at this from a long-term perspective. Tapan?
Yeah, but currently in SIP manner you can buy.
Our viewer is in 40% gains on Eternal, and Tapan, he wants to know if he can buy PB Fintech after selling Eternal out. What would you recommend?
No, stay with Eternal.
Okay, the next one that we have is coming in, and this is from Murli, who's writing us from Hyderabad, asking about Premier Energies. He's bought 20 odd shares at the levels of 1,118 rupees and wants to know for 1 more year, can he continue to hold, Rajesh?
Yeah, hold on to it in the near term, expect move towards 1100.
Okay. Next one, Space Digitech. Naveen holding shares at 214. Tapan, and wants to know if he can continue to hold for the next 5 years. He's currently in a loss. What would you recommend?
No, not bullish. He can sell on rise.
Okay, the next one is on Ahluwalia Contracts. Aparna is holding around 150 odd shares, bought at the levels of 830. 2 years perspective, a good hold. Tapan?
You currently hold.
Mahesh from Maharashtra holding on to Paras Defense at 1509. Rajesh wants to know a short-term view of this counter.
I mean, buy on dip around 3050, positionally can expect 1650 levels.
Okay, the next one is on Jyoti Labs. 100 shares bought at an average price. The price is not mentioned though. Jay from Tripur wants to know whether he can continue to hold this one or not. Rajesh, on the charts for Jyoti Labs?
Yeah, hold on to it. 210 is the first trigger. Once that is crossed, then 235 can be expected.
Okay.
Next one's coming on Anant Raj. Govind holding shares at 588. Tapan, then asking for a 2-year advice on this counter. We also have the demerger now, but what's your view on the counter?
Please hold, and he can buy on dips also.
Okay, the next one is on Paytm. Mohit from Ludhiana is holding since the levels of 1165. Wants to know if he can continue to hold the 50 shares that he has been holding. Tapan?
Yeah, good for long term.
Next one's Welspun Corp. Bindu wants to know if it's a good time to enter for the long term. Tapan?
Yeah, good stock to hold, and he can enter.
Okay, the next one is now on NetWeb Tech. Balwant from Rajkot is holding 30 shares since the IPO price of 500 is what he's saying. He wants to know the future prospects on this one. Continue to hold, Tapan?
Yeah, first of all, congratulations to him. Yeah, he can hold.
Yeah.
Next one's from Aarti holding on to Swiggy at 237. Rajesh, should she sell out, or is there any legs for the stock to move now?
Hold on to it. We are expecting move towards 325 levels.
Okay, Persistent Systems is the other one. Siva from Amravati wants to know if this is the right time to enter the stock or not. Tapan, any view on this one?
No, not now.
The next one coming through, it's on Paytm, bought by Mohit from Ludhiana at 1165. He wants to know a short-term view here. Rajesh, stock seen a run up quite a bit. Any view here?
In the short term as well, we can expect towards 1830, 1850 levels.
Got it. Well, that was the last question of the rapid fire, but we'll come back with a lot more stock-related queries, at least in the second half of the show. Do stay tuned. A lot more action on the other side.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल बनाओ केसरी त्योहार विमल बोलो जुबान केसरी।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
When outcomes matter, you trust accuracy and precision every time. Because cricket ho ya medical care, trust is earned with consistency. Welcome to Lord's Med. Empowering health, touching lives. Accuracy that shows up when it counts the most. State-of-the-art innovation, made in India. Or trust, puri duniya ka. When it comes to medical care, choose Lord's Universe. Precision with care.
Lord's Mark Industries, हमेशा आपके साथ.
Let's build a staggered deployment approach and balance things out between aggressive and safe bets.
Ionic Wealth is your co-founder in your journey of wealth creation.
Let him get a second opinion first.
Sounds good. Ionic Wealth is putting the power of institutional grade AI in your pocket so you can get your second opinion first.
We are turning a page in Nepal's political economy. On the bedrock of good governance and bold reforms, we want to accelerate the pace of economic catch-up.
In rapidly changing global landscape, foreign policy must be anchored in strategic clarity and shared prosperity.
Hello, I'm Shashi Tharoor, and beyond statecraft and formal treaties lies the true heart of our partnership, our deeply rooted cultural diplomacy and people-to-people bonds.
I look forward to sharing our vision for industrial cooperation at NDTV World a week share.
Seamless trade and strategic cross-border investments are real drivers of modern growth.
Understanding the past and present is the key to unlocking the future in India-Nepal tie.
Join me at NDTV World Anveksha, Ideas Across Border in Kathmandu on August 27th as we explore Nepal's role in changing the world. Don't miss it.
Welcome to India's biggest grassroots innovation movement.
हमें ये पूरा रोड मैप क्लियर करके ज्यादा से ज्यादा लोगों तक पहुंचाना।
स्पंदन एक पोर्टेबल ECG मशीन है।
सिर्फ यहाँ पे थेरेपीज डिजाइन की गई है।
If you need any manufacturing help, do reach out and I'm more than happy to get your product to all of them.
हर हफ्ते आइडियाज के असली ग्रास रूट इनोवेटर दिखेंगे वंदे भारतम में. Coming soon on NDTV Profit.
A world of questions. Ideas that challenge the ordinary. Conversations that connect countries and cultures. Where different worlds find common ground. NDTV World brings Nepal's ideas to the world. NDTV Anveksha, Ideas Across Borders. The Nepal Dialogue. 27th August, Kathmandu, Nepal. New rules of engagement. Ambitions crossing borders. Voices refusing to wait their turn. India is chasing gears. Faster, bolder, more restless. It doesn't stop. Neither do we. NDTV, when it really matters.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K. The works. Where's the hook?
Welcome back. You're watching Ask Profit right here on NDTV Profit. And as we go through the day in terms of taking your stock-related queries, a look at the markets yet again, because we are continuing to bask on yesterday's last hour move. But apart from that, there's nothing much that's happening today as well. Look at the advance decline ratio also, because for the last few days, there's been consistently, we've been highlighting that the declines actually are having a much bigger impact in the broader markets. Today though, that seems to have reversed as well. So you are seeing some moves on individual names as well, and we showed that on the BSE 500 too at the start of the show. A lot of names though buzzing on the back of block deals as well. So pull up Grow, see what that stock is doing. VR Scientific is the other one where you're seeing some action there, but a lot of money actually, changing hands, a lot of investors booking out as well. So it's an interesting juncture at which we are at the markets right now. Let's look at VR Scientific also if we can. That was a counter that was under pressure too at the start, and continues to be one where Sagility also now up almost 4% on the bottom of the screen, but all of these counters are in focus as well. But let's get back to your stock related queries now. Mithilesh Kumar has asked us the next question on TV today. He's sitting on a big loss. He's bought these shares at 488 odd rupees almost 5 years back. Stock's trading at 112 now. So Tapan, he's holding almost 1,000 shares. What would be the strategy now for him? Should he sell on rise, but because it's at a very elevated level that he's bought at? What's your advice?
Yeah, no, the pricing is too high. No, but I'm not optimistic about this stock overall. If you see the ad revenues is quite weak. If you see, again, the pressure is there from competition. Competition is quite strong. Again, if you see digital competition also coming through YouTube and all that. So ad cycle dependence is much more for this company. And if that remains weak, I think the margins will remain weak. So lower earning growth we can see. Of course, Aaj is a leader, but overall we know that most of the TV media is not doing so great unless one or two maybe doing well. So, but yes, it's a debt-free company, and Aaj is a strong brand. But for long-term compounding, I don't think this is a stock one can hold. So it will be sell on rise from my side, even from here also.
Okay, all right. So that's the view coming in on TV today. The next one that we have is coming in from Nandagopal, who's writing us from Bengaluru, asking about Jana Small Finance Bank and Federal Bank. Of course, the bank did go ahead and clarify yesterday that there's no advanced talk in terms of where the acquisition goes. But overall, for both of these names, Tapan, what is your view like? And from a one-year perspective, a good hold?
Yeah, hold Jana also one should hold it because see there is a MFI stress is there already, and asset quality pressure is there, but he can wait for one more quarter. But I think Federal Bank is the stock where I go and buy also this stock at this level at a dips, because if you see they are able to maintain their NPS quite well. Again, strong growth guidance is strong. Again, if you see the credit growth is almost more than 16 to 17%. So I think if he wants to go for long term, I think Federal Bank will be the stock one he can go. Here Jana Bank maybe 1 or 2 quarter more he can wait.
Got it. Let's go across to Murli now from Hyderabad, dialing in for a stock related query. Murli, very good morning. Welcome back to the show. What's your query?
Yeah, good morning. Good morning to you and the panelists. My question is on Bank of Baroda. I have 150 shares at an average of 164.
Okay.
When it was high, I booked some profit. And that is one. And second is it a good time to enter EU Finance Bank?
Got it. Well, Murli, good on you to book some profits at the top. But Tapan, what would you recommend here for Murli to do? Should he book his profits entirely in Bank of Baroda, get into EU Small Finance Bank? Would that be your recommendation?
No, not now, because the stock has already gone down. No, if you see from the top, it is almost 25% down. I think the credit growth will be around 13 to 14% growth will be there. Again, the credit cost control will be there in the future. Rate cut impact, of course, is not there now, but I think the cycle will be long here. So my take is that no, he can wait for Bank of Baroda to come up. I think it will come up. At this level, valuations are okay, so no need to switch.
Okay, all right. So that's the view coming in on Bank of Baroda. The next one that we have is coming on Grow. This is for you, Tapan. P. Chinna from Andhra Pradesh is holding around 1,250 odd shares that he's bought at the levels of 197.5 and wants to know from a 5-year perspective, if I'm not wrong, is what he's saying. Can he continue to hold this one or not? It's currently trading around the 195, 196 mark. What do you make of this counter, Tapan?
So of course, their ratios and all these are quite good. Even their growth is much better than other broking houses. Even client addition is strong. Mutual fund business is scaling. Wealth products now they are expanding. Again, operating leverage is there. The only thing is, we know the regulation. If some changes in regulation will happen, then problem. Also, the volume part also we have to keep in mind. But at this valuation, I think this stock is trading at a much more higher multiples, almost double of what Angel One is there. So I think not at this level, maybe 180, 175 level if it comes down, there he can enter for the long. But your stock is good, but at a lower level.
Correct. Well, the next question is between Ujjivan and IDFC first. Which is a better buy currently for the short term? Rajesh, is the question coming in from Raj. On the charts, anything that you like between the two?
We are liking IDFC Bank. I mean, the stock is showing traction from the lower level, and possibly from here onwards, some 8 to 10% of a move can be expected. So possibly expecting 92 to 93 levels in the.
Okay, all right. So that's the view coming on IDFC First Bank. The next one that we have is on Sedemac Mechatronics. Our viewer, Paramjeet from Himachal, is holding around 1,500 shares, bought at the levels of 2,600. So he's made, good profits. The stock is currently trading at 3,094. Rajesh, on the charts, what do you make of this counter, and should he continue to hold for further gains?
Continue to hold. I mean, it's in a range, but possibly once 3150, 3200 levels is crossed, then possibly the stock can move towards the levels of around 3700. So overall, it's in a consolidation, but holding on.
Correct. Also, Rajesh, if you can give a quick one on Lupin as well. Anil Singh wants to know if it's the right time to buy this counter now. Any view?
So Lupin has been one of the underperforming from the pharma space, but it is now testing its long-term support levels. So somewhere around 2120 to 2100 is a strong support, and possibly if positions are held for like around 6 months, then possibly 2350, 2400 can be expected.
All right. The next one that we have is coming in on HDFC Bank. Jayadev has bought 3,000 shares at the levels of 787 from a long-term perspective, and saying that now, of course, sitting on a loss and wants to know whether he can continue to hold this one or not. Tapan, everybody who's been an investor, and by everybody I mean every other person is an investor in HDFC Bank via either owning the stock itself or via mutual funds, but has been a patient investor, right? Because we've seen constant consolidation coming in on this one. What do you make of HDFC at the current levels, and should he continue to hold?
See, recovery is there in HDFC Bank in recently, but no, I think it will be a slow mover from here. And I think, even if deposit competition is quite intense, again, CASA moderation is there. Also, unsecured credit risk is there. Again, merger synergy is still not seen. So my take is, I think if we can switch to other stock, like I prefer ICICI Bank or Axis Bank from here onwards, because they are also down little bit. So my take is that you can switch to that two banks. I think they may do well better than HDFC Bank in coming years.
The next one's on Hindustan Copper. Mangal Das, who's from Goa, wants to know if him holding these shares at 560 is the right approach, Tapan. He's also asking if he can average down. He can hold for the next 1 year. How are you looking at this counter now, Tapan? Because we've seen prices, of course, being largely stable. They've not come off yet for copper. How are you looking at this counter now?
No, strong counter. Of course, I think the demand will be good in next 2 years for the copper because of EV, data center and all that. And for their mine expansion is the key. Again, ore capacity is rising. Almost 12.2 MTPA target is there for Hindustan Copper. Domestic copper deficit is already there. Of course, the valuation is a little bit premium, but I think at this level, one can enter on a SIP manner for long term. You keep it. I think demand will be good. Even the prices will be stable near to this or may go up also in future. So at this level, one can enter, but in a SIP manner.
The next one that we have is coming in on Reliance. Our viewer, Bharat from Porbandar, is holding around 236 odd shares, bought at the levels of 1321. Wants to know if you can continue to hold this one or not. Tapan, a long-term view on this one. The stock is currently trading at 1311.
Yeah, it's not moving as such, and no, already Geo listing will be there, but we have to see what type of benefit Reliance will be getting out of that shareholder, Reliance shareholders. And overall, if you see the quarter to quarter results are okay only, and valuation is also okay, not a problem. I think you can wait for next few quarters. Hopefully, uptick will be there. I don't see a big downside from here fundamentally, so he can hold this stock for a little bit longer.
Got it. The next question coming through, and Tapan, this is a very recent listing, Horizon Industrial Park. Our viewers bought these shares recently, I think, post the IPO. But what would your recommendation be? Any view, firstly, because I know it's a very recent listing, but any view if you track the counter?
Talking about Horizon, no, the stock, if Industrial Park, correct? Yeah. So Horizon Industrial Park, the stock has already come down a little bit, not more. But if you see, it's still loss making, and if you see the sales growth is there, but no profit growth is not there. Again, the valuation wise and all that, no, looks quite valued only. So my take is, I think hold it for one or quarter more. Just check the result, but otherwise, if it is not coming to profitability, then better to move out.
Okay, all right. The next one that we have is coming in, and this is from Lakshmi, who's writing us from Telangana, asking about IRCTC. She's been holding 130 odd shares at an average price of 410, saying that she bought it around 5-6 odd years ago, and she's right. There's no real return per se that she's received after being a patient investor for 5 years, and wants to know if she can continue to hold this for the next 3 to 5 years, or should she simply exit this counter. Tapan, what would you recommend?
Better to move out, no, because if you see the valuations are little bit premium only, and again, I know it's a monopoly game, but if you see it will be directly correlated to the railway growth. Again, the ticketing business is doing well, but the problem is government interference. Now, anytime they can come and they can change the fee structure and all that. Again, slow rail capacity growth is there. Tourism packages is increasing for this company, but that will not be so meaningful. The margin increment will come from ticketing sales only. I think at this level, I am not too much bullish for the long term. It will be a moderate growth only, so better to move to other sector and stocks.
Got it. Let's go across to Hyderabad now. Kiran dialing in for a stock related query. Kiran, welcome back to the show. What's your query?
Hi everyone. Good morning. This is regarding J&K Bank.
Okay.
So I bought 1 second.
I think I have your query. You bought it at 182, Kiran?
Yes. Okay. 182.
And you want a long-term view?
1637. Actually, I bought it for short-term. When I purchased that day only, the stock had fell down. So now how it will be? It will be for long-term or short-term, or shall I dispose it? Like how it will be?
Well, let me go across to Rajesh in that case. Rajesh, on J&K Bank, Kiran's bought it at 182, and thanks for connecting on the phone line. Any view here?
Has been positive for J&K Bank, but yeah, but overall, if you see long term.
Rajesh, we still seem to be having some connectivity issues with you, so probably we'll check that and come back to you. But any view in the meantime, Tapan, on J&K Bank, essentially he's bought it at 182. Would you advise him to average down, or should he just hold and probably wait back for the price to come back?
Now, see, the stock is already down by almost 24%. And for J&K Bank also, I think retail and MSME expansion is good recently, and in future it will be good, hopefully. Asset quality is improving. Credit growth is around 14%. That is good. ROE is also improvement. If you see, their ROE is almost 1.4%, which is quite good. Gross NPA now in control. My take is at this level, valuation looks okay. Even price to book value is 0.98, so not too high. So please hold this stock for a little bit longer. Hopefully, recovery should come.
Okay, so that's the view on J&K Bank. The next one is coming in, and this is from Vaibhav Suryavanshi. Yeah, and he's asking about Gujarat Energies, bought it at the levels of 275 and wants to know as to what should be the next course of action for him. Morgan Stanley, of course, today downgraded this counter and gave and cut the target price to 246 from 523 earlier. So it's a sharp cut coming in for this one. Let's see if the stock is reacting to that or not, and pull up the stock and see as to what it's trading at right now. It's down by about 1%. But Rajesh, what do you make of the charts for Gujarat Energy? It's currently trading at 253.
So if you see the chart structure has been negative, continuously moving in a lower top, lower bottom, and it has broken its July swing low as well. So, I mean, no major outperformance, and possibly the stock can slip further to 230 levels. So, what would be the view on Gujarat Energy?
Also, Rajesh, a quick view on Kirloskar Oil Engines as well. Our viewer actually, Shrikant, is holding shares at 2,000 odd rupees. Stock, of course, was in focus a few weeks back and consistently, had a good move. But what should Shrikant do now? Should he still continue to hold, Rajesh?
Yeah, as you highlighted during July, there was a strong traction from the levels of 2,000 to 2,600, and now prices are holding around those levels where the rally had started. Also, this coincides with 89 EMA. So for now, hold on to it. Keep a stop loss around 1930, and once stock prices crosses back about 2160, and then possibly 2350, 2400 is expected. So on a very strong support, hold on.
Okay, all right. So that's the view coming in on Kirloskar Oil. The next one that we have is coming in, and this is on Paradeep Phosphates. Anil Kumar is holding at the price of 161. 200 shares is what he's been holding, and wants to know if he can wait for further 2 years to continue to hold this counter or not. Tapan, what do you make of Paradeep Phosphates?
Well, if you see the recent earnings, all were volatile in last few quarters, and from here, I think the management is quite optimistic, but we have to see whether they are able to write their guidance. See, if you see volume growth continues, again, sourcing gains are sustaining. Raw material volatility is putting pressure on their margins. EBITDA per ton has improved. So at this level, I think it can hold for one more quarter and wait. I think things will be better from here.
Got that view, Tapan. But the next question coming through, and this one's on Karnataka Bank. Our viewer has actually answered that question. So let me take another one on Gateway Industry Park. Anand Kumar Jha holding these shares at 73 odd. Let's pull up Gateway Industry Parks now. Stock's trading at 53. So he is currently sitting on a loss. And Tapan, he's holding over 3,000 shares. So what would your advice be? What should he do right now? He's asking if he can add further for the long term. Would that be advisable?
Gateway, which one you told?
Gateway Industry Parks.
Gateway Industry Park. Okay. See, Gateway Industry, if you see the overall profitability is okay, but I think there is a pressure on the margin we can see. Again, I think the management is quite optimistic about the double-digit growth from here. But here I can see, I think the PNL is not moving so much. My take is I think there will be a pressure from the competition also. So, no, please don't add the stock. Currently, hold the stock.
Okay, the next one that we have is coming in, and this is from Thomas, who's writing us from Kerala, asking about Ashoka Buildcon. He's holding around 1,000 odd shares, bought at the levels of 172. From 1 year perspective, Rajesh, what is it that you're seeing on the charts, and what could be the target price for this one?
So far now, hold on to it. I mean, it's an underperformer, but in the June month, there was a strong volume-based traction from the same level. So somewhere around 105, 108 is a strong support. And as long as it holds, there is a possibility that the stock can bounce back towards 125, 126. So hold on to it. Keep a stop loss below 107 levels.
Got it. Also, on a short-term basis, would you recommend? What's your view on persistent systems as well, Rajesh? Because Siva from Amravati wants to enter this counter now. We put out a detailed piece in the morning on the stock too, but on the charts, Rajesh, any view here?
So, if you see, this is one of the strongest counter from the IT packs, and on the charts as well, we are seeing a strong breakout. And it's holding on to it. So possibly the stock can move towards 6,000, 6,100 levels. So hold on to it, a very strong counter.
Okay, all right. The next one that we have is coming in, And this is on Sundaram. Okay. Two queries that we have, but I'll choose Timex from this because Jayesh wants to know whether from a long-term perspective, can he continue to hold Timex from a long-term perspective? His buying price, no, the current market price is 625 if I'm not wrong. Let's try to pull up the charts. He's not mentioned whether he's entered or not, but any view on this, Tapan?
Yeah, if you see the Timex is doing well, and from here also, I think things will be better. The sales revenue is jumping, and but the problem only is the stock has already gone up a lot. Correct, already. So valuation wise, I think no, it's on a higher side. He can wait for a little bit more, but the guidance and all that is good. I think the revenue and even the margin improvement I can see. So yes, hold on to the stock, but addition, I think wait for 10-15% down at least.
Let's now start the rapid fire round in this edition of the show. Rajesh as well as Tapan, you know the drill. The first question coming to you on Renuka Sugar, Rajesh. A viewer holding shares at 25 rupees for this counter. Any view here? What should he do right now?
So hold on to it. Possibly 26 levels can be retested. Some volatility is there, but yes, positive.
Okay, CCL Products is the other one. Harsha from Hyderabad wants to know from a 1 to 2 year timeline, continue to hold. Tapan?
Sell on rice.
The next one's on Piramal Pharma. Shrikant holding at 223. Should he continue to do so, Tapan?
Yeah, hold.
Okay, the next one is from Lavanya, who's writing us from Eluru, asking about GE Shipping. She's bought 260 shares at the levels of 1560. What should be the target and stop loss for this one, Rajesh?
Stop loss would be around 1250 and target would be 1480.
The next one's on Canara Bank. Mr. Rao actually holding shares at 114 for the last 18 months. Tapan, should he continue to hold?
Yeah, please hold.
Okay, Oswal Pumps is the other one. Our viewer is holding at the levels of 550 and wants to know whether to continue to hold or sell. Rajesh, on the charts?
Yeah, hold on to it.
The next one's on NCC. Kavya holding shares at 255. Currently sitting on a big loss here, Tapan. Should she continue to hold because she's holding 3,000 shares?
No, once it comes up, better to move out, but currently hold. Maybe around 170 around she can move out.
Okay, the next one is on Bandhan Bank. Ramakrishnan from Chennai is holding 604 shares at an average price of 259. Add more or continue to hold the shares that he's holding? Rajesh, on the charts?
Add if it dips back towards 170 level.
The next one's from Manav. He wants to enter either Vari or Premier Energy, Tapan. Which is a better bet in terms of a longer 3 to 4 year view. We also have the management of Premier Energies. They're not looking for any capital raise, what they said. But any view here, Tapan?
SS Premier is better, but I'll not go for any one of them. I think there will be a pressure on margin for both the companies.
Okay, the next one is on Lloyd's Engineering. Rajesh, is this a good time to make an entry into this counter? The viewer is looking at this counter for just 10 to 15 odd days.
So I would suggest to wait if it dips towards 82 levels, there you can add.
Manohar wants a view on Cyient as well, Rajesh. We've actually seen a good 2-day up move yesterday and today as well on the back of their analyst day meet. But on the charts, is this a start of something?
Yeah, we are very bullish on it. Possibly 1250, 1300 can be expected.
Okay, the next one is on Sagility India. Murli from Hyderabad is holding 100 shares at the levels of 30 rupees. For the next few years, continue to hold. Tapan?
Yeah, please hold.
Siemens Energy bought at 3695 by a viewer. Rajesh, any chance of it to come back to that price is the question.
Possibly a bounce towards 38.20 is expecting. So hold on to it.
Okay, Shriram Finance for the next 6 months. Would it be the right time to enter, Rajesh?
Yeah, I mean, from yesterday, there is some traction. Once it crosses 1150, then 1250 can be expected.
What's a better pick, Tapan, between Tata Steel or Jindal Stainless is what Sayan is asking.
I think Jindal Stainless at a lower level.
Okay, the next one is on Globus Spirits. Lalita is holding 38 shares, bought at the levels of 937. Continue to hold this one or book out, Tapan?
Hold.
Next one's between on JSW Energy actually for the next 3 to 4 years. Can Anil continue to hold this counter? If not anything else, Tapan?
No, this is good. Even Adani Port is also good. Both are good.
Okay, Sona Comstar is the other one. Sumana from Dubai has bought 225 shares at an average price of 819. 3 months perspective on this one, Rajesh?
Yeah, so positive effects to hold on to.
All right. Okay. So that's hold on is the view coming in on Sona BLW from Rajesh, where technicals are concerned. But
Just one point. By
Sure.
mistake, JSW Energy you asked. I've spoken about JSW Infra maybe. JSW
Okay.
Energy hold.
Okay, thank you. Thank you for clarifying that, Tapan and Rajesh, both of you. Thank you so much for taking us through the 60 queries that we managed to answer on today's show. And with that, viewers, completely out of time on this edition of Ask Profit. But in case we've missed your queries in this edition, we'll definitely try to take them at 2 p.m. So do continue to stay tuned into NDTV Profit.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
When outcomes matter, you trust accuracy and precision every time. Because cricket ho ya medical care, trust is earned with consistency. Welcome to Lord's Med. Empowering health, touching lives. Accuracy that shows up when it counts the most. State-of-the-art innovation, made in India. Or trust, puri duniya ka. When it comes to medical care, choose Lord's Universe. Precision with care.
Lord's Mark Industries, हमेशा आपके साथ.
Factoring in LRS, the route, and the currency hedge, here's your best move.
Ionic Wealth is your co-founder in your journey of wealth creation.
What's the rush? Let them get a second opinion first.
Yeah, this works.
Ionic Wealth is putting the power of institutional grade AI in your pocket so you can get your second opinion first.
Welcome to India's biggest grassroots innovation movement.
हमें ये पूरा रोड मैप क्लियर करके ज्यादा से ज्यादा लोगों तक पहुंचाना।
स्पंदन एक पोर्टेबल ECG मशीन है।
सिर्फ यहाँ पे थेरेपीज डिजाइन की गई है।
If you need any manufacturing help, do reach out and I'm more than happy to get your product to all of them.
हर हफ्ते आइडियाज के असली ग्रासरूट इनोवेटर दिखेंगे वंदे भारतम में. Coming soon on NDTV Profit.
3 decades of watching the world change. Of asking the questions that couldn't wait. Of telling the stories that couldn't be ignored. Of holding the line when it mattered most. Times change, our purpose doesn't. NDTV 24/7 is now NDTV when it really matters.
We are turning a page in Nepal's political economy. On the bedrock of good governance and bold reforms, we want to accelerate the pace of economic catch-up.
In rapidly changing global landscape, foreign policy must be anchored in strategic clarity and shared prosperity.
Hello, I'm Shashi Tharoor, and beyond statecraft and formal treaties lies the true heart of our partnership, our deeply rooted cultural diplomacy and people-to-people bonds.
I look forward to sharing our vision for industrial cooperation at NDTV World a week share.
Seamless trade and strategic cross-border investments are real drivers of modern growth.
Understanding the past and present is the key to unlocking the future in India-Nepal tie.
Join me at NDTV World Anviksha, Ideas Across Border in Kathmandu on August 27th as we explore Nepal's role in changing the world. Don't miss it.
Arunesh Chawla, the DPUM Secretary, speaking exclusively with us on NDTV Profit. How do you see the momentum from here, and what's your reading on the expectations around the Hindustan Copper OFS?
This is in line with Prime Minister's vision of
Hello and welcome to KYC. You're watching NDTV Profit and we come here only for your profit. I'm going to get interesting companies, interesting industry trends, and also is there a chance to make alpha for your portfolio or not? We'll come to that. But before that, the company in focus is Private Oil Exploration Company. This is the company which we'll be talking about. Try to guess it. It's a beneficiary of Samudra Manthan National Offshore Exploration Scheme. We have been seeing a lot of stocks buzzing in this, theme going ahead, oil and gas theme. The stock is up 36% from March lows. Also, one more hint I would like to give you before you guess the company in KYC today. It has strong ties with both ONGC and Oil India. I'm sure you're trying to understand there are 3-4 names which are there in the listed space, but the company in focus for KYC is HOEC. That is Hindustan Oil Exploration Company. Interesting private name, but why are we calling this company? A lot of new recent filings have started coming up. Of course, there are some pluses and minuses, but we'll try to understand what are the key tailwinds in the industry. Is there a scope of re-rating for the oil and gas segment? We have already seen that in the stock prices. The production guidance is very much important. What will they be doing? The capex numbers we'll be tracking. Also, important question would be the plans ahead going for the next 3 years. What are the key numbers to look at? What will be the view on the crude prices? Is this going to stay elevated? If yes, will it benefit the company or not? And the Dirok pipeline constraint. There are some constraints also. We'll ask the management, where is that mitigation happening? The drilling plans outlook, what is there for FY27, 28, 29? We'll get you all those details. You have to stay put with me. And of course, the government announcements recently which has been coming in, and we'll explain you most of the schemes and why this sector I feel has strong tailwinds. Also, let's understand the company. A lot of you write to me that oil and gas segment is very technical. It is technical, but I'm going to make it very simplified for you. Stay put with me. The Private Oil Exploration Company, it was incorporated in the year 1983. This is just before liberalization. Company has both onshore and offshore assets as well. Looking at the company, they have 9 oil and gas blocks of discovered resources and 1 exploratory block as well going ahead. Also, the geographical footprint is there in 4 out of 7 production basins in India. So they have a good coverage, a lot to explore. But before you start analyzing this company, understand the short forms also, why this is important. This is a million British thermal units. This is a gas pricing unit, to make it simplified for you. BOEPD, this means barrels of oil equivalent per day. So do not get confused when these text or words are discussed, but you should know these schemes. Open Acreage Licensing Program, this is the first scheme. Also 2 other schemes are there which you should know the full forms. This is the NELP, this is nothing but New Exploration Licensing Policy. These are positive triggers for the industry, and also the Discovered Small Field Policy. So you should know these important categories which the push is coming from the government itself. But coming back to the company, look at the JV partners. You have GSPC, Oil India, IOC, ONGC, and 3 to 4 more other major players. So yes, it is thoroughly embedded in the oil and gas system. Exploration is there. There is, of course, there's a different ecosystem of drilling, and we have got you a lot of companies in this ecosystem as well. But there are a couple of recent news flows happening. They are going to drill 4 additional wells in PY1 field to restore the production. These are the code names for different places which the company operates. 3,400 crores has been already invested in this field as well. And Block B80's partial gas sales have also started. But this is just the news flows coming in. The energy roadmap is very much important if you're tracking this segment. KG, Mahanadi, Andaman and Kaveri Basin is set for a faster exploration. Remember this point. Also, ONGC JV will address the drilling capacity bottlenecks as well. This is the energy roadmap coming in. And remember, almost 84,000 crore rupees plans is there to unlock offshore energy potential. Company is a direct beneficiary. So you must be wondering what's working for the company. Of course, the government push for oil and gas infra, that is a very important mega trend which we have got. Higher oil price realizations leads to higher realization. And when the realizations are up, earnings go up. Sector might see a re-rating, Dalal Street favorite right now. So keep an eye on the stock, and more drilling related projects announcements are likely here. So there might be alpha to be made and improvement coming in the working capital ratio as well as debt reduction. But this is what is positive. What is negative is also important. There is a lack of analyst coverage. That's a little bit of concern for me. Second important reason is the pressure on return ratios would be there due to higher capex coming in and pricing volatility. Another important factor is lesser institutional participation in the shareholding. So that's something to watch out for. Also, there is volatility in oil pricing as well. How does it impact the earnings? And most importantly, execution and regulatory risk as well. So I've given you both sides of the coin for HOEC, but let's try to understand more. Let's go into deep research, and that is the KYC ratings, which we get for you for your profit. So looking at these numbers, income statement, balance sheet, cash flow, these are the usual ones. I have got you operating ratios to give you both sides of the coin, and I've added the return ratios as well. Remember, the shareholding and street cred is pretty much important over a long period of time in our analysis. And interestingly, I've got the valuations as well as the outlook going ahead. Let's start with the first one, income statement, how things pan out. And there is a lot of variability in the income coming in, but from FY24, what was there in the cycle, it seems like we are at the end of the cycle of this oil and gas space, and after this it's likely that there might be up moves going ahead. But as of now, concerns are there. Looking at the Q1 numbers also, not much has happened. Generally, when you track oil and gas companies, always have a sequential basis of analysis, and that has also actually come down as well. And the concerns on the past data comes from me, and this is what's there on the screen for you. I'm going to give this a strong thumbs down. But on the other hand, of course, this is the change in the margin profile also. Let's go to the balance sheet and see what's happening. And the debt reduction is a good part over here. The borrowings was roughly 121 crore rupees. That has come down significantly. So there's a good strength coming in, and a decent cash balance is also there. This shows that the working capital ratio management is improving. So because of that, I'm going to give balance sheet a strong thumbs up as well. But let's understand the cash flow segment, what's happening here. And a good move is coming in from the cash flows as well. If you compare them over the last 2 financial years as well, this is the ratio which I'm talking about, the operational cash flow to PAT ratio, that has jumped up to 283%. So overall, cash flows improvement has happened. So I'm going to give this a strong thumbs up as well. But let's understand the operating ratios. What's the story looking like? I mentioned to you about the improvement in the cash levels, and that helps in the working capital days as well. And when there is a lower number here or the negative, its signs is good. So there is some cyclicality element to it as well. But on the other hand, if you look at the ROCs, these are compressed right now. In FY23, it was around 20%, and then the fall is happening. This is, of course, key reasons is higher capex coming in, and also there is a volatility in the earnings as well. So let's keep it a neutral rating when it comes to the overall return ratios. Shareholding pattern, nothing much has moved as well, but there is a lower participation coming in when it comes to the FI. There is a small error here. This is not DIs, by the way. This is for the public here. So this is something which I'd like to just give a caveat on this. But going ahead, I'm going to give this a neutral rating as well. But from shareholding, let's understand how things are moving when it comes to the street cred. Of course, on the short-term basis, the returns have been strong. From March lows, the stock is up 36%. But concern remains if you're a long-term investor in this counter. Last 5 years, it's been flattish returns. And from 2026 highs, the stock has corrected a bit, down 17%. So either way, it's a neutral rating for me for street cred. Interestingly, let's pull out the valuations, and the 4 interesting names comes. Of course, you have heard about ONGC and Oil India, but there's another small cap, Antipolis as well. So looking at the ratios, these are the 12-month trailing P ratio which I have taken out. Company sits at around 33 times of that P ratio, while compare it with Antipolis, it's at 31 times. So it's kind of even Stevens from the long-term average numbers when it comes to the valuation, slightly on the lower side. But I'm going to still give this a benefit of doubt, and I'm going to give this a neutral rating. Let's talk about outlook. Outlook is also for long term as well as medium term. The target is on the screen coming in. These are the important units which you should be targeting, which the company had stated, especially we have picked up from the Q4 con call as well. Also looking at the second outlook, we have these basins, around 2 to 3 wells from these 2 segments, and also some more announcements coming in. They will be resolving the Dirok gas evacuation pipeline issue. That is where the entire market is looking at, and the HPCL crude sale reversal is underway as well. So it's a mix and match for good and a little bit of negative view as well in this, but it's still a stronger outlook. So I'm going to give this a thumbs up as well. But let's give you the entire picture of the KYC ratings of where does HOEC stand. So largely the income statement concerns are there, but balance sheet and cash flow make it up for it. Operating ratios, there's a neutral stance, but when we move towards the shareholding and street cred, it remains neutral, and the valuations is fairly valued right now for the stock, but the outlook is strong for the industry as well, and those tailwinds might give re-rating or premium to this counter. So net a law of averages works here. It's around 5 out of 8 for HOAC which we have given, but we have an important conversation ahead with the management which we'll be talking about, and we'll be joined in by Bararuchi Mishra. He's the MD and CEO of HOAC, where he'll answer all our queries. But before that, we'll take a short break. We'll be right back.
We are turning a page in Nepal's political economy. On the bedrock of good governance and bold reforms, we want to accelerate the pace of economic catch-up.
In rapidly changing global landscape, foreign policy must be anchored in strategic clarity and shared prosperity.
Hello, I'm Shashi Tharoor, and beyond statecraft and formal treaties lies the true heart of our partnership, our deeply rooted cultural diplomacy and people-to-people bonds.
I look forward to sharing our vision for industrial cooperation at NDTV World a week share.
Seamless trade and strategic cross-border investments are real drivers of modern growth.
Understanding the past and present is the key to unlocking the future in India-Nepal tie.
Join me at NDTV World Anveksha, Ideas Across Border in Kathmandu on August 27th as we explore Nepal's role in changing the world. Don't miss it.
Arunesh Chawla, the DPUM Secretary, speaking exclusively with us on NDTV Profit. How do you see the momentum from here, and what's your reading on the expectations around the Hindustan Copper OFS?
This is in line with Prime Minister's vision of sharing the national wealth with ordinary investors, minority stakeholders and citizens of India. Hindustan Copper, has a good futuristic investment plans. And if you see the market analysts and the feedback, this is a stock which is forecast to go upwards.
80,000 crores, Mr. Chawla, is the target. You've already hit 52,000 crores in FY27. Do you expect to comfortably exceed this target?
I would say we are working hard and will achieve the target.
What is the dividend picture looking like for CPSEs?
Dividends, we have a plan, but you will see that plan becoming active in the second half, which is when the dividends come in.
New rules of engagement. Ambitions crossing borders. Voices refusing to wait their turn. India is chasing gears. Faster, bolder, more restless. It doesn't stop. Neither do we. NDTV, when it really matters. A world of questions. Ideas that challenge the ordinary. Conversations that connect countries and cultures. Where different worlds find common ground. NDTV World brings Nepal's ideas to the world. NDTV Anveksha, Ideas Across Borders. The Nepal Dialogue, 27th August, Kathmandu, Nepal.
The news, Ayush. Since when do we do?
Welcome back to Know Your Company, and now we are joined in by Baruruchi Mishra, the MD and CEO of HOEC, and sir is her first time in KYC in our studios. Good afternoon, sir. Always a pleasure to have you here. And the oil and gas segment, sir, has been doing really well over the last 3 to 4 months. A lot of government push is also coming. First, explain us what are the industry tailwinds looking like, and where does your company actually fit in?
Thank you. Thank you for having me, and very warm greetings to the viewers of NDTV Profit. Today is Onam, and wishing them all the best for the festive season. Let me start with the landscape that we are in today and the tailwinds which the government is engendering. And that is driven by the acute shortage of oil and gas and the geopolitics. Samudra Manthan, which is the government's initiative to increase the appetite, if I may use the word, for exploration and production in the deep water, is a very positive tailwind. I mean, the government is ready to provide 50% up to 625 crores per well for drilling of deep water wells. And the deep water plays are really the long-term answer to India's oil and gas requirements. They're also talking about infrastructure pooling and investments in infrastructure, and ensuring that there is a lot of seismic data available to be able to prospect for the oil and gas. All these areas are being pushed by the government as a complete parcel of enabling efforts through the Samudra Manthan. And that is a very positive move, and it is the best time to be in the oil and gas sector in India. Because the government has realized that they have to step out, which they have. Now it is for the sector itself, the industry itself, to step up and then grab what is on the offer and make things happen.
And so now, where does HOEC stand in here? In this entire process, how does your company benefit?
So, our company benefits from the second component of the Samudra Manthan, which is about supporting infrastructure. Look, companies like HOEC and other companies, they normally go for discovered small fields. They also go for OLAP, which is exploration blocks, but discovered small fields have proven oil and gas reserves. The only reason why they have not been monetized so far is because the commerciality or the materiality of the reserves aren't there. And therefore, people dither from in making investments. Although HOEC has taken a step forward, and we are the only operating offshore oil and gas company other than Vedanta and ONGC. And we have existing infrastructure. So the small fields like B15, which is in our portfolio, and we are very hopeful that there will be others which will be coming. If the government supports the infrastructure through allowing ONGC or others incfrastructure to be used, or brings in other enabling infrastructure, then we are in a very sweet spot to develop all of these sub-commercial, if I may use the word, accumulations.
Right. This is a very interesting take, but let's talk a little bit more about the company. The production guidance, what are the key numbers to look at, going ahead? If you have, I'm sure you have given some guidance on that. How does it look going ahead?
See, the company is sat on 62 million barrels of oil equivalent.
Right.
And that is a very good place to be in. Our only issue so far has been that we have not stepped up on the gas to monetize these. And therefore, we have taken a view that rather than funding all our growth of our own books, we will go for fundraise and really quickly monetize these. And therefore, for B80, which is our offshore producing field, we are drilling 3 new wells, and we are doing 2 workovers, which is shutting off the water zones, opening up new zones, etc. And that will give us roughly 5,000 to 6,000 barrels of oil equivalent by June of next year, which is a very, and it is very definitive in that sense. Of course, there are uncertainties in the oil and gas play, that's always there, but we have an existing infrastructure, and these are wells for which the locations have been proven from a point of view of analysis, all the reservoir modeling, etc. So we are very hopeful that B80 will contribute roughly 5,000, so 6,000 barrels of oil equivalent.
So that's an interesting number you have mentioned. But what are the capex numbers? Because you mentioned a fundraise also coming in. I'm sure there's a capex plan also.
Yeah, so let me just complete these. So that is B80, and then for PY1, where we are running a basement reservoir, where we started, when we started, this field was making 50 million standard cubic feet per day. But because of supply chain and all, because of the demand disruptions, we had to shut these wells in. And when you shut in a well in the basement reservoir, which has a lot of vucks and fractures and secondary porosity, water overwhelms the gas zones, and therefore the production doesn't come in.
So it takes time.
So it doesn't come in. Some of it is permanently lost. But we didn't give up. Rather than going to service providers, we went to Petro Vietnam, which is the world's largest producer from basement reservoir, roughly 180 to 100,000 barrels per day. And they reviewed all our production and the reserves and said we can still make 15 to 20 million standard cubic feet per day from that reservoir. So we have a plan to drill those wells subject to tying up the gas sales contract.
So this becomes your overall drilling plans outlook, right?
That's the drilling plan. There we are looking to drill 2 wells and an exploration well. But that will be after all the regulatory compliances have been done. In Assam, we have to drill 3 wells as soon as the Assam bottleneck on gas evacuation is removed. In Kharsang, we have to drill 9 or maybe 20 additional wells. 9 are proven, but our partners are saying, why not 20? And therefore, we will, and we are game with that. We will definitely drill as many as we want, because these are very reservoirs which have a lot of compartmentalization, etc. The more you drill, like PTTP in the Gulf of Kambat, in Gulf of Bangkok.
So we spoke about drilling, we spoke about your overall setup of production. The capex amount which we
the capex that we are looking at is in the range of 700 to 900 crores. That would be the capex that will go in. Now, part of it would be funded off our books, and part we will raise. But we are definitely going to get a facility in this range of costs, and we are working with quite a few NBCs and banks to be able to give this.
For a fundraise.
For a fundraise.
Actually, the entire oil and gas segment, they are looking for new capex as well as replacement capex in this segment as well. Is it?
Yeah. So that's the key thing. So there's a strap line in the oil and gas sector. You have to run to be standstill.
Okay, that's a very interesting comment coming in.
Which therefore means is, I'll give you the global perspective there.
Yeah.
The globe spends, or last year, they spent $580 billion in sustaining capital, which is just and new projects. So of which roughly 250 billion was just to keep the production where it is, because you have a decline. And if you didn't do nothing for this year, for example, then you would lose 5.5 million barrels of oil per day in the entire year.
So there is a wastage element as well. Sir,
we have to keep it steady.
You have to keep it steady.
To arrest the decline.
Okay.
And for that you have to invest, you have to drill more, you have to do enhanced oil recovery.
But I've seen your working capital ratios have improved. There's a decent cash balance also. So that seemed pretty good to me. But there are some constraints also, and the Dirok pipeline constraint is there. If you could just explain us, and how are you mitigating this?
So we have been talking with the stakeholders. There is a very definite intent globally among all the stakeholders who are connected with this to produce every molecule that can be produced in Assam. Now, Assam has been underplayed. Assam, I'll just give you an example. There are no fields in India which has 3,000 PSI as the header pressure from 6 wells.
So PSI is a pressure unit basically,
yeah,
right?
3,000 PSI. That tells you about the strength of the petroleum system that is there.
Massive reserves. That's what you're talking about.
So that could be India's 15 to 20% of India's oil energy or the gas requirement if we had proper evacuation infrastructure. We are currently strained by the evacuation infrastructure. We could double our production as we speak, but The pipeline, which will take it to the national gas grid, is an AGCL pipeline. This has been made, and thanks to the government, they have made it a public carrier or a common carrier, so we can flow in that. But there are segments of that pipeline which had asset integrity issues, and those will need to be replaced. They are planning to do hot taps. As soon as that is done, in the NRL, which is Numaligarh Refinery, they are putting a spur line of 100 to 200 meters.
So that you have given the entire view on it. Sir, we are running out of time.
Yeah,
if you had 3 lines, 3 positive triggers going ahead for the company or the industry, what would that be, sir?
So we have very strong reserves, very, very good reserves, which we will monetize as if there is no tomorrow. Right. That's number one. Number two, we have existing infrastructure, and therefore our development cost would be lower. The UDC, the unit development cost, would be lower. We are target around $10 to $11 per barrel of oil equivalent, which would be our unit development cost. And the third thing is the talent base. We have rock solid talents. We have got people from Shell, from all the majors, who have worked in various locations in the world, and that is an area that we are really spending a lot of time and effort in making happen.
All right, so there is talent, there is monetization, and maybe operational efficiency at play as well. Thank you very much, sir, for joining in and giving your views to NDTV Profit, and best of luck for the future.
Thank you so much. Thank you so much. Much appreciate your time.
Thank you, sir. So that's the management of HOAC, and yes, there was a very interesting conversation. The company coming first time in KYC and a very bullish commentary, both coming for company and the industry. For all these industry stories and also for your profit, stay tuned to KYC and keep watching NDTV Profit.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
Let's build a staggered deployment approach and balance things out between aggressive and safe bets.
Ionic Wealth is your co-founder in your journey of wealth creation.
Let him get a second opinion first.
Sounds good. Ionic Wealth is putting the power of institutional grade AI in your pocket so you can get your second opinion first.
We are turning a page in Nepal's political economy on the bedrock of good governance and bold reforms. We want to accelerate the pace of economic catch-up.
In rapidly changing global landscape, foreign policy must be anchored in strategic clarity and shared prosperity.
Hello, I'm Shashi Tharoor, and beyond statecraft and formal treaties lies the true heart of our partnership, our deeply rooted cultural diplomacy and people-to-people bonds.
I look forward to sharing our vision for industrial cooperation at NDTV World a week share.
Seamless trade and strategic cross-border investments are real drivers of modern growth.
Understanding the past and present is the key to unlocking the future in India-Nepal tie.
Join me at NDTP World Anveksha, Ideas Across Border, in Kathmandu on August 27th as we explore Nepal's role in changing the world. Don't miss it.
Arunesh Chawla, the DPOM Secretary, speaking exclusively with us on NDTV Profit. How do you see the momentum from here, and what's your reading on the expectations around the Hindustan Copper OFS?
This is in line with Prime Minister's vision of sharing the national wealth with ordinary investors, minority stakeholders and citizens of India. Hindustan Copper, has a good futuristic investment plan. And if you see the market analysts and the feedback, this is a stock which is forecast to go upward.
80,000 crores, Mr. Chawla, is the target. You've already hit 52,000 crores.
Benchmarks trade under pressure today with the Nifty 50 hovering close to 24,300 level. Sensex clutches on to the marginal gains. PSU banks, financial services lead the gains today. IT, FMCG on the back foot. Oil falls for a third straight day as Iran and Oman discuss a temporary maritime corridor through the Strait of Hormuz diplomatic process, and rising US inventories are adding further pressure on crude. Hindustan Zinc is in focus after the government clarified it is not looking to sell a stake for now. Jefferies' higher target backed by stronger zinc and silver prices adds another boost. Welspun Corp and Grove parent under pressure after both saw large block deals. The transactions are worth about 1,400 crore rupees and 2,500 crore rupees respectively, putting both stocks under pressure. Varun Beverages under pressure after diversifying into alcoholic beverages through a new wholly owned subsidiary. Kiva Spirits, focused on ready-to-drink products, appoints former Diageo executive Prathamesh Mishra as the CEO and MD. Gaja Alternative Asset Management marks a strong market debut, listing at around a 16% premium to its IPO price. The 550-odd crore rupees issue had been robust. Demand has been seen, with the IPO subscribed over 31 times. Hello and welcome. You've tuned into Markets at 12. I'm Nisha Podar. Let's take a look at the markets on midday today. And yes, Nifty 50 is coming under slight bit of pressure. And it's again another day of listless trade because of the various factors globally that are really playing out at the current moment. But 24,300 given up on Nifty 50 is also yet another psychological level. When we talk about the contribution chart, it's some of the banks which are really taking the lead, like one of the top private banks like ICICI as well as Axis Bank. These are the two which are adding most amount of contribution coming in. SBI also not too far behind, and HDFC Bank. So it's only bank-driven momentum that is being saved. Besides, if bank was not really performing well, Nifty 50 would have dragged much lower in trade at the current moment, because there is a widespread negative pressure building when it comes to the other green heavyweight companies, Bharti Airtel, Infi, Larsen & Toubro, Reliance, Eternal, all of them on the dragging side. So that's the picture of the market. On the sectoral play as well, it is more on the side of the gaining sectors, but one needs to also see and take note of the IT sector, which has been absolutely volatile. There have been days when it's the top gainer on the charts, and there are days when it's the top loser. Today is the losing day for the IT sector. Pramod Gubbi, who's the co-founder of Marcellus Investment Manager, joins in now. Pramod, always a pleasure to get chatting with you. What do you make of the volatility as well as listlessness of the market at the current moment?
Thank you. Thanks for having me. I think we're at a stage of the market where we've reversed the situation. For the last couple of years, we had pretty much poor earnings, high valuations, but the macro was relatively stable. Over the last 6 months, I think we've completely gone upside down, where the earnings, which is the micro, surprised all of us, both in terms of Q4 as well as Q1. But the macro, particularly the global macro, has turned that much more worrisome and continues to do so, particularly given the events of the last few weeks in the global bond markets. And that's really the concern. To that extent, I reckon we should be prepared for a long haul unless something gives. For the upside to break out, I reckon the valuations will keep a cap, at least at the market level. There might be some stock-specific opportunities, but I think the macro poses downside risks to the market over the next few weeks.
That's right, Pramod. And talking about the macros, Are you on the bearish or the bullish side? And give also your argument for which side you are really on. Because what we are looking at is, yes, a festive season going forward, which could add some momentum, and various other aspects which could really lead to a little bit of market breather. But on the other hand, the downsides can be many, like consumption softening, especially in the rural area because of El Nino. Also, the risk of, RBI raising rates later. Inflation worries have been there from the supply side. And also the base effect for the quarterly results for the next 2 quarters are also going to be showing a bleak picture. Looking at this entire scenario, what are the positives and negatives that you're really picking up?
Yeah, I think the negatives first, like I mentioned, I think the global macro poses significant negatives, particularly from global bond markets, even what's happening with US Treasury action there. I think, the bond markets tend to be a bit too unforgiving on these actions. So that's clearly the risk, not just for the Indian market, but also global financial markets. On the Indian macro, I think you've touched upon the consumption slowdown, which is a little bit of a structural issue here. We've seen the effects of automation and AI in terms of job creation, just when we need that much more jobs to be created for all the graduates coming to the job market. That should keep a lid on consumption. What will be interesting to see is how much of the bounce back in terms of consumer volumes across both staples and discretionary that we've seen in the last 2 quarters is a result of the GST cuts that we saw towards the end of last year. And hence your question around the base effect comes through. We'll get to see that perhaps Q3 of this year. So we still have at least another, if not 2 quarters of decent or at least a favorable base coming through there. But otherwise, yes, if the global macro remains challenging around oil prices, we might see interest rate hikes becoming a no-brainer, in which case, whatever little recovery we've seen on the economic side, we might see that also getting capped. And given where valuations are, I think that poses significant risks to the market.
That's right. Pramod, what's your sense on the next 2 quarter earnings going forward? Because everybody was expecting this war situation and its impact to be short-term in nature. But now we are over half of this particular quarter. So it's very visibly going to impact the numbers yet again, and maybe a little more pronounced with the lag effect coming in. How are you viewing the earnings momentum going forward? And based on that, how you segregating the sectors of choice?
Yeah, no, it'll be interesting. Like I said, one aspect in terms of top line growth, particularly around consumer oriented sectors, we saw the benefit of the GST cuts plus the income tax cuts early last year. It remains to be seen how sustainable they are. We still have visibility of at least the next quarter or 2 where the top line growth should hold up thanks to the favorable base. Where we've been surprised is while Q4, you could have argued companies benefited by passing on raw material price increases to the customers while sitting on very low cost inventory, and that explained the margins. We expected a little bit of a pullback in Q1, but Q1 also held up, somewhat driven by the value growth exceeding volume growth. Despite a little bit of loss on the gross margin end, the operating leverage meant that earnings growth surprised once again. It'll be interesting to see how it plays out in Q2. My reckoning is it is quite possible that we see continued gross margin compression because we didn't have access to the low-cost inventories that benefited in Q4. And therefore, while top line might hold up, we might not see the same benefit that we saw in Q1. Going into Q2 in terms of margins. So that might drag earnings growth a bit more from the revenue growth level.
So, Pramod, that's exactly the point here, that, the revenues may grow as expected, but the profit as well as profitability will get eroded, and much more probably because of the lag effect. We didn't see the full capturing of that pressure on the margins in the earlier quarter, but now we have had a sustained price inflation. My final question and a quick answer to that, Pramod, which are the themes that you like at these valuations and you're betting on for investments?
Well, if you take valuations into account, there aren't too many left in the market from a top-down perspective. Other than financials, I think financials provide the best combination in terms of valuations and growth. I haven't seen some of these private sector banks trade as attractive levels. I know they're no longer growing at 20% plus, but even for a mid-teen sort of an earnings growth, these are very compelling valuations. But outside of financials, we don't see any compelling valuation trade. Having said that, there are a couple of structural opportunities from a growth perspective, provided you're prepared to pay up for that growth. One is in manufacturing exports. I think the rupee depreciation has also brought with it some benefits. The China Plus One was already there. The trade deals that are getting signed, and plus the cost competitiveness coming from the currency depreciation, plus some government support has meant that a lot of export opportunities have opened up in the areas of chemicals, engineering goods, auto ancillaries, textiles, and so on. So while valuations here price in a lot of positives, but I think you can get some comfort from the visibility of growth. The other place is healthcare. Healthcare is, again, similar shape. You don't get cheap valuations, but at least the growth drivers seem to be intact. The growth runway is pretty long for those who are looking for growth and happy to pay up for it.
All right. Very, very interesting and big takeaways from there. Pramod, always a pleasure to chat with you. Thank you so much for joining us on NDTV Profit. All right, let's move on to one big development that's really coming in. It's the mother of all IPOs. National Stock Exchange, NSE, is going to head for its IPO launch soon. But one big development and discussion point is that exchange listing. And Sandeep Parekh, the partner of FinSec Law Advisors, joins in now to put into perspective the various aspects. Now, Sandeep, we know in our own, in front of us about 10 years back, that the regulator had started working on exchanges being listed, and that required a lot of thought, and the norms were built in order to also safeguard the way the exchanges also work like regulators, while also taking the mantle forward for the listed companies to be under their surveillance. So given that particular role of the exchange, they being a listed entity, has been a big question that had come about in front of the regulator. But nonetheless, the norms were made, BSE listed, and now NSE, the largest stock exchange in the country, is going to be listed. What are your thoughts on do's and don'ts, and how the norms really ring-fence the critical areas of any sort of concerns that may arise for an exchange to list?
Hi, Nisha. So I think it's for an exchange to say listing is bad for them is obviously kind of a little odd, because the idea is for exchanges to live with the highest standards possible, and in fact they do already. So all the listing norms which apply to listed companies already apply to exchanges, even though they're not listed. Listing just makes it more transparent, more disciplined, kind of more cohesive, comparable way to kind of look at the numbers of the exchange. And 2 out of the 3 exchanges are anyway listed, right? So MCX and BSE are both already listed, and they're cross-listed. So I mean, there are obviously some concerns around being listed on a rival's platform, but again, we've seen that twice already, and it's not caused any specific concerns. So I think it's quite good that you have, along with liquidity, we also have now additional transparency. Most of it is already achieved, like I said, because there's a clause in the regulation which says that even if you're unlisted, you have to follow the listing norms.
That's right. So anyways, they are traded in the informal market and now they're getting listed. So most of those governance rules and policies really apply. But Sandeep, you mentioned BSE, MCX, they have also been the biggest value creators when it comes to the stock price movement. And they have really created the stock returns for the companies. How does this particular area and the value creation for the investors who want to invest and buy a share and a piece of the stock exchanges really makes sense in the current environment? And what's your view on the overall ecosystem, on the exchanges delivering that value to the stakeholders?
So I think if you look at listing itself, it provides value, and that value is ability to exit the stock. So, all things aside, the listing itself provides tremendous value to investors who have, till now, there's been a very active grey market, as you know. But actual listing on the exchange provides solid kind of additional benefit to investors who would like to exit, who would like to value. And, listing provides, like you said, the additional governance norms which are applicable to listed companies. So I think overall, it's great for creating value, and as you said, also other exchanges have created value after getting listed, and they've given solid returns over the past 10-15 years. I think the only overhang has been the recent past 1 year. SEBI has of course been trying to curb the F&O volume. So again, that's been known for a fair bit of time, and it's had an impact on both exchanges and brokers. But again, that's a given. There's nothing new which has happened in the past few weeks.
Right, but Sandeep, the more recent addition in the norms on CAS, how do you view this and the impact on the exchanges?
So I think CAS by itself is, in theory, is great. It works globally. So hopefully it will work at some point in India. Just enough people. I think there are two issues with CAS. One is not enough people are meeting post 315, which means the liquidity is not there, which obviously means that price is not reflective of reality at that point of time or within that window. And the second problem really is with respect to, once you have a thin market and kind of price which is not reflective, it impacts the F&O, right? Because the F&O is not being properly valued, and those numbers are quite large. So, it could have an impact in terms of volumes of the F&O sector. But having said that, I so far it doesn't seem to be anything cataclysmic. It certainly has had some adverse impact on F&O volumes, but it seems to be marginal at this point of time.
All right, this particular area needs to be seen in future. But Sandeep, one important point is that NSE is a large company. And when we talk about the exchange norms, self-listing is not allowed. However, permitted to trade and PTT window is available for many companies, like will be the case for NSE as well. And they may want to utilize that, as many news reports to suggest. Now, there are many technicalities in this. My first question on this would be, while a separate approval is not required for most of the companies who are listed on BSE and avail of the PTT for trading on NSE, while NSE really takes care of the surveillance of these companies with no additional charge, how will NSE really be permitted to trade on its own exchange while listing is only allowed on BSE? What are the technicalities that one must know about this?
So I think, really the regulatory body would become BSE, because it's where it's going to be primarily listed there. If they want to kind of self-list under permitted to trade, I think it will have to go through SEBI, and I think they will look at the pros and cons and finally decide whether to allow that window or not. And like you said, I think they will look at what are the kind of pros and cons of such a move. So I guess it's a complex question and probably difficult to answer for me right now. Probably SEBI will have to kind of weigh on the pros and cons and finally decide whether to allow it or not.
Right. So, Sandeep, you're saying that as per norms, in this particular case, SEBI will have to give an additional approval for this PTT to be availed. And also, what happens if it is allowed? Any insights on that?
So, no, I think if it's allowed, nothing wrong with it. It's just it just require a little bit of extra scrutiny from the regulator. But otherwise, I think it's the deeper of the two equity exchanges, and it's probably the natural home where more trades will happen, and therefore there's adequate reason to permit it to be traded. But because it's there is some conflict, SEBI will certainly have to kind of put some additional guardrails before it permits this.
All right. So SEBI's approval is one thing that may be required, as you mentioned, and SEBI may want to put more guardrails. That also needs to be seen. If allowed, Sandeep, I just want to understand one aspect in terms of the operations and trading mechanism, and if you have a view on that, just taking a chance on that. That NSE, as you said, has a much deeper market and the volumes would be there. So will it really usurp all the volumes on NSE as a traded company, as a traded share, to NSE, and in that case, how will it make it to the FNO market if they are listed on BSE? Is there a dichotomy there and a technicality that needs a deeper thinking?
So I think this is exactly what SEBI will have to kind of consider, because ultimately, if the primary venue has thinner trades than the secondary venue, then it will impact price discovery on that other forum. So, nothing wrong with it. I don't think it's SEBI's job to pick the winner, let the best market win. But like I said, there are certainly considerations which SEBI will need to view before they permit such listing.
Right. So, Sandeep, there are many technicalities on this particular aspect and needs deeper thinking as well. But at least thanks for sharing your views on how SEBI will have to probably look into this particular matter because of the uniqueness that it really presents in terms of the PTT norms. Thank you so much, Sandeep, for joining us on NDTV Profit. Thanks. All right, let's move on. Cyient in focus as the company laid out an ambitious 3-year roadmap targeting the EBIT margins of around 15% by FY28. At its investor day, the company also expanded its addressable market to as much as $3.2 trillion. Shivam joins in with all the details. Shivam, tell us.
Well, yes, the company has broadened its total addressable market from $100 billion to around 2.4 to 3.2 trillion dollars. Also, in terms of FY20 focus, their focus in FY27 will be mainly on transformation, and FY28 will be mainly on scaling up. In terms of the order intake, that has also been improved, and Cyient Semiconductors that has outlined its first standalone targets of around 4 times the revenue growth by FY31. In terms of the long-term ambition, the company is aiming to become the India's largest custom power semiconductor company, and the total address TAO Digital that adds Gen AI and cloud native engineering capabilities to its digital engineering technologies. Also, the company has launched Cyient Engine, which is a proprietary engineering intelligence platform that is aimed at helping clients to deploy the AI at a larger scale. In terms of the brokerages, the Morgan Stanley has maintained an underweight rating with a target price of around 820 and has said that the execution remains a key to the medium-term performance. And also JP Morgan on Cyient has maintained overweight with a target price of around 1050, and they has said that this is driving the predictable and profitable growth for the company going forward, and the strategic focus has yielded some success, but there is more to be done.
All right. Thank you so much, Shivam, for getting us all those details. Completely out of time on this edition of Markets at 12, but do keep it with NDTV Profit. And thanks so much for tuning in.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी। अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
When outcomes matter, you trust accuracy and precision every time. Because cricket ho ya medical care, trust is earned with consistency. Welcome to Lord's Med. Empowering health, touching lives. Accuracy that shows up when it counts the most. State-of-the-art innovation, made in India. Or trust, puri duniya ka. When it comes to medical care, choose Lord's Universe. Precision with care.
Lord's Mark Industries, हमेशा आपके साथ.
Factoring in LRS, the route, and the currency hedge, here's your best move.
Ionic Wealth is your co-founder in your journey of wealth creation.
What's the rush? Let them get a second opinion first.
Yeah, this works.
Ionic Wealth is putting the power of institutional grade AI in your pocket, so you can get your second opinion first.
A world of questions. Ideas that challenge the ordinary. Conversations that connect countries and cultures. Where different worlds find common ground. NDTV World brings Nepal's ideas to the world. NDTV Anviksha, Ideas Across Borders. The Nepal Dialogue. 27th August, Kathmandu, Nepal.
Welcome to India's biggest grassroots innovation movement.
हमें ये पूरा रोड मैप क्लियर करके ज्यादा से ज्यादा लोगों तक पहुंचाना।
स्पंदन एक पोर्टेबल ECG मशीन है।
सिर्फ यहाँ पे थेरेपीज डिजाइन की गई है। If you need any manufacturing help, do reach out and I'm more than happy to get your product to all of them.
हर हफ्ते आइडियाज के असली ग्रास रूट इनोवेटर दिखेंगे वंदे भारतम में। Coming soon on NDTV Profit.
3 decades of watching the world change. Of asking the questions that couldn't wait. Of telling the stories that couldn't be ignored. Of holding the line when it mattered most. Times change, our purpose doesn't. NDTV 24/7 is now NDTV when it really matters.
We are turning a page in Nepal's political economy. On the bedrock of good governance and bold reforms, we want to accelerate the pace of economic catch-up.
In rapidly changing global landscape, foreign policy must be anchored in strategic clarity and shared prosperity.
Hello, I'm Shashi Tharoor, and beyond statecraft and formal treaties lies the true heart of our partnership, our deeply rooted cultural diplomacy and people-to-people bonds.
I look forward to sharing our vision for industrial cooperation at NDTV World a week share.
Seamless trade and strategic cross-border investments are real drivers of modern growth.
Understanding the past and present is the key to unlocking the future in India-Nepal tie.
Join me at NDTV World Anviksha, Ideas Across Border in Kathmandu on August 27th as we explore Nepal's role in changing the world. Don't miss it.
Arunesh Chawla, the DPUM Secretary, speaking exclusively with us on NDTV Profit. How do you see the momentum from here, and what's your reading on the expectations around the Hindustan Copper OFS?
This is in line with Prime Minister's vision of sharing the national wealth with ordinary investors, minority stakeholders and citizens of India. Hindustan Copper, has good futuristic investment plans. And if you see the market analysts and the feedback, this is a stock which is forecast to go upwards.
80,000 crores, Mr. Chawla, is the target. You've already hit 52,000 crores in FY27. Do you expect to comfortably exceed this target?
I would say
we are working hard and will achieve the target.
What is the dividend picture looking like for CPSEs?
Welcome back to NDTV Profit. You're watching Trending Stocks with me, Puneet Zaveri, as well as my co-anchor Sharad Dubey. We are coming to you live from the NDTV Profit Suzlon studios. Now, as we go through the day, Sharad, we've seen not so much of an action today. Yesterday's last hour gash essentially has been driving that momentum, but fizzling out today yet again.
Well, that's right. Good afternoon, Puneet, and you're bang on. The spike which we saw in the last trading session, that has been sold into, and right now we are near the day's low level when it comes to Nifty. But on the other hand, remember, September series has also started. A good note for Nifty Bank and all the other financial players as well. Let's pull in the Nifty Bank chart to show you how good momentum is there, and it's actually sustaining almost 400 points up. Nifty Bank is trading today. But let's look at the key factors to watch out for as we go into the first day of September series. Nifty remains volatile, little bit of off from its day's high levels. Nifty Bank is seeing a strong buying right now also, and it's going to the other sectors as well. Nifty support range is very important, 24,000 to 24,200. That is where we are expecting that range to come in, but small caps are doing really well. If you look at the breadth, there's a strong improvement coming in. Strong buying in the financials and the pharma segment, as I stated, but the sell-off continues in the IT stocks. A little bit of concern definitely there, but nothing major of sort. The global asset class sentiment has improved, and the risk of sentiment is slowly coming down as well. Also, apart from this, if you look at the key factors or the day today itself, remember, there's a fall in Brent crude and the global yields as well. That is where the macro support is coming in. And of course, today is a holiday for the money market, so there is no rupee update for you. And those adjustments in the equity will happen tomorrow as well. But today, important events are also there, which you should be there in your radar. This, of course, includes global earnings, NVIDIA, how the AI trade moves. Also, the US macro data would be there, where we'll understand where the yields move. So a lot of things at play. Post-market as also, and right now also, but as of now, some portions in the market, if you remove the financials, it's quite dull, but small caps are doing really well. Puneet.
Well, most certainly, but let's also pull up what we have on our watch list today as well. A couple of key counters buzzing on the back of volume. Kotak Mahindra Bank and HDFC Life both seeing volumes of 0.5 to 1 times its 30-day average. Stocks up almost 2 to 3% each on the back of that. What you have seen today is block deal galore, to say the least. VR Scientific, a 1390 crore block where the shares have changed hands. Grow had a 2,500 crore block today as well, and so did Welspun Corp of 1,433 crore. All of those three counters continue to be buzzing on the back of that, and all three are in the red because of the sustained pressure on the stock because of that too. What you have seen is that HAL is also in focus. They have signed a new pact with Safal for development of the Aravali engines, and hence that counter continues to be in the green. Gujarat Pipavav Port also up almost 2.8%. They've got a letter of comfort from the Gujarat Maritime Board, and hence the counter continues to be in focus. So is IOL Chemicals, up 6.5%. It's hit an all-time high, and so has TVS Sri Chakra. That is the other counter that we are also focusing on as well, on the back of both hitting an all-time high. But as we've seen, there have been two major trends in the markets. There have been block deals and there have been IPOs. So Gaja Alternate is the other counter that's in focus right now. Stocks up and continuing to be up almost 14 to 15%, similar to its listing as well. So that counter is on our focus as well. On the back of regulatory update, GMR Airport makes it to our list. It's down by just about 0.8% right now. But a new tariff order has been issued essentially for Hyderabad. You also had a note from Jeffries on the counter that while the tariff amount stays same, the timeline of that has changed, and hence could be a slight negative for GMR Airports, because now they'll have to wait for commissioning of those airports to get those incentives, and hence stock has corrected below that 100 mark now. And the final one on our radar is SEPC. Now the company has gotten an in-principle approval to enter the UAE petroleum trading market, and hence stock continues to be in the green as well. But Sharad, back to you. for some of these counters that make it to the rapid fire list?
Thanks a lot, Puneet, for that. Now we are joined in by Deven Mehta. Good afternoon, Deven. Always a pleasure to have you with us at NDTV Profit. We'll start our rapid fire round, and I'm going to talk about Kotak Mahindra Bank. Strong volumes, good buying coming across the banking names. But for Kotak Mahindra Bank, what are the key levels to watch out for? Deven.
Yeah, good afternoon. So, Kotak Mahindra Bank have given a good breakout above 410 levels, and we can see a good increase in volume. So, definitely the stock can further move towards 435, 445 levels. So, definitely hold with a stop loss of 397.
All right, next stock, HDFC Life. Some signs of accumulation coming in the counter. Is there a trade to be made here?
I think no, the structure is weak. We have seen the counter slipping downwards. It is just a bounce back from the support levels, but no fresh long should be added. In fact, one should try to exit on bounce around 590.
All right, apart from this, HCL Tech, what will be your view on that, the IT space? Sorry, the stock is HAL. Yeah, Deven, just stock is HAL. Interesting corporate announcement has come in. Stock is not doing much here. Is there any trade to be made, or you'll avoid this trade?
No, I think one should avoid this counter. The overall structure is positive. Those who are holding can hold with a stop loss of 4,800. But overall structure looks a bit sideways. On the higher side, 5,100 is the resistance.
And your views on IOL Chemical? The stock has been on a big rally over the last, you could say, 2 to 3 odd weeks. Good time to book some profits here, Deven?
No, I think we can witness a good breakout above 180 today. So if it closes above 180, I think one should keep trailing stop losses. 175 is the good support. 175 can be the stop loss. It can move towards 200. So trail stop loss and hold the counter.
Okay, hold the counter. Next one is GMR Airports. Adverse news flows coming in. Do you think there is a trade here? And if yes, what is there on the daily or the weekly charts suggesting the key levels?
No, I think on the daily chart it has breached 200 exponential moving average. It has slipped below 100. So overall, it is getting weaker. I think this can correct towards 95. So no long trades. In fact, if it gives a bounce towards 102, a short trade can be made at this level. On the higher side, 105 is a strong resistance. It can slip towards 95.
All right, another counter we talk about is Cipla. Today also the pharma companies are not doing that. You know, there is a mixed reactions coming in. But for Cipla, interesting development for Pithampur facility has come in. What do the brokerage talk about, or what's the actual impact? We're joined in by Varsha for that. Varsha, if you could just explain us.
Well, you know, on Friday we did report, NDTV reported the ongoing inspection of their Pithampur facility. Now that has been confirmed, officially confirmed by Cipla, and US FDA had inspected the facility from August 17 to 25, post which they've received 7 observations. Now, why this is important? One is, of course, the plant was already under OAI, which is again a negative thing. And the re-inspection was seen as a key, I would say, a key step towards regulatory clearance. So investors were expecting clearance of this plant, but that did not come. Instead, 7 observations were seen. But the positive point over here is the revenue dependence from this facility is minimal. Cipla had already transferred every product to US and Goa facility. So so Cipla is not much dependent when it comes to Pithampur facility. But yes, considering, you know, Indian facility and margin accretive, and investors were expecting clearance, so hence that did not come, and we received 7 observation, and hence you're seeing stock is down around 1% in trade.
Not much impact. Thanks a lot, Varsha, for that. And now we are joined in by our funda guest, Gaurang Shah. Good afternoon, Gaurang sir. It's always a pleasure to have you with us at NDTV Profit.
Thank you so much.
Varsha was discussing about Cipla. Doesn't seem much of a big negative news coming in. How do you see the stock and the pharma players as a whole? Because there's a good strength coming in.
Thank you, Sharath, for having me on the show. Good afternoon to all the viewers of NDTV Profit, to you and your entire team. Standard disclosure as mandatory. All recommendations that I'll be sharing with you this afternoon on your show, Sharath, they are part of our fundamental research team recommendation from a long-term point of view. Our company, Jiyojit, or myself, we do not have any kind of personal investments, no financial interest, no conflict of interest, but we share similar investment ideas with our clients. They might have their investment interests. Again, as a disclosure, we have a positive coverage on Cipla, and we believe that this on and off regulatory issues will be ironed out over a longer period of time. India happens to be a huge market for a lot of countries. And as we all know, Sharad, India is the pharmacy to the world. And this fact is going to remain for a very long time. Other than on and off tariff related news flows from US on rest of the world, and Indian pharma companies can have a short to medium term kind of an impact. But long term, we believe there are a lot of opportunities, not only in US, but minus the US, the rest of the world. If you have long term investment, continue to hold on in Cipla. If you want to add to it, in case if you have long term investment capital, you can add on dips. And if you want to make a fresh investment, we would advise that as well.
Got it. Got that view, Gaurang, and welcome to the show. But also putting focus on the auto pack as well, because you've seen a good trend in terms of the retail sales data for the month of August. Now it's important to mark it today as well, because today is one of the main days of the 10-day festival of Onam. Generally, a lot of purchases planned around the same as well. So when you look at the trends that have propped up in terms of the data from the Vahan portal, scooters and cars likely continuing to show that high single digit to low double digit growth. Now we're still yet to have the next 4 days in terms of sales performance, but when you compare it to the full month of August last year, that momentum seems to be good for now. What you are also seeing that today is one of the main days, as I mentioned, for Onam, and hence players like Maruti Suzuki, Hyundai will all continue to be in focus as well. A lot of purchases planned around such auspicious days, so that continues to be in focus as well. And what you have seen that generally when you look at the key player-wise data, Eicher as well as TVS for August have reported good numbers, and we'll get to that in just a bit. What you have seen also that capacity constraints for Tata Motors and M&M on the passenger vehicle side is having some bearing. So you're seeing those numbers yet not propped up, at least till date for the first 26 days that we've pulled the data out of. And Hyundai as well as Maruti Suzuki might see a bigger benefit because of having ample capacity at this point of time. But the other factor, that two-wheeler EV sales, that have continued to be robust at this particular point of time. So when you look at the data on your screen, that's for the car makers first. We've seen roughly 118,000 kind of, let's go back to the car ones first, passenger car data first. 118,000 vehicles already registered for Maruti Suzuki versus 138,000 for the full month of August 2025. You're seeing a bigger gap for M&M as well as Tata Motors PV, so we'll still wait of how that shapes up for this month. But for Hyundai as well, that gap is there. So the last 3 to 4 days, very crucial at this point of time. Let's also show you the two-wheeler data now. For TVS and Eicher, data visible on your screen now, both have actually seen very strong sales data. 2.75 lakh already registered for TVS versus 2.8 that they sold last year. Similar for Eicher as well, while for Hero and Bajaj, they will have to prop up. But finally, in terms of the EV sales momentum, a really stupendous growth that we're seeing yet again for the top two, Bajaj as well as for TVS Motor Company, both seeing almost a 50 to over 100% growth. Ether Energy currently is constrained by supplies as well as capacity, is showing a 20% growth, still decent at this point of time, while Ola Electric is at the bottom end of that spectrum. But Gaurang, very good afternoon to you. It's good to speak to you again. How are you looking at the current preference as we go into the higher second half of the year, a bigger base that will come through for GST as well? Do you prefer the two-wheeler players, or are you more bullish at this point of time for the passenger vehicle side of things?
Hi Puneet, good afternoon to you as well. Great speaking with you again and connecting with you. Let me add 3 more points, Puneet, to what you listed down. Pricing power has come back to the automobile manufacturing companies. We've seen price rise. There is waiting period, Puneet, in some of the models, depending upon which level you want to purchase a vehicle and from which company. And the third point, Puneet, is that we've seen extraordinary uptick in numbers as far as exports are concerned. Fourth and the most important point, Puneet, for auto sector is the number of free trade agreements and other agreements that India has signed with various countries. This will open up a huge opportunity for already doing well export market. My sense and our coverage is spread across, Puneet, to be very honest, two-wheelers, two-wheelers, three-wheelers, four-wheelers, commercial vehicle manufacturing companies, tractor, agri equipment manufacturing companies, and a pure EV play in form of Electra Green Tech. So I would say that depending upon your likes, I would put it that way, or what you favor the most. Plenty of opportunities are there, right from Bajaj Auto, TVS Motors, Hero Motocorp, Eicher Motors, as far as Royal Enfield is concerned, Eicher Trucks and JV with Volvo, pure commercial vehicle play in form of Ashok Leyland, M&M, Tata Motor Commercial Vehicle, Tata Motor Passenger Vehicle, and you have likes of Escorts, Kubota, and of course, like I mentioned, Electra Green Tech. I would not be having a bias towards any one side, but to make a point clear, I think the first positive traction that you will see in terms of situation turning around for good would be seen in the 2-stroke 3-wheeler pack. Then it will gradually grow upon entry level 4-wheelers, mid-size, high end, and so on and so forth. But the entire auto sector is poised to have a decent growth going forward.
Right. So there is a decent growth expectations from the auto sector. Interesting analysis on Vahan data by Puneet as well. But let's move our conversation to the consumption phase. And Honasa consumer is in focus. And interestingly, an important acquisition has been cancelled. Is it really that impactful, or is it just a negative sentiment, Mahima?
So it's largely just negative sentiment because there's no financial impact as such. But like you said, the company had announced in June that they were set to acquire around 58% Influence Pharma, which is a nutraceutical company, and this could have marked their foray into nutraceuticals. But now they've gone ahead and said that this is being terminated because the conditions required to complete the deal under share purchase agreement were not fulfilled. The details about this have not been given yet so far, so we don't know actually exactly what conditions were not fulfilled. But the original deal was for 135 odd crore, where around 58% was to be acquired immediately, and the rest 42% over the period of 5 to 7 odd years. Now, generally, this only means that sentimentally, Honasa will not have the immediate access to nutraceuticals as a space, and the company, however, has said that they remain open to both organic as well as inorganic expansion when it comes to nutraceutical as a space. So it's a wait and watch from here on.
Right. And of course, these valuations in D2C space are expensive also. But speaking of consumption, I know sadly today is not Friday, but Varun Beverages has come out with a very interesting news flow, Mahima. And what does it mean for the other peers? And I think the market is big enough for everyone.
Yeah, but so the news basically is that they have incorporated a subsidiary for the Alcobev space. Ready-to-drink Alcobev space is what they're focusing on. They've said this earlier also that they want to make their mark into the space, and that's why they've incorporated a new subsidiary, wholly owned subsidiary, which is Kiva Spirits and Company Limited. But I think the street is taking this with a pinch of salt because the stock is taking a knock of around 3% odd. Basically, this is going to be for ready-to-drink Alcobev, beverages and allied products in India. They've also appointed the managing director and CEO for the proposed subsidiary. Prathamesh Mishra is going to be the one leading this. So this actually means, and because he has a 30 year of experience in the consumer space, he's worked with Pernod Ricard, Diageo, etc. This means that they're very serious with regards to this business. Analysts are saying that it could pose some threat in terms of competition to the other already established players in the industry. But again, it's a wait and watch from here on for this one. And the second news for this one is also that they've gone ahead and expanded in Tunisia, where they've partnered, they've done a JV with, this is a 75% JV where Varun Beverages stake will be 75% and 25% will be with Bivanda, and the proposed share capital for this is going to be around 9 million Tunisian dollars. So that's the other update coming in for Varun Beverages. So both of these news updates are important for the company.
Thanks a lot, Mahima, for that, tracking the consumption space and keeping all of us busy. But Gaurang sir, we spoke about two counters. First is Honasa Consumer, a little bit of overhang, and Varun Beverages also. And there are other premium alcohol or the alcohol-related stocks also which are buzzing in trade. I wanted your views on both of these counters. How does it stack up?
So firstly on Honasa, as Mahima was mentioning, I don't think this is going to have any material impact or a long-lasting negative impact on the stock. Second point is that for the last 2 quarters, that is, Sharad, the last financial year, 4th quarter, and this financial year, 1st quarter, Honasa Consumer reported stellar set of numbers, better than what the street estimated. We don't have any specific coverage on Honasa, so I won't go into specific buy, sell, and hold. The way they have been able to reinvent themselves in a highly competitive platform, it will be very prudent for them to keep on reinventing such business strategies so that they can have a huge positive impact on the earnings. Having said that, it's highly competitive and at the same time, very difficult kind of a platform to exist on. Nevertheless, they have done quite well over the last 2 quarters. So I won't go into buy, sell, and hold, but it's a strong performer and hope this performance continues. On Varun Beverages and high spirit stroke alcohol beverages, we have a positive coverage, Sharad, as a disclosure on Varun Beverages from a long-term point of view, and we continue to maintain that. Amongst the pure high spirits play, we have a positive coverage on United Spirits. Why United Spirits? Because, Sharad, this company has got a diversified product profile at every level, lower end, entry level, mid-size, and high end. And the market share is quite good as far as United Spirits is concerned.
All right. Another counter we'd focus on is Cyient. Yesterday, of course, the company came out with its investor day, but today follow-up buying is happening here. But what are the key takeaways from it? We are joined in by Shivam for that. Shivam, the stock is up 7% now in trade. What are the key takeaways from this?
Well, a lot of positive inflows coming in from the investor day, starting with the total addressable market that has been increased from $100 billion to around 2.4 to 3.2 trillion dollars. Also, if we take a look at the focus of the company going forward in FY27, the focus will be mainly on transformation, and in FY28, the focus will be morely on scaling up the business. In terms of the semiconductor business, they have outlined its first standalone targets, which will be around 4 times of the revenue by FY31, and in terms of long-term ambition of the company aims to become the India's largest custom power semiconductor company. Also, the TAO digital solution that will add the Gen AI capability and cloud native engineering capabilities to the digital engineering and technology segment. Also, the company has launched this engine, which is a proprietary engineering intelligence platform that will aid in deploying the AI on a larger scale. Now, moving on to the brokerages, the Morgan Stanley has maintained an underweight rating with a target price of around 820 rupees and has stated that the execution remains a key to profitable growth and medium-term aspirations, and also the benefits of such changes will be more on the medium-term basis. JP Morgan has also come up with a report and has maintained an overweight rating with a target price of around 1050 and has stated that with this the predictable growth and profitability is more improved, and strategic focus has yielded some success, but it will require more effort going forward.
Thanks a lot, Shivam, for that detailed analysis. The stock is up 7% as well as we speak. Also, interestingly, let's talk about the credit card data which has come in the month of July. And I'd like to point out certain data points, especially HDFC, that continues to dominate the card issuance here. And the HDFC Bank added roughly 2.3 lakh cards on a month-on-month basis. This is one of the highest numbers coming in the issuances. ICICI is also gaining market share, but the growth remains weak if you compare that on a year-on-year basis. SBI Cards has shown the strongest spending momentum, especially on a YOY basis. The growth has been 22%. And Axis, however, there's a different side story to it, where it's witnessing slower card growth relative to its peers. Also, the spends remain volatile, but there is a strong month-to-month recovery coming in for ICICI, Kotak, Axis and Bank of Baroda. And overall credit cost as standing at around 1% up on a month-on-month basis, and the total card spends has gone up 3% on a month-on-month basis and roughly 7% on a year-on-year basis for the month of July. So we're talking about the credit card related stocks, and also Cyient as the focus earlier on with Shivam. Gaurang sir, if you could get our views in these counters.
Been positive on IT even when people wrote obituaries about IT sector, Sharad, if you remember some time back, because of IT and innovation that was coming through. We remain positive then, we remain positive now, we remain positive going into the future. As a disclosure, Cyient Limited features on the fundamental side coverage from a long-term point of view. We are positive on other small cap, mid cap, large cap stocks in the IT related universe. Yesterday, we had a news from TCS taking over a company or buying out a company. Before that, we had other companies mentioning about AI-related ventures that they have gone into. And more importantly, Sharad, in the first quarter earnings, we saw some decent numbers contributed to the top line and bottom line as far as AI activity is concerned. So we remain positive. On card-related themes that you were just discussing, so we remain positive on Axis Bank, HDFC Bank, ICICI Bank. Amongst the names that you mentioned, One more name that you mentioned, Sharad, was SBI Cards. On this also, we have since it's a separate business that they've listed, we remain positive on SBI Cards as well.
So that's the view coming in. Thanks a lot, Gaurang sir, for taking out your time and giving your fundamental views on the stocks as well. But right now we are out of time, and that's the end for trending stocks. And from me, Puneet, and the entire team who put this show together, it's a buy. Stay tuned to NDTV Profit for your profit.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे, केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
Let's build a staggered deployment approach and balance things out between aggressive and safe bets.
Ionic Wealth is your co-founder in your journey of wealth creation.
Let him get a second opinion first.
Sounds good. Ionic Wealth is putting the power of institutional grade AI in your pocket so you can get your second opinion first.
We are turning a page in Nepal's political economy. On the bedrock of good governance and bold reforms, we want to accelerate the pace of economic catch-up.
In rapidly changing global landscape, foreign policy must be anchored in strategic clarity and shared prosperity.
Hello, I'm Shashi Tharoor, and beyond statecraft and formal treaties lies the true heart of our partnership, our deeply rooted cultural diplomacy and people-to-people bonds.
I look forward to sharing our vision for industrial cooperation at NDTV World a week share.
Seamless trade and strategic cross-border investments are real drivers of modern growth.
Understanding the past and present is the key to unlocking the future in India-Nepal tie.
Join me at NDTP World Anveksha, Ideas Across Border in Kathmandu on August 27th as we explore Nepal's role in changing the world. Don't miss it.
Welcome to India's biggest grassroots innovation movement.
हमें ये पूरा रोड मैप क्लियर करके ज्यादा से ज्यादा लोगों तक पहुंचाना।
स्पंदन एक पोर्टेबल ECG मशीन है।
सिर्फ यहाँ पे थेरेपीज डिजाइन की गई है।
If you need any manufacturing help, do reach out and I'm more than happy to get your product to all of them.
हर हफ्ते आइडियाज के असली ग्रासरूट इनोवेटर दिखेंगे वंदे भारतम में। कमिंग सून ऑन NDTV Profit.
Arunesh Chawla, the DPOM Secretary, speaking exclusively with us on NDTV Profit. How do you see the momentum from here, and what's your reading on the expectations around the Hindustan Copper OFS?
This is in line with Prime Minister's vision of sharing the national wealth with ordinary investors, minority stakeholders and citizens of India. Hindustan Copper, has a good futuristic investment plan. And if you see the market analysts and the feedback, this is a stock which is forecast to go upward.
80,000 crores, Mr. Chawla, is the target. You've already hit 52,000 crores in FY27. Do you expect to comfortably exceed this target?
I would say we are working hard and will achieve the target.
What is the dividend picture looking like for CPSEs?
Dividends, we have a plan, but you will see that plan becoming active in the second half, which is when the dividends come in.
New rules of engagement. Ambitions crossing borders. Voices refusing to wait their turn. India is chasing gears. Faster, bolder, more restless. It doesn't stop. Neither do we. NDTV, when it really matters.
The news, Ayush. Since when do we do scripts? Fair point.
Picture this. The biggest stage. Floodlights. 4K, the works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings. Bro, where's the hook? Cross-platform, digital first, virality. Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original.
So Abhishek, firstly, congratulations on this plan to go public. We're really excited about this premium brand that's going public. But the first question that I wanted to ask you really is, your valuation and your price band also seem premium, just like your products, especially compared to listed peers already in the market who also have a better price to sales ratio as well, right? So what was the thinking behind the aggressive pricing that you set for your for the retail investors looking to participate in your IPO?
So I think, firstly, it's not our decision alone. I mean, obviously, it's a decision taken by the bankers in line with the institutional investors. But to answer your question, see, we have always been a high growth company. If you see the last 5 years growth, it's grown at over 60% CAGR. This platform was just an online only platform bought by us in February 2018. And since then, we have grown the business very rapidly. And also in an industry which otherwise was not perceived to be a very large industry. So I think a combination of the industry having a very high CAGR, and then on top of that, we are also growing very fast. So I think that definitely raises a very positive roadmap for the future growth as well. And given that the execution has been done also very sharply, I hope so we'll be able to live up to the expectations.
Your focus has been a lot on these large experience centers that you're setting up. You set up a few, and a large part of your expenses also going there. In fact, a large part of the IPO proceeds,
Yes.
over 360 crores around, is going towards that. That's a large amount of money for retail investors to say put into hard brick and mortar sort of businesses for a tech platform that's being raised. So how do you think retail investors can justify that sort of decision when they're putting in so much money into a brick and mortar operation?
See, I think Purnia's pop-up shop has been very different from the rest of the player. If you look at purely in terms of average order value, our average order value stands at 75,000 as on FY26, which is obviously a combination of online and retail both. And if you see in isolated geographies, let's say in India, the average order value from stores was 90,000, whereas online was 38,000. So if you similarly see other geographies, almost 2.5 times higher. So from our perspective, the business originally was just e-commerce and running the website and generating sales from there globally. It's also a large international business that we do. On the retail front, it's very different from traditional retail, because typically in retail you will have the depth of the stock, which means you walk in, you will see a product, you will have sizes, colorways, etc. Whereas we have breadth. So which means whether you walk into a store with 1,000 pieces, 2,000 or 5,000 pieces, any of our large format experience center, they all are different. And to compare, the website has 2 lakh plus designs. So as a customer, you have an ability to browse through a very wide assortment of products, make the decision. If you like something, you take as is. Otherwise, you place something which we call a back order, for which you pay 100 rupees upfront, and then we pay the designers later. So it has merits of both, hence we call it an omni-channel platform, and it should be evaluated that way. Now, in terms of your question of the money being going, see, idea is raising growth capital from markets is to deploy towards growth. The growth will is gonna come from 2 aspects, which is rental of or lease liabilities towards the experience centers, and it is gonna come from marketing. So we are deploying it just toward those 2 things, which are going to deliver the growth in the future.
Can I push you a little bit more on that and ask you about what are your growth projections for that broadly, even if you can't go into specifics? Because you spoke about growth, right? But over the last year, in fact, you saw 13% growth in revenue, but your losses ballooned almost by 100 crore. Now, the previous year, you explained that in your DRHP through ESOPs, right? Your general here also you had ESOPs, but smaller than what they were last year. So the larger chunk was the experience center. Now, these experience centers that you're saying, the growth that you're looking at, growth capital, what sort of projections do you have for how soon does this then turn around from a retail investor perspective into a profitable venture?
So if you see the past history also, as I said, like the business has grown from FY 2021 to from a 44-45 crores, if you see the industry overview section, to almost 500 crore plus. Once we crossed that 500 crore number, there was a change in strategy where we did not want to chase, growth from all directions. We reduced the number of brands from 1900 to 1100 on the website. The marketing spend was reduced from 54 to 30, and that led to basically eliminating of the long tail supply and long tail demand, which gave us a better chance to go deeper into the markets we operate, go deeper with the brands that we work, and go deeper with the customers that we work. So if you see any of these three transactions, which is, let's say, designer contribution, that has gone up. The customer average order value went up from 40,000 in 23 to almost 75,000 plus in 26. And that is where the business generates a leverage for future. Now, from that perspective, because this is the growth history, all these large 4 experience centers have opened in 26 itself. So the next few years, these are going to be delivering their full potential.
So is there a timeline in place for that?
So it's, see, the reason why we are not so fixated on the timeline, because if you see the past, we have always taken these decisions in terms of going ahead with consolidation and growth in parts of the journey. So like at 24 stage, the consolidation started. So that's where you see a lower growth on the top line and you see more deployment towards the expansion. Now going forward, because now the expansion part is done, now it's going to show the results. So from a financials perspective, I mean, the ESOP had similar costs in 25 and 26 both. And if you eliminate that and look at from the cash flow angle and not the PAT alone, then you will realize that the picture is very different. So if you look at the money spent at a cash flow basis, both before working capital changes and after, then the number is very small as compared to the losses.
Okay, but in terms of, I understand that, that's a very fair point to make. But what I'm asking about is, because you're putting so much money into this, generally investors, the question they will ask is, when do we see the return on this?
No, you're absolutely right. Yeah. So as I said, like basically for us historically, the losses were never a very large number because we have high gross margins. So we are able to manage in terms of operational profitability, correct, as you would call. The expenses has more been a part of growth, experiments, correct, and etc. Now from here on, these have been going deeper into the markets where we have a history. We have had large businesses. So if you take Mumbai as an example, where the Kalagoda store opened the Flora Fountain Fort store. So when we were taking that last year, a lot of people were surprised, how you can take such a large store, how you're going to be paying rent and etc. It's opened July last year. It has almost completed 1 full year. And if you see the financial numbers, then the Mumbai business, which was 120 crore odd, in FY25, grew to a 205 crore overnight. And this was by reduction of number of stores technically. So from our perspective, that first Kalagoda store showed the momentum. The Linking Road store has just opened, in March. Yeah. So this is the first full year where in Mumbai we operate both the large experience centers together.
Oh. Your New York.
So that also just opened last week of March. So basically from our perspective, there were 4 expansions. 2 of them opened sometimes in July, like Southex and Kalagoda, and these opened end of March. So this is the first full year with all these expansions that we have done. Now once you complete 27, then you know the benchmark and then you work towards that. So that is the whole ideology. But to be honest, this has always been the case. When you operate a business in uncharted territory, people are always like, okay, what's going to happen next? The comfort comes from the fact that it's a growing market. As I said, that luxury part of wedding and occasion wear is on the highest CAGR of 25%. And if you compare our positioning where we were in 2021 versus the market and where we are today versus the market, that would also show the market share has grown.
That right there is the word coming in from Purple Style Labs, and that's the one in focus. And you're watching Lunchtime Trades right here on NDTV Profit for your profit. Let's kickstart the show in terms of the other coverage as well. Talk about Gaja Capital that is in focus after making a very strong debut on the Lal Street, listing at a 16% premium. In fact, you do have Nimit, who's also caught up with UK Sinha, chairman of Gaja Capital, about the company's plans following the listing and the road going forward. Let's listen in.
Sir, as somebody who's written the book on AIF guidelines at SEBI, did you ever imagine this day would come, and is this closer to the date than you did imagine?
No, I didn't imagine it would come so soon. In 2012, we framed the AIF regulations, And after that, the industry has grown in a very, very big way, around 13.5 lakh crores. But listing is something which was always in my mind, whichever company, but Gaja has become the first one. And let us understand it in the context of development in the financial services market. If you go back to the reforms starting in 1991, broking firms were not listed. In fact, they were all proprietary and they got listed. Public sector banks were not listed, and SBI got listed, and then private sector banks also got listed. Then came the mutual funds. Mutual funds got listed in the country. There was a huge problem and difference of opinion about whether stock exchanges should get listed. In fact, one very eminent expert who was heading a committee on behalf of SEBI, he had recommended that stock exchanges should not get listed because they also perform the function of a first line of regulation, and only the 10-year government security yield, that is what should be allowed, and rest of it should go to the investor protection fund and things like that. But SEBI came out, fortunately during my time, with a set of regulations for a stock exchange listing. And one of the important landmark decision was that there would be no self-listing. So one exchange can get listed on the another exchange and things.
But that's what's happening. I mean, they're not, NSE's listing on the BSE, but they're permitted to trade. I mean, they're going for a permitted trade.
Yeah, but two exchanges are already listed. So the conflict of interest that was visualized in the minds of certain people, that how can you regulate yourself and also be profitable. So that SEBI solved in 2012 by coming out with a non-self-listing requirement. And that is doing very well. BSE is listing, MCX is listed. And the last frontier, you know, today even InvITs are listed.
Yeah.
REITs are listed. Depositories are listed. So this was the last frontier. And I'm very happy and I'm thankful to SEBI for taking this very progressive and far-reaching decision. And by doing this, we are now at par with the best in the world. What is going to happen now is that the capacity to raise money for the startup ecosystem, for innovation ecosystem, that will go up in a big way. For sake of comparison, in 2012, the mutual fund industry, the size was hardly 6 lakh crores. Today is 86 lakh crores. Yeah. So this development today of Gaja alternate asset management company getting listed will pave the way for others also to be able to raise money in India. One thing we must realize that over the past few years, foreign money into alternate management companies has slowed down. On the other hand, India is sitting with lot of savings, lot of surplus, which is looking to find an option. They are investing in mutual funds, they are investing in other areas, but alternates provide a very good option for them to do it. So my thinking is that this listing will change the face of a startup ecosystem in the country.
That's a good note to actually lead on. I also wanted to understand, an alternative investment fund has its own strategic goals and outcomes. Sometimes it makes bets that don't work out. Sometimes it makes long-term bets that don't pay out very soon, right? In an environment like that, in India, where the retail environment can be volatile and the markets react to your quarterly results, how does that change the management and investment style at something like Gaja or for others in the space that are looking to get listed? Does that change the way you think about profitability and about return?
This debate or this question is a very genuine and valid question. But let me remind you that the same question arose when the mutual fund industry was getting listed. At that time, the same problem came in. In fact, the first problem which had to be addressed by SEBI and the larger system was that where do the assets of the funds, the funds floated by schemes floated by the AMC will lies. And obviously, they are a separate entity. They lie elsewhere, and the parent company, the asset management company, lies somewhere else. The two are different, And there are enough safeguards built into the mutual fund regulations and other regulations such as the listing obligations and disclosure requirement regulation to take care of this. What happens with listing is that a company is submitting itself to larger discipline, bigger discipline. It is submitting itself voluntarily. Nobody forced Gaja to do that. It is submitting itself to transparency. And the long-term investors, who are the actual investors in alternate assets, they value these things. They value trust. And once you are able to generate that trust, people will come to you. And on the downstream, it will help our startup ecosystem in a big way.
Yeah, that point I absolutely take, that innovation funding, which is slowing down, globally funds coming to India slowing down, requires more Indian funding. And
we have enough resources, enough savings within the country, the family offices, the high net worth individuals, even people who have surplus money and who are investing in the mutual funds, they want an alternative. You can't invest everything in one asset class.
And SEBI, especially over the last year, has been very proactive in building and easing out bottlenecks for the AIF industry. In particular, the ease of doing business committee especially has been doing a lot to increase the participation of AIFs in the economy and to ease the setting up of AIFs itself. What do you think are the next regulatory challenges that exist for AIFs today in the industry, and what sort of regulatory measures do you recommend or do you see happening going forward?
You see, the alternate asset management industry has to follow a separate philosophy. For some reason, about 2, 3, 4 years back, SEBI had taken a different stand. And some of the requirements which SEBI at that time introduced were creating problem for the venture capital industry and downstream for the entire ecosystem. I'm happy that over the last 2 years, SEBI has been able to change its direction, change its course, and now it is actively encouraging it, because there are mechanisms for this alternate assets industry to have self-control and also to have control through the mechanism of their private placement memoranda and all the rest of the things which they can do. So I'm very happy that it is happening. If you are talking about the next level of reforms or next level of things which can happen, I think the story about Indian entrepreneurship, the startup system, and the alternate industry now getting listed, this story has to be told outside India as well. I mentioned a short while ago that the foreign money, the inflow has come down. Right now, we are very happy that we can do this with the domestic money. But if you look at the medium to long term, we need both. We can't survive only on the domestic money. So, the regulatory system in the country, the story about what the alternate asset industry has done, what multiples it has been able to deliver, what innovation it has been able to foster. If these things are, these stories are passed on, and I think regulators should also take an interest in this, in spreading this message outside India.
Okay, I'll take that. For something like Gaja Capital, one of the key profit areas has been carried interest, right? And carried interest, as opposed to management fee, is not really as predictable as something that can come in regularly in the form of management fee. Carried interest depends on the market, how everything is performing. Do you see the sustained level of revenue that Gaja is seeing through carried interests continuing and becoming their key source of revenue, or do you see that management fee is going to be the key source of more predictable revenue?
As I speak to you, Gaja is listed, so I have to be very careful about making a statement which can be counted as future predictions. But I want you and your viewers to understand that an alternate asset class in India has 3 sources of income. One is, of course, the fees, management fees. Second is the carry part. And the third is the sponsor commitment. what this listing will help Gaja is that they will have enough of firepower to make their sponsor commitments. Imagine with so much of fresh money being raised, they will be in a much better position to raise funds through the lure of their own sponsor funds.
Other than that, right there is the word coming in from Gaja Capital that has had a decent listing on the bourses today. But let's also talk about what else is happening right now. When you talk about crude prices, that's where you're seeing some pressure for a third straight day in a row. And the food basket, on the other hand, is actually heating up. So you're talking about onions, basmati and coffee that are adding to this pressure, while sugar offering some bit of relief, which comes in with a caveat. We do have Vijay Sardana, agri-business and food policy expert, joining us right now on the show. Mr. Sardana, thank you so much for waiting by, and thank you so much for taking time out and joining us this afternoon. First things first, just wanted to try and understand what you think about the rise in onion prices and also the Kanda Express right now. Do you think that the government measures to use the buffer stock are going to be helping in a substantial manner going forward?
This is an important development for two reasons. One, sometimes we feel that farmers are suffering because there is no price realization for the farmers. There is a price crash. On the other side, we are finding acute, sharp rise of prices for the consumers. Now, this clearly indicates that there is a serious communication gap between the production system as well as the consumption markets. It means the data, what we are producing and what is to be consumed in India, this is not clearly available. So first of all, my request to the government is that please ensure and create a proper system so that people know what is the consumption of onion in the country and in which place. That is first thing. Number two, we do not have infrastructure for storage. So what happens at the peak time, prices crash in the production area, but consumption area, the prices remain. If I say that, just reflect back. When the onions are selling at 2 rupees or 3 rupees in Nasik, in Delhi, we are still paying 50 rupees or 40 rupees or 30 rupees. This clearly shows that there is a serious, I will say that efficiency gaps, both information efficiency as well as logistics efficiency to handle this scenario. Third important aspect is that government agencies, if for example like NAFED or FCI, they should create storage hubs in every state, not just in few locations, so that if they know what is the consumption, they should shift the material at the time of peak season itself to the respective warehouses, so that there is no need to wait for the crisis and then do the shifting. So what we need in this country is overall food security management, which is missing.
No, absolutely. And that just about brilliantly sums up everything that we had in mind when it comes to some of those interventions that might be required at this point. But also wanted to look at the bigger picture here. You do have basmati, for which weather is now playing spoil sport. Do you think that it's slowly becoming the single biggest risk to India's food inflation outlook right now?
See, climate change is a reality.
Yes.
And all our research of seeds and even insect behavior is changing because of change in climate. We have done research on genetic material, which we call seeds. Suppose that seed was suitable that we grow in the month of, for example, in the month of October, and we do harvesting in the month of, suppose, March. But if moisture, temperature, other things are changing and it is shifting by 1 month, either we have to have a variety which can be shifted, or we should come out with new varieties which are short duration varieties, so that instead of taking 120 days, we get the same performance in 90 days. So there is a lot of challenge for the researchers when it comes to climate change. Because not only seed, but insect behavior will also change, disease will also change. So there are many things which are there in the scientific challenge. And I think there is a serious need to relook into what we do in agriculture research.
No, absolutely, and the research needs to be looked at in a very different way, and that's the clear takeaway coming in here. Lastly, just before we let you go, a quick answer on this one. I wanted about the food commodities that consumers could possibly be worried about next. Coffee's joined the list, you've got onions there, and basmati rice. Anything else that you're tracking very closely?
If you ask me honestly, I'm worried for everything.
Okay.
In India, we are short of edible oils. We are short of protein. Only thing which we have surplus is carbohydrate, that is paddy, wheat, sugar, you can say potato, and also maize. Now, we are finding crisis in case of potato of a different nature. The prices are crashing. On the other side, in sugar, it is the reverse way. Prices are shooting up. Now, look at the scenario. This is happening every year with one crop or the other. And that is what I'm saying, that agriculture food security policy is missing in this country. As a media house, have you seen the food security policy of the country? Have you seen the food security policy of the states? We don't have. Unless we know what is required from where we will source, we cannot plan logistics, we cannot plan infrastructure, we cannot plan technology, we cannot plan variety.
Right.
So if we do not have plan, how you are going to address the challenge?
No, absolutely. And Mr. Sardana, thank you so much for taking time out and joining us this afternoon. Those are some very great inputs about the need for transparency here and for greater research to be able to fill some of those gaps that we've highlighted for you as well. Thank you so much for taking time out and joining us this afternoon. But with that, we're completely out of time on this edition of the show. Thank you so much for tuning in.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
When outcomes matter, you trust accuracy and precision every time. Because cricket ho ya medical care, trust is earned with consistency. Welcome to Lord's Med. Empowering health, touching lives. Accuracy that shows up when it counts the most. State-of-the-art innovation, made in India. Or trust, puri duniya ka. When it comes to medical care, choose Lord's Universe. Precision with care.
Lord's Mark Industries, हमेशा आपके साथ.
Factoring in LRS, the route, and the currency hedge, here's your best move.
Ionic Wealth is your co-founder in your journey of wealth creation.
What's the rush? Let them get a second opinion first.
Yeah, this works.
Ionic Wealth is putting the power of institutional grade AI in your pocket so you can get your second opinion first.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी।
3 decades of watching the world change. Of asking the questions that couldn't wait. Of telling the stories that couldn't be ignored. Of holding the line when it mattered most. Times change, our purpose doesn't. NDTV 24/7 is now NDTV when it really matters.
Welcome to India's biggest grassroots innovation movement.
Vande Bharatam, Bharatam, Vande Bharatam.
हमें ये पूरा रोड मैप क्लियर करके ज्यादा से ज्यादा लोगों तक पहुंचाना।
स्पंदन एक पोर्टेबल ईसीजी मशीन है।
सिर्फ यहाँ पे थेरेपीज डिजाइन की गई है।
If you need any manufacturing help, do reach out and I'm more than happy to get your product to all of them.
हर हफ्ते आइडियाज के असली ग्रास रूट इनोवेटर दिखेंगे वंदे भारतम में। कमिंग सून ऑन NDTV Profit.
Arunesh Chawla, the DPUMP Secretary, speaking exclusively with us on NDTV Profit. How do you see the momentum from here, and what's your reading on the expectations around the Hindustan Copper OFS?
This is in line with Prime Minister's vision of sharing the national wealth with ordinary investors, minority stakeholders and citizens of India. Hindustan Copper, has good futuristic investment plans. And if you see the market analysts and the feedback, this is a stock which is forecast to go upward.
80,000 crores, Mr. Chawla, is the target. You've already hit 52,000 crores in FY27. Do you expect to comfortably exceed this target?
I would say we are working hard and will achieve the target.
What is the dividend picture looking like for CPSEs?
Dividends, we have a plan, but you will see that plan becoming active in the second half, which is when the dividends come in.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow.
Welcome, you're watching NDTV Profit. This is Small Cap Buzzers. I am Mahima Vachharani, and with me as always is Soumit Sarkar. And Lupin is something that we're putting spotlight on. It's in focus since the company has won the court battle against Vertex. And Varsha, who tracks this very closely, has the first cut with us to tell us exactly what's happened here. Varsha?
Well, a patent hurdle, I would say, has been clear, that overhang has been removed, and hence you're seeing stock is up almost to 2.5% in trade. Now Lupin wins court battle against Vertex. Court says Lupin's generic does not infringe 4 patents, and the patents were related to Calideco. Now what does this mean? Well, Lupin is developing generic Calideco, which is nothing but a drug which is used to treat fibrosis. Now Lupin already has tentative US FDA approval, and this removes removes a major hurdle for launch. Now how big is this? The opportunity? The targeted Calideco oral, now I'm talking about the oral granules, have almost 51 million US dollars sales, which is around 430 to 450 odd crore annual market, and Lupin can capture a share of this market. But the important point over here is the exclusivity. So Lupin is first to file for the generic and could get 180 days exclusivity, and which is nothing but a potential early mover advantage into the US, which Lupin has.
Varsha, thank you so much for putting that into perspective. The stock is seeing a spike coming in. Let's try to pull the stock up and see as to what it's doing as of now. Yes, there you go. The sudden spike that's come in is after that news. Gradually, in fact, we were seeing that spike coming in, but slightly off from the day's high point is what we're seeing. But it is for sure a positive development coming in for Lupin. But let's now take a look at what are we going to talk about on the show today. What is it that makes it to the cut of small cap buzzers? The first one is going to be Technocraft Ventures. We're going to speak to the management. Since the recent listing, the stock is up almost 19%, and we'll have to see as to how the outlook of the company goes, and we'll speak to the management very soon. The other one is Federal Mogul. Now this is a very interesting one. The stock has been up 50% in the past 5 months. There's a board meet which is going to happen in dividend. We'll also try to understand if they give out entire dividend and what is that scenario going to look like, because the company is sitting on a cash of 800 crores with a market cap of 3,000 crores. So very interesting case study here. The next one is going to be Advait Energy, where the company has received an order from Madhya Pradesh Power Transmission. Overall, if you see year to date, the stock has not done anything. It's down in fact by 43%. So anybody who is invested in this one has seen that pain point coming in. Mangal Electric is the last one on the list, where overall the stock volumes are trading at 5 times its 30-day moving average, and stock volumes are also up since the past 2 days, since after a really long time. And RSI has also just touched 60. 60. So we'll try to decode as to what's working with this company and whether technicals are positioning in favor of the company or not. So that's everything that we're going to talk about in the show today. But like I said, the first conversation that we're going to have is going to be with Technocraft Ventures. We'll try to understand as to what the way forward of the company looks like, and to take that conversation ahead, I'm now joined by Karthikeya Tyagi, who's the whole-time director and CFO at Technocraft Ventures, joining us now. Mr. Tyagi, thank you so much for taking out the time. Very good afternoon to you, Mahima this side. My first question to you is going to be about the order book, because a strong order book visibility is what you have, 1300 plus crore of order book, which is almost 4 times your FY26 revenue. Just wanted more sense as to what is the timeline for execution of this 1300 crore order book, and the sub part of this question would be as to how much order inflow are you expecting overall in FY27 if there's an internal target place.
Good afternoon, everyone. First of all, I would like to thank all the investors, the faith they have shown us and the response that they have given us in the markets. As you asked about the order book, it stood around 1350 at the time we filed the DRHP, and one of the orders that was pipeline has now been converted into an award. So the order book is around 1500 crores. And out of that, 98% is from wastewater treatment projects under the schemes of Amrut, Namami Gange, and Amrut 2.0. So going forward, we are looking to add around, I think in this financial year, we should be able to add around 500, 600 crores in the order book itself. And if you talk about the execution timeline for those projects, all of these government projects have a stipulated timeline for 2 years, but sometimes there are some delays that are beyond the control of the company. So it takes around 2 to 3 years for the completion of these projects.
Okay, understood. So then just wanted a sense in terms of how you are expecting FY27 order book conversion looking like, because FY26 you ended with a top line of 345 crore. So how much of this 1500 crore order book that you're saying will be converted into top line for FY27?
Ma'am, I can't give you exact figures because that's forward-looking. And what we could say is that you could take a look at our order book, take a sense of the stipulated timeline of the project that we have in our order book, and do some reverse mathematics, and you could get a sense of what our top line could be looking at the end of this year. This year, we would be expecting to see more growth than we have seen in the past 3-4 years, because the order book is so robust. Earlier, it was 25% CAGR, and that's what we eventually believe would be the standard. But this year, I think it would be a little bit more than that.
So a little bit more could be 30%?
You could say 30. Yeah.
All right. Okay. The other aspect is that, right now in terms of your order book, water and wastewater contributes around 85%, of the order book as well as the top line. So in terms of going forward, when you say 500 crores of more order wins is what you're expecting, is going to be in the same segment, or do you think you see yourself diversifying into other EPC segments or roads for that matter?
So our company is a multidisciplinary infrastructure development company executing B2G projects. We have executed projects in road and highways in the past as well, electricity and transmission as well. So the way it works with government projects is that you need pre-qualification criteria to qualify for projects in the future. So just to keep our experiences alive, we can expect to take on projects in road and electricity as well, so that we don't get outside of that field completely. But our focus would be towards wastewater treatment.
And because your concentration is towards government projects, do you think that you will be open to taking private projects also in future? And if yes, if at all, is there a mix in mind? Because from what I understand, that margins could be better if you move towards private orders as well.
So the schemes that we are executing, so wastewater treatment is mainly charity work, and on the scale that it is that we are executing, private contracts are very small quantum as compared to the government projects that are coming out. For example, the average contract that we are executing is in the range of 250-300 crores. The government is the only one putting out such big contracts, and it may be PSUs. We don't see money opportunities in the segment of wastewater treatment in the private sector. So at the moment, we don't have any plans to expand into the private sector.
Okay. Mr. Tyagi, the other aspect is with regards to EBITDA margins, because in FY26, your EBITDA margins jumped to around 20.9 versus that of 17.8 in FY25, if I'm not wrong. What has led to that, and what is the stable range of margins that you're looking at? Because for you, it depends on project to project that you get for government, if I'm not wrong. So for FY27, what is the stable range of margins that you'll be looking at?
So the improving trend that you have seen over the past few years, that is mainly attributed to the fact that we have concentrated and moved towards the wastewater treatment segment. And as our experience is growing, as we have executed larger projects, we are also qualified for bidding for larger value contracts. So as the quantum and our ticket size, the value of the contracts that we are executing is growing, and we have concentrated in the field of wastewater treatment. That's why you can see that trend growing. For FY27, I think it would be around the same range, maybe 1-2% up down. I can't say, but I think we could expect it to be relatively same.
Just wanted to check with you earlier. There were some delays in orders when it comes to Jal Jeevan Mission. Has that been sorted now, and are the order flows very much in line and timely?
So, sir, I would like to establish that we do not execute Jal Jeevan Mission contracts because those are fresh water contracts, distribution of water supply. We are executing wastewater treatment and management contracts, and those fall under different streams that are Namami Gange and Amrut 2.0. But I have heard there were some delays in those, but we have not faced any such delays in the execution and allotment of Amrut, Namami Gange, and Amrut 2.0 contracts.
Okay, but are you completely relying on government contracts, or are there even any private contracts that you are bidding for? Anything that you're expecting to come in?
So there are loads of opportunities in the government sector at the moment. Right now, in terms of wastewater treatment, even tier 1 and tier 2 cities have not been exhausted completely. We can't even think about the tier 3 and the villages, the situation that is there. So currently, there's a lot of projects coming out, and there are a lot of bids in pipeline. So we don't expect to move to the private sector at the moment.
Okay, and so you're not looking into private orders at all. Government orders is your complete focus. But then, are you facing any delays in payments, any delays in receivables, anything on that front, or are payments and deliveries pretty much on time?
I wouldn't call it a delay, but the bill certification process with the government client, it takes some time. So our payment cycle is around 90 to 120 days. And that's kind of the standard. Last year, due to the West Asia war situation, there might have been some more delay than we had expected. But as you can see from our balance sheet, over 6 months, our debtors are only around 2 crores or odd crore, I think, something like that. So payments realize, they take some time, 90 to 120 days, but they do realize.
Okay, just one last question from my end with regards to O&M, because it's a very small part of the business right now, but in the next 3 to 5 years, do you think this could meaningfully contribute to your overall revenue? And if yes, from that 1.5, 1.7 odd % of FY26 revenue, what can that number look like?
So our current order book, which stands around 1,500 crore, out of that around 120 crores is O&M. And as these projects will be completed, the projects that we are currently executing, they will transition into the operation and maintenance phase. And the duration for that ranges around 5 to 15 years, depending on the contract. And going forward, also the contracts that we are currently bidding for, most of the contracts come with the O&M portion with it as well. So I think the quantum will only increase in the future. And the order book that you see for the O&M right now, currently those projects are in the construction phase, and as soon as the construction is finished, the O&M phase will start as well.
All right. Okay, Mr. Dagi, thank you so much for putting that into perspective, and all the best for FY27. We look forward to speaking to you post Q2 earnings as well. Thank you so much.
Thank you so much.
All right, with that, let me also welcome in our guest for the day, Lancelot Dikuna, CIO at ValueX Wealth Connect, joining us now. Lancelot, a very good afternoon to you, and thank you so much for taking out the time. You probably must have heard the management. Any quick take on Technograph Ventures?
So, I think, yes, it is an interesting business because, the government's focus on wastewater management has been, a good thing, because a lot of these cities, etc., are working on the waste management part of it. And that bodes well for them in terms of increasing order book. However, the stock is trading at almost 31 times its earnings. And, if you look at the market cap, it's about 1,400 crores or 1,350 market cap. And the revenue is about 375 crores last year. Maybe this year they'll do about 550 crores. So if you consider, it's trading at almost like 3 to 4 times its, sales, which is for an infrastructure project a little bit fully priced in a sense, I would say. So maybe one can look at waiting for any kind of price decline, and that would give you an opportunity to look at this project, this company, because it is an interesting space with focus on the wastewater management. And while there are larger competitors in that space, they seem to have got the execution as well, right? And they are getting good orders.
Okay. Well, with that, let's slip into a short break and we'll be back with more small cap news on the other side.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी.
Let's build a staggered deployment approach and balance things out between aggressive and safe bets.
Ionic Wealth is your co-founder in your journey of wealth creation.
Let him get a second opinion first.
Sounds good.
Ionic Wealth is putting the power of institutional grade AI in your pocket so you can get your second opinion first.
From bullet trains to Suzuki, Toyota and Sony, Japan is already deeply integrated into India's growth story. Now, after Prime Minister Modi and Prime Minister Takaichi's summit, Commerce Minister Piyush Goyal brings 200 plus business leaders to Japan. Can the next phase of the India-Japan trade story be around semiconductors, manufacturing, investments and artificial intelligence? Join me, Rishabh Bhatnagar, as I travel with the Commerce Minister to Tokyo, Osaka and Nagoya to figure out where the next level of the India-Japan story lies.
Welcome to India's biggest grassroots innovation movement.
हमें ये पूरा रोड मैप क्लियर करके ज्यादा से ज्यादा लोगों तक पहुंचाना.
स्पंदन एक पोर्टेबल ECG मशीन है.
सिर्फ यहाँ पे थेरेपीज डिजाइन की गई है.
If you need any manufacturing help, do reach out and I'm more than happy to get your product to all of them.
हर हफ्ते आइडियाज के असली ग्रास रूट इनोवेटर दिखेंगे वंदे भारतम में. Coming soon on NDTV Profit.
Arunesh Chawla, the DPUM Secretary, speaking exclusively with us on NDTV Profit. How do you see the momentum from here and what's your reading on the expectations around the Hindustan Copper OFS?
This is in line with Prime Minister's vision of sharing the national wealth with ordinary investors, minority stakeholders and citizens of India. Hindustan Copper, has good futuristic investment plans. And if you see the market analysts and the feedback, this is a stock which is forecast to go upward.
80,000 crores.
Welcome back. You're watching Small Cap Buzzers on NDTV Profit. The next stock that we'll be talking about is Federal Mogul. Now, an interesting counter here. The most interesting part is the cash that the company has in its book. It has more than 800 crore rupees of cash for a market capitalization of just 3,000 crore rupees. What could be the possibility of this cash utilization? Let's get in Puneet to understand more.
Thank you for that. The last 2 days, a very strong up move, already anticipating one of those moves, Somit. We've seen a 15% move over the last 2 days for this counter. Last year or so has been largely flattish and almost doubled in the last 5 years as well. But there is an important board meet on 27th August, which is tomorrow, and hence the buzz on the street as well for this counter. Now, they are looking to consider declaration of a dividend, is what the company has said. And essentially, this could be a big one as well, because the last time they gave a dividend was way back in 2005. So something could be on the cards as well in terms of dividend payments. What could be the dividend is something to watch out for. 3,100 crores of market cap for the company. They have the current reserves of almost 1,381 crores with a cash of, as you mentioned, 800 odd crores as well. So when you look at a scenario analysis, even if the whole FY26 profits, which was of 178 crores, is distributed as dividend, that could amount to roughly 32 rupees as dividend. If they want to go over and above that, a 10% clause could be applicable as 10% of reserves under section 123, and that could amount to roughly 25 rupees. So including both, you could have a dividend between 50 to 60 rupees at this point of time, once approved tomorrow, and if so approved tomorrow as well. But apart from that also, there are some interesting factors about this counter. Way back in 2018, Tenneco Global, which also has a listed Indian peer, now actually acquired Federal Mogul globally, and along with that came the Indian entity as well. Since then, there were a lot of tussle in terms of valuations. The open offer earlier was done at 400 rupees. Shareholders rejected that, and eventually that settled at roughly around 600 odd rupees, but still below what the shareholders had requested, between 800 to almost 1800 rupees. So it is one of the cheaper auto ancillary companies, trades at 17 times the current valuations, but growth has been absent, and hence the current valuation picture as well. The 10-year sales growth is just around 4% for the company. Profitability is bigger, but continues to be largely one where the growth has been absent for the company. This dividend move could be big, and that's something to watch out for the counter tomorrow.
Lancelot, any view on this? 830 crore is the cash that they have. Can they distribute the entire amount, or there are some limits to that? How are you looking at this counter?
So I think, if you look at the distribution policy, they can look at distributing, whatever the current year's profit by way of dividend, and even some part of the past profits can also be given as dividend. But one actually invests in stock, not really for the dividend, but more for the growth. And this company has not seen much revenue growth while it has maintained its margins, at almost the 20%, 20 to 25% levels, and has had a decent profitability throughout consistently. But since there is not much growth, I think, even though it trades at almost only 17 times earnings, you need to pay for growth and not really for dividends. So while on a dividend yield might become attractive for 1 year, but on a regular basis, you may find it difficult to sustain growth.
Okay, all right. So that's the view coming in on Federal Mogul. The stock up almost 6% as we speak. But the other one that we're putting spotlight on is Advait Energy. Now, this one is in focus on the back of an order win that, it has won from the Madhya Pradesh, power transmission. And, Varsha is going to give us more perspective on what this order means for the company, and also with regards to how financials fare for this one. Varsha?
Well, the order is for emergency restoration system, and this is a 134 crore order which needs to be executed in next 18 months, and hence we are seeing the stock is in focus. Well, this company started as a power transmission solution company, now expanding into green hydrogen and battery energy storage system. Well, this manufactures OPGV cables, wires and ERS system. They are betting big when it comes to green hydrogen and battery storage system. They are building electrolyzer manufacturing business and also expanding into BESS. Now onto the green hydrogen, well, they have early mover advantage. They commission India's first operational green hydrogen microgrid, and they're also participating for 150-200 megawatt of electrolyzers opportunities. Lastly, they're also, they have a massive capacity expansion in electrolyzers, in specialized conductors, and of course a battery energy storage system.
Okay, Varsha, thank you so much for giving us those details on Advait Energy. Lancelot, any quick view on this one? It's given off, gains from the day's high point, but anything that you make of the fundamentals?
So Mahima, it is actually trading at almost 41 times its earnings. So that is an expensive, expensive multiple to pay for an engineering implementer or engineering company. So I think that one has to wait. If at all one really wants to look at investing in this company, that has to become reasonable in price, and then one can look at it. Otherwise, there are so many uncertainties over growth and longer term growth that could impact the risk reward return ratio, and considering that may not give you, even if you look at buying at around these levels, may not give you the returns that you expect, and you could possibly see if there is a quarter or two of negative news or negative performance that could result in severe re-rating on the downside.
The next stock that we'll be talking about is Mangal Electrical. Now, stock has been buzzing in trade today, up around 8%, but in the last one, the stock has remained largely flat. What could be the potential reason behind today's move? Let's get in Shivam to understand more.
Well, yes, Mangalam Electricals, the stock has been advancing for the second session and has been up nearly 14% in last 2 days. In fact, the volumes have also been growing at 5 times when compared to its 30-day average. Now, the company is into manufacturing transformer components and transformers for the power infrastructure, and also provides the EPC services for setting up electrical solutions. And if we look at the uptake in today's session, that could be due to the improvement in the CRGO prices, which is cold rolled steel solutions, which is mainly the raw material for the company and which is mainly used in the transformer manufacturing. So in terms of revenues, that was driven by a healthy volume growth, but the top line that was partly offset by the lower prices of CRGO, and also the realizations has been seeing a downtick of around 18% in Q1. In terms of volume growth, that has been up around 32% for CRGO, but the operating performance that has improved due to better cost management. And in terms of transformation business also, we have seen higher contribution in this quarter. In terms of revenue mix, the transformer components that has contributed around 66.7% versus 84.8% in previous quarter. So there has been a decline in this segment, while the transformer and EPC and other segments have gained the revenue mix contribution. So overall, the revenue mix has also been diversified in Q1 of FY27, and going forward, the CRGO prices that is going to recover or not is going to be in question and should be looked after for. And also the margin trajectory, once the transformer capex, which is scheduled for completion by Q4 of FY27, that is also one of the key monitorables that we should look for.
Right, Lancelot, any view on Mangal Electricals?
So if you look at their business, it's basically processing transformer components, coils, etc. Which there are a lot of competition in the industry. It's also a low margin business, so they are generating around 8-9% margin. If you look at quarterly, also this quarter the margins have actually remained flat to slightly negative as compared to the previous years. So the business does, while there is growth in the business, we haven't seen. There could be some amount of price growth, but very little in terms of volume growth, unless the stock, unless the company grows at least 30-35%, given that it's a small cap, its business has to grow significantly for it to justify a higher valuation. Otherwise, it seems to be reasonably priced at this point in time.
Okay, all right. So that's a comprehensive view coming in for Mangal Electric. Thank you so much, Lancelot, for giving us that perspective on all the small cap buzzers that we took on the show. But with that, completely out of time on this edition of Small Cap Buzzers. But up next is Ask Profit, where you can go ahead and ask all your stock-related questions. So do stay tuned in.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
Factoring in LRS, the route, and the currency hedge, here's your best move.
Ionic Wealth is your co-founder in your journey of wealth creation.
What's the rush? Let them get a second opinion first.
Yeah, this works.
Ionic Wealth is putting the power of institutional grade AI in your pocket, so you can get your second opinion first.
We are turning a page in Nepal's political economy. On the bedrock of good governance and bold reforms, we want to accelerate the pace of economic catch-up.
In rapidly changing global landscape, foreign policy must be anchored in strategic clarity and shared prosperity.
Under Shashi Tharoor and beyond statecraft and formal treaties lies the true heart of our partnership, our deeply rooted cultural diplomacy and people-to-people bonds.
I look forward to sharing our vision for industrial cooperation at NDTV World a week share.
Seamless trade and strategic cross-border investments are real drivers of modern growth.
Understanding the past and present is the key to unlocking the future in India-Nepal tie.
Join me at NDTV World Anveksha Ideas Across Border in Kathmandu on August 27th as we explore Nepal's role in changing the world. Don't miss it.
From bullet trains to Suzuki, Toyota and Sony, Japan is already deeply integrated into India's growth story. Now, after Prime Minister Modi and Prime Minister Takaichi's summit, Commerce Minister Piyush Goyal brings 200 plus business leaders to Japan. Can the next phase of the India-Japan trade story be around semiconductors, manufacturing, investments and artificial intelligence? Join me, Rishabh Bhatnagar, as I travel with the Commerce Minister to Tokyo, Osaka and Nagoya to figure out where the next level of the India-Japan story lies.
Arunesh Chawla, the DPOM Secretary, speaking exclusively with us on NDTV Profit. How do you see the momentum from here, and what's your reading on the expectations around the Hindustan Copper OFS?
This is in line with Prime Minister's vision of sharing the national wealth with ordinary investors, minority stakeholders and citizens of India. Hindustan Copper, has a good futuristic investment plans. And if you see the market analysts and the feedback, this is a stock which is forecast to go upward.
80,000 crores, Mr. Chawla, is the...
Hello and welcome back to NDTV Profit. You're watching Ask Profit, the afternoon edition of the show. My name is Puneet Zaveri. And over the next 30 minutes, we'll try and get to all your stock-related queries. So if you haven't already done so, reach out to us on WhatsApp. The numbers flashing on the top of your screen. Also call us for your stock-related queries to speak to our guest as well. But a very quick check, three important things yet again that you're seeing for the markets. For the benchmark indices, yesterday you did see a good buying at the end in the last 15 minutes of cash as well. A lot of that sell-off being visible today right now on the screen as well. So you're not seeing too much action. Let's look at the heat map also for the Nifty 50 if we can. Because again, very individual specific stocks only doing so much today. You're seeing good moves today on Kotak Mahindra Bank as well as HDFC Life. Both are the top gainers. So is the Axis Bank actually from that space. While within the IT space, Tech Mahindra and Infosys, both being the biggest losers for now. Also look at the advanced decline ratio for the broader markets as well, because while over the last week or so there has been consistent pressure on the broader markets, today though that was a very picture perfect in the morning. Now those lines getting closer at this point of time, but still 1600 stocks continuing to advance versus almost 1170 stocks that are declining in trade as well. But also the mid cap and the small cap reflecting this divergence that you're currently seeing on trade as well. The mid cap 150 is up in the green but has sold off from the day's high, and the small cap 250 on the other hand has seen consistent buying. So that dichotomy clearly visible on both these indexes right now. But also the BSE 500. You're seeing a lot of action today in the broader markets. We spoke about the small caps too. KP Global, Quest Corp are two stocks which are topping the BSE 500. Cyient, on the back of good commentary in the analyst meet yesterday, is up for the second consecutive day as well. You already started getting a lot of reaction yesterday in trade in the last hour. Hindustan Zinc as well as IDBI Bank are some of the other gainers. Under pressure is Varun Beverages today, and we'll put more focus on the stock in the closing shows as well. But overall, you're seeing a lot of action in the small caps today, a lot of gainers too. But to solve your stock-related queries, now being joined by Sachin Sarvadri, he is the independent market expert and the technical expert on the show, and Nandish Shah, he is the AVP PCG Research and Advisory at Motilal Oswal Financial Services. Gentlemen, a very good afternoon. Thank you so much for joining in today. Let me start with the first stock-related query that we have. It's on Tata Motors, the commercial vehicle business. Our viewer Shankar actually wants to buy into this counter, and he's asking if it's a good time to do so. Nandish, very good afternoon. How are you looking at this counter now?
So, on Tata Motors commercial vehicle, we have a neutral rating. So so in the month of Jan-Feb, we have been very positive on the commercial vehicle space, looking at the economy. But post that, the war and higher crude oil prices has dampened the spirits on the commercial vehicles. But what you say, overall in terms of fundamentals, the numbers have been posted has been quite good for commercial vehicle space since last 2 months.
So would you advise getting into this counter right now, Nandish?
Yeah, but with a longer term view, he can get into the commercial vehicle space. Yes.
Got it. The next one coming through, and this one's on Vodafone Idea. Bindu from Hyderabad, a regular viewer of the show, wants an entry level for this counter. She's asking for the long term yet again. I don't know, Nandish, if you have a view on Vodafone Idea. We've seen, of course, multiple news flows come through over the last few months, but any view that you might have right now on the stock?
So at these levels, I won't recommend addition.
Okay, got it. Next question coming in on Physics Wala. Our viewer is holding roughly 9,000 shares actually at 137 rupees per share. Let's pull up that counter now. Sachin, stocks up almost 6.5% today. But what's your recommendation? The short term, should he continue to hold? What do the charts suggest?
Overall, it has given a breakout and he can hold with a stop loss of 114.
And what would be the time frame here, Sachin?
114 is the stop loss I am telling, and from a target point of view, we can see 150, 160 from 1 to 2 months point of view.
Okay, for the next 1 to 2 months, got it. The next question coming through, this one actually is on Uflex. Our viewer wants to actually know if it's a good time to buy. The stock was up 20% actually post the results came through. Let's look at the 1 month chart if we can. Our viewer actually has been looking at this counter. This is Surya, who's from Hyderabad. Let's look at the 1 month chart of Uflex if we can. There you go, the 33% up move that you're seeing. 20% was on one day itself post reporting the results. But he wants to know if he should still continue to hold this counter. What could be a target to watch out for, Sachin? On the charts, a slightly more longer term, 6 months to a year kind of a question. How are you looking at Uflex?
So he can hold with a target of 700, and on the long side, like 6 months to 1 year period, we can see 850, 900 levels as well. Only thing is he can trail his stop loss around 450 levels if he's holding. If someone wants to buy, 450 will be the stop loss on closing basis.
Got it. Then that's the target to watch out for as well. But the other question coming through by M. Ahmad from Delhi, he wants to know about Keynes Tech. And yet again, coming back to you, Sachin, he wants a 6 month to a year kind of a view. We've actually seen buying from that 3,000 to that 4,000 level now, Sachin. Is that rally expected to continue?
I will not recommend to buy because the short term and the medium term trend is down basically, and right now we are into a bounce like a dead cat bounce. So today also we are currently trading near the 200-day EMS, which is the last hope. If we are closing below that levels, which is around 4,014 levels, and again we are slipping, then the trend will be down, so it will be a risky bet. If someone is holding, I would recommend to book profits basically.
Got it. Let's go across to Andhra Pradesh now. Bharat, dialing in for a stock related query. Bharat, very good afternoon to you actually. Yes, what's your query?
Good afternoon, sir. I am holding data pattern shares at the price of 57.
Is it 4575? I'm guessing.
4575.
Okay.
So today's stock went up to 6%, and what is the target of the stock, and what is the stop loss?
Got it. So it's a short-term view that you want, Bharat?
Yes, sir. Short term.
Okay, got it. Sachin, on data patterns, Bharat's buying at 4575. Should he book out right now, or should he continue to hold?
If the stock currently moves above the 5,000 mark, then we can see 5,500 and 6,000 levels also. So definitely he can hold with a trailing stop loss of around 38.99.
Got it. Hopefully, Bharat, that answers your question. Next one's on IEX. Sai, who's from Hyderabad, actually bought these shares at 155 almost 2 years ago. Definitely has been a frustrating ride for him as well as the other shareholders. But his question being, should he continue to hold out, or is there any scope of this counter coming back to his levels? Nandish, I don't know if you have coverage on IEX, but multiple regulatory concerns on IEX. Any view that you can offer Sai right now?
So we have a neutral view on IEX. At least in the short term, nothing is likely to happen. In terms of also results have been quite subdued.
And what's the long-term view on this counter? Because he's been holding on for the last 2 years. What are you watching out for in terms of any regulatory impact or any clarity on the same?
So one of the biggest overhang for IEX was the decoupling of which the regulator has already recommended doing it, and that is the overhang which is likely to continue even in the long term for IEX, despite having a very large market share in the electricity volume segment.
Fair enough, got it. Rani is asking the next question. We're going through thick and fast, viewers, for your queries. So you can give us a call, speak to us as well as a guest. Also send in your queries on WhatsApp. Rani, who's actually looking to buy CDSL, wants a short-term view here, Sachin. What's the target and the stop loss that you should watch out for?
TDSL currently is in a process to change a trend from down to up. If it is closing above 100 and 1450 levels, only then it will be a short-term buy levels. In that case, the targets will be 1515 and 1580. In that case, the stop loss will be 1330.
Got it. Well, the next question coming through, and this one is from Sriram. He's bought into Star Health actually at 900 rupees, which I believe was the IPO price as well. This again a counter that's been for Sriram as well as for the other shareholders not worked out too well. But any coverage, Nandish, on Star Health? He wants to know if he should average down right now. We started to see some up move by good results that came through in Q1 as well. Would you recommend him to average?
Yes, I would recommend him to average. And on Star Health, we have a price target of 770.
And what's the time frame? A year, Nandish?
Yes, almost, about 12 to 15 months, yes.
And Nandish, if you can give us some perspective also, what's actually changed in this last quarter? Because I think ever since the stock listed in 2022 has been, in a downtrend. But anything that you can offer our long-term viewers, what's actually changed this quarter?
So, one of the biggest, beneficiary of the GST cut has been the general insurance space, especially the mediclaim space. And there, Star Health is one of the one of which has the highest market share. And that has been one of the big beneficiary there.
Got it. Well, let's go to Andhra Pradesh now. Sheshadri joining in for a stock-related query. Sheshadri, very good afternoon to you. What's your query?
Yeah, hi, good afternoon. I'm a regular watcher of this Ask Profit.
Thank you, Sheshadri.
Yeah, hi. I have a question regarding the Power Finance Corporation. So currently I'm holding 101 shares at rate of 374. So what will be the long-term view? I can hold it for a year. Can I add here more also?
We've started to see some, pressure come in on PFC as well as REC, Nandish. Is Sheshadri right enough to add more of this particular counter? Any view?
So since last 2 quarters, the results of PFC and REC both has been quite subdued. And there has been a lot of competition from the banks space, especially towards the advances towards the power sector credit. And that is where their competition lies. So I won't recommend any addition at these levels for PFC. At the max, it can be a good dividend yield story play with a yield of almost about 4.5%.
Got it. Well, the next question is on Intellect Design. Naman Bandi holding shares at 757 for this counter. He's holding a decent quantity as well, over 700 shares. He's currently in a loss here. Sachin, what would be your opinion? Should he wait for his buying price or should he average down?
Definitely should not average, and the trend is down basically to hold a stock which the structure is also bad. Even momentum is weak, even trend is down. So I think he should exit basically.
He should exit. Okay, got it. The next one coming through, and this question is on Varun Beverages as well. Now, the stock was also in focus on the back of 2 news flows today. We've actually seen that, and this is a question from Monty, who's from Hyderabad. He's holding shares at 420 odd, which is actually close to the current market price. But 2 big updates that the company had. One was that they are entering the Alcobev space. They've appointed a new management leader there too. And as you can see on your screen right now, the entity is going to be called Kiva. They've appointed Prathamesh Mishra as the CEO and MD of the proposed subsidiary, who's been in this industry for a while, brings over 30 years of experience as well. And he's been, as you can see, all the big names where he's held leadership roles too. The company is also in focus on a new joint venture that they've had, but I think this is the bigger story that is in focus today. What's also interesting is the fact the stock's not reacting. It's actually down 3.5–4%. So definitely some bearishness visible on the counter. But Nandish, what would your advice be to Monty? He's bought it at the current price, very close to the market price as well. But what, according to you, the street's not liking? Definitely, there's some sheen being taken into this new joint venture, which was already announced in terms of the Alcobev space and the entry for them. But any view?
I guess one of the biggest negative for Varun Beverages is the peak season getting over in the month of April, May and June. And now the results are likely to be subdued for the next at least 1 quarter or 1.5 quarter or so. So that is one of the biggest overhang for Varun Beverages in terms of short term. But over a longer period of time, with international presence coming and also entering into the snacks category and the ready to drink segment, Varun Beverages is likely to perform well even next year. So even in the short term to medium term, there is no capex likely to come, at least in India, where it has enough capacity for next 2 to 3 years or so in terms of volume growth.
Fair point. And that's the view coming in from Nandish. But let's go across to Hyderabad now. Murli dialing in for a stock query. Murli, welcome back to the show. Very good afternoon to you. What's your query?
Yeah, very good afternoon, sir. My query is on IRFC.
Okay.
At 350 shares at an average of 38. I sold a couple of, about 100 shares when it reached 140, 160, 170.
Okay.
So I still have balance of 350. Should I hold it on for a target of 100 or so?
And I think
other query I have is to take up help in ETF.
Murli, I think today let me stick with your query on the IRFC as well. But I think the IPO price was 26. So have you been holding on since very early on? How long have you holding on to IRFC?
2022, I think.
2022. Well, you've reaped some gains, of course, and you sold off a little bit at the highest too. But any view here, Sachin, that you can offer Murli right now? Is it a good time to take money off the table, or given the attractive buying price, should he still hold on for a little while?
I think because the trend, momentum and structure is very bad for all the basically railway stocks. So he should book profit because overall the sector is also not supporting the stock. And individually this IRFC, I think it is making a lower high, lower low pattern with a trend down and a very weak structure. So he should book profit.
Hopefully, Murli, that answers your question. But let's now start the rapid fire round in the show. You've actually taken a lot of queries just in the last 16 minutes. But Sachin, as well as Nandish, you know the drill. Keep your answers as short as possible. First question is on Aquitas in the rapid fire round. P. Sri Kumar from Hyderabad, holding at 3287. Sachin, should he hold or sell is his question.
So Aquitas he can hold.
This is Aquitas you're talking about, right, Sachin? Aquitas Chemical.
Just a second.
Yes, sure. It's trading at almost 3,300 odd right now. A view would be helpful. Okay, sorry, he can hold?
Yes, hold.
Okay. The next one, and I don't know, Nandish, if you have any view on Milky Mist, a very recent listing, but Nand Gopal actually got some allotment as well. He's bought 100 shares too. Any view that you can offer him right now? Stock's actually locked in upper circuit today.
He should hold. Milky Mist is a company. Yeah.
Got it. Next one's on Bajaj Hindustan. Any view that you can offer here, Sachin? Prashant actually wants to know a target and a stop loss for this counter. He spoke to us about Renuka in the morning, so he's covering the pack today. But any view?
So definitely I will not recommend to buy, but if he's holding, then stop loss will be 18 rupees.
82. Got it. The next one coming through, and this one's from Velu Swami. He's holding on to LNT at 2514. Can he buy more at the current price is the question, Nandish, from him.
Yes, he can add it from these levels too.
Okay. Bandhan Bank at 176 is being held by a viewer. He's holding 7,000 shares, Nandish. I think quarter one, the commentary was very weak and so was the results. Any view?
Avoid Bandhan Bank.
Okay. Next one's from Sriram Raghuraman. He's a senior citizen holding on to Max Estate. He's actually bought this at very attractive levels of just 26 is what he's saying on Max Estate. Stocks at 572. But any view here, Nandish? Should he still continue to hold, of course, given the attractive buying price, or what's your view?
So on Max Estate, we don't have a coverage. Won't be able to offer any view.
The next one's on PNC Infratech. Our viewers bought these shares at 267. A view here, Sachin, on the charts?
Definitely exit.
Okay, definitely exit. All right, got it. The next question, it's on GPT Healthcare. Sachin, coming back to you. A viewer holding shares at 170. Should he continue to do so?
Yes, hold.
Next one is on Paradeep Phosphates. We answered this query in the morning, but our viewer holding shares at 183. Should he hold, Nandish? Any view?
So it's a hold, Paradeep.
Shriram Finance, our viewer Shishadri actually holding shares at 1092. Any view, Nandish, on the stock now?
So positive for Shriram Finance, hold.
Hold. Crompton Greaves bought by Anu at 291. A view here, if you can, Sachin. I know it's a stock that's not done too well, but any view on Crompton?
He can hold, but with a stop loss of around 215.
Got it. Well, that was the last question of the Rapid Fire as well as this edition of the show. Thank you so much, Sachin and Nandish, for helping us solve queries. We've made it to 87 for the day, including the morning and the afternoon edition. So thank you so much, viewers, for all those who wrote into us as well as called us as well. But out of time in this edition of Ask Profit. Thank you so much for watching again. Stay tuned, a lot more action on the other side.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी.
When outcomes matter, you trust accuracy and precision every time. Because cricket ho ya medical care, trust is earned with consistency. Welcome to Lord's Med. Empowering health, touching lives. Accuracy that shows up when it counts the most. State-of-the-art innovation, made in India. Or trust, puri duniya ka. When it comes to medical care, choose Lord's Universe. Precision with care.
Lord's Mark Industries, हमेशा आपके साथ.
From bullet trains to Suzuki, Toyota and Sony, Japan is already deeply integrated into the India's growth story. Now, after Prime Minister Modi and Prime Minister Takaichi's summit, Commerce Minister Piyush Goyal brings 200 plus business leaders to Japan. Can the next phase of the India-Japan trade story be around semiconductors, manufacturing, investments and artificial intelligence? Join me, Rishabh Bhatnagar, as I travel with the Commerce Minister to Tokyo, Osaka and Nagoya to figure out where the next level of the India-Japan story lies.
New rules of engagement. Ambitions crossing borders. Voices refusing to wait their turn. India is chasing gears. Faster, bolder, more restless. It doesn't stop. Neither do we. NDTV, when it really matters.
Welcome to India's biggest grassroots innovation movement. Vande Bharatam, Bharatam, Vande Bharatam. हमें ये पूरा रोड मैप क्लियर करके ज्यादा से ज्यादा लोगों तक पहुंचाना। स्पंदन एक पोर्टेबल ECG मशीन है।
सिर्फ यहाँ पे थेरेपीज डिजाइन की गई है।
If you need any manufacturing help, do reach out and I'm more than happy to get your product to all of them.
हर हफ्ते आइडियाज के असली ग्रासरूट इनोवेटर दिखेंगे वंदे भारतम में. Coming soon on NDTV Profit.
Arunesh Chawla, the DPOM Secretary, speaking exclusively with us on NDTV Profit. How do you see the momentum from here, and what's your reading on the expectations around the Hindustan Copper OFS?
This is in line with Prime Minister's vision of sharing the national wealth with ordinary investors, minority stakeholders and citizens of India. Hindustan Copper, has good futuristic investment plans. And if you see the market analysts and the feedback, this is a stock which is forecast to go upward.
80,000 crores, Mr. Chawla, is the target. You've already hit 52,000 crores in FY27. Do you expect to comfortably exceed this target?
I would say we are working hard and will achieve the target.
What is the dividend picture looking like for CPSEs?
Dividends, we have a plan, but you will see that plan becoming active in the second half, which is when the dividends come in.
We are turning a page in Nepal's political economy. On the bedrock of good governance and bold reforms, we want to accelerate the pace of economic catch-up.
In rapidly changing global landscape, foreign policy must be anchored in strategic clarity and shared prosperity.
Hello, I'm Shashi Tharoor, and beyond statecraft and formal treaties lies the true heart of our partnership, our deeply rooted cultural diplomacy and people-to-people bonds.
I look forward to sharing our vision for industrial cooperation at NDTV World a week share.
Seamless trade and strategic cross-border investments are real drivers of modern growth.
Understanding the past and present is the key to unlocking the future in India.
Hi, thanks so much for joining in. You're watching NDTV Profit. That is Sharad Dubey. My name is Alex Matthew, and we're coming to you live from the NDTV Profit Suzlon studio, and this is India Market Close. It's another dull day for the benchmark, but the action today is in the broader markets.
Exactly, Alex, and today is the first day of the September series. Not a good start for Nifty, but Nifty Bank is holding up and showing a good strength, almost 350 to 400 points up. And look at that advances and decline.
Yeah.
That's also, we see a good broader market buying is happening as well.
And that's because the mid-cap index is up 0.2%.
Correct.
And the small-cap index is up more than 0.6%, in fact close to 0.7%.
Right.
So there are individual counters that are doing particularly well, and Sharad, today is also a day where there are large trades happening left, right and center.
I think 7 to 8 block deals are there, and we'll get you all those details as well, but let's focus on the Nifty gainers and losers. What's happening in the benchmark indices? Of course, amongst the gainers, we have largely the financials name, Kotak Mahindra Bank, HDFC Life, even Ultratech makes it to the list. But what's not working, a little bit of sell-off coming in the IT names.
Yeah, and more red on the screen than green, and a few heavyweights are leading to a bit of a decline for the Nifty 50. Pull up the contributors chart and you will see Reliance Industries in that list. You will also see Bharti Airtel in that list. Infosys and L&T. Surprising for L&T, it's actually been on the back foot despite quite a few
much
big orders
coming in,
coming through, right? ICICI Bank is leading the pack, at least on the contributors chart, and so too is Axis Bank. Of course, there is commentary that has come through from the management of Axis Bank that was in one of the dailies today about better than system growth in loans. 300 basis points better than system is what is being guided for, and so that is perhaps one of the reasons why Axis is doing well in trade. But let's pull up the heat map for the sectors as well, because banking is doing well today. PSU banks are rebounding.
Alex, yes, and there is a good sectoral churn also happening here. Largely metals are also seeing a rebound as well, but what's not working is IT segment. That's where the sell-off is continuing, and that sectoral churn which is happening, that's continuing each week, I would say, for the last 3 weeks.
Absolutely, you're absolutely right, and IT would have given you a sign of this even on Monday, where initially in the session it was gaining, and then it gave up quite a bit of those gains to trade just about a couple of percentage points, or actually 0.2% point higher. Consumer durables, infra, FMCG all losing ground today. Let's take a look at individual stocks as well, Sharad.
Let's get in the BSE 500 stocks to show you actually what's happening there. Largely Capri Global for the stock is up more than 16% in the last 3 trading session. Interesting buy coming in Cyient as well. That's the second day of buying coming in from the analyst meet. And also KRBL, we had identified this trend, and again that buying is coming back in the rice stocks as well. Varun Beverages, a little bit of scare coming in, of course, from them venturing into Alcobev and incorporating an arm, and a little bit of profit booking continuing in the sugar stocks as well.
Yeah, absolutely. But I'm curious about Varun Beverages. Pull up the chart for Varun Beverages. It's had quite the session today, because if I remember correctly, it was trading up initially, and then it's given up those gains. It's trading at the low point of the day. Why don't we ask Dharmesh Kant, who's joining us right now, Head of Equity Research at Chola Securities. Dharmesh, very good afternoon to you, and thanks so much for taking the time. And I do want to ask about Varun Beverages and what you make of this proposition to get into the Alco-Bev space. It's not the easiest space to operate in, but they're likely to offer ready-to-drink beverages. What do you think about this move, and is there an opportunity here?
Yeah, good afternoon, Alex. Thanks for having me for the show. So, Varun Beverages has been struggling for last 1 or 2 years to have the same ROC which they used to enjoy and the operating margins. So, we have seen a deceleration in the return on capital employed, and because the capital which we're having was not being deployed effectively to the new business opportunities which they were looking forward to. So, they foray into the African business again is a margin dilutive kind of a foray. They earlier used to enjoy north of 20% kind of a margin, and Africa is largely 13 to 14% kind of a margin. So to counter that, they thought of a strategy of entering into Alcobev. So in Africa, they already have a tie-up with Carlsberg for the distribution part. Here, I mean, the details are not very clear to us. The RTD, whether they will be tying up with an existing, alcohol maker, and then they will market it, or they will go on their own. So that is being awaited. It's definitely, I mean, Alex, as you say, it's a very competitive industry, and I mean, even United Spirits are losing its market share. So, in light of the competition given by Radico Khaitan or Tilak Laga Industries, so, a challenging space. I think market will first like to see proof of pudding, 1-2 quarters, how the sales are happening, what is the strategy, and how they are going to get the margins back into 20% plus kind of a zone. Till that time, I think it's more of a range-bound stock with volatility in place. Though it's a welcome step which they have taken, but the execution and the tie-ups has to be seen first.
Right, execution is something to watch out for. Now we are joined in by Rahul Sharma of JM Financial Services. Good afternoon, Rahul. Always a pleasure to have you with us. And markets, the first day of September series coming in, but Nifty showing some divergence with Nifty Bank. What are the key levels to watch out for right now?
Yes, so I think the range-bound setup continues on the Nifty. Bank Nifty relatively has held well in the month of August so far. And the way it is positioned, I think unless and until 24,500 doesn't get taken out on the Nifty decisively, we may just continue to spend time and be a stock-specific market. On a comparative note, Bank Nifty is the better index, as 57,500 is a key area above which it is trading in today's session, and it seems like the closing might also happen above it, which means the gates are open for a higher target of 58,400, 58,600 as well. So as of now, it's best to stick to the ones which are performing. So between the two indices, I would rather go with Bank Nifty. And another index which is doing very well is the Mid Cap Select Index. In spite of what is happening in the Nifty, it's in a zone of its own, although today profit booking has come at higher levels. But comparison wise, it is relatively the best position index amongst all the broader indices that we have.
Rahul, what about the technical picks here you mentioned? Is there a BFSI name also in that?
Yeah, so on the BFSI space, there are a lot of names which are looking good as of now. I think on the PSU banking pack, the smaller names are the ones which are seeing increased buying activity. Today, Maharashtra Bank in particular has seen very good volume-based price action, rounding bottom on the charts. Looks like a target of 1995 is on the cards. So as a disclaimer, we've recommended to our clients, but we feel that on a positional basis, there is more upside to be had in the stock. So fresh buying can be done at these levels, stop loss placed at 82, and the first target of 90 followed by a 95 target on the upside.
Right, so those are the picks. And by the way, some of those banks are looking really, really red hot today. Bank of Maharashtra, for one, up as much as 5%. But tell you what else is doing well. It is the stock of the day. It's a stock that you've probably not come across unless you are a bit of a geek when it comes to automotive ancillary companies like Puneet is. Federal Mogul is the name of the company. It used to be called Federal Mogul Goetz, if I'm saying that right.
It's a German name, Goetz.
Goetz. Is that right? Okay, see, Sharad knows some German as well. But the shares are up 3%, and that's for a very interesting reason. There's a board meeting tomorrow to consider a dividend payout, and this is not a company that pays out dividend. What is the story here? Let's find out from Puneet. Puneet?
Well, thank you for that, Alex. Definitely the accent is there. I mean, the pronunciation, if it's right or not, will be, the jury is on that. But definitely a very interesting pick that we have, have for you today. Largest, one of the largest players in the piston and the piston ring segment. But the bigger story is, as you mentioned, the board meeting that's expected yesterday. Now, when you look at the stock price, it's up almost 15% in just the last 2 days. It's not a very big mover. Last 1 year, stock is up almost 8%. While has doubled with market expectations over the last 5 years as well. But overall, why the buzz now is because they have a very important board meet tomorrow on the 27th of August. They will be considering looking at issuing dividends at this and considering an interim dividend now for the first time since 2005. They've not paid out any dividends, and hence we are now putting in the focus of what that dividend could be. Very importantly, three big numbers that you have to watch out for. Almost a 3,100 crore market cap company, but they have reserves of almost 1,381 crores with a cash of 829 crores, and hence the bigger question being what could be the dividend now. For the last year, FY26, they had a profit of almost 178 crore. Assuming that they give that out completely as dividends, you could see a 32 rupees dividend come through for the company in this particular board meeting. What's also interesting is that this move has actually been done by Bajaj Auto in FY26, where they had a complete dividend payout, but also the fact that at a 10% extra that they could get from the reserves, an additional 25 rupees could come through as dividends. So 32 plus 25, 57 is what you could get if the company decides to do so. The ownership structure is the other very interesting one. That's the final part of this segment, that Tenneco global company, Tenneco Inc. actually acquired Federal Mogul back in 2018. It wasn't an easy one. It was a fight at that time too, because they had given an open offer price of 400 rupees. Tenneco, of course, now has an India entity which trades at much premium valuations compared to the current Federal Mogul valuations. But 400 rupees is what Tenneco had offered Federal Mogul shareholders. They rejected that, asked that it could be more than 800 to 1800 according to them, and the final settlement was at around 600. You see the value today. In 8 years, it hasn't gone anywhere because the sales growth has been weaker over the last 10 years, and hence the question now being, can shareholders expect some reward? Because a 4% sales growth doesn't augur well versus the other auto ancillary players. And the bigger question being, what could be the dividend that comes out tomorrow? Can investors get more excited after the announcement? Will be something to watch.
Thanks a lot, Puneet, for that. And of course, the question is whether this asset is priced right or not. And if yes, the minority shareholders are expecting a larger dividend payout as well. Dharmesh, I wanted to get you on this also. Largely untracked stock, but a very interesting story coming in. Minority shareholders, either they've demanded a higher exit price, which is still under sub judice matter, but the interim dividend comes in after 21 years. How do you see this?
I mean, it's just a trade for the interim dividend kind of a play. As you have already highlighted that last 10 years, the sales growth has been 4% and even the profitability growth has been 6%. So the company has gone nowhere, and the very basic business which they do is of piston and piston rings. Is challenged in the upcoming, next decade. It will be a big challenge as EV takes further space. So how long this business will be relevant and how scalable it can be has to be seen. I mean, there are multiple question marks out there. So yeah, I mean, a 1-2 day kind of a trade, and shareholders with after taking the dividend for the first time can always call it an exit. So a very small company, a very small business traction which has been there. Ideal would be to take an exit and be out of it.
All right, an exit is something which we are talking about, and stock is still up almost 3%, but slowly dipping a little bit as well. But talking of pharma stocks, Lupin's patent win clearly clears an important hurdle for its generic version of Calideco. It's a drug indicated for the treatment of cystic fibrosis. Varsha is here with more details. Varsha, seems like a positive news flow coming in for Cipla.
For Lupin.
Lupin, sorry. Yeah.
Yes, a positive one. I would say the patent overhang has been removed, as Lupin wins court battle against Vertex. Court says Lupin's generic does not infringe 4 patents, and the patents were related to Calideco. Now, what does this mean? Lupin is actually developing generic Calideco, which is used for the treatment of cystic fibrosis. Now already has tentative US FDA approval, and patent win removes a major hurdle to launch. How big is the opportunity? If you see the targeted Calideco oral granules have a market size or US sales of around $51 million, which translates into around 430 to 450 odd annual market, 450 crore annual market, and Lupin can capture this share of this market. Now, why this is important? Because this is the first to file for the generic. Lupin has first to file for the generic and could get 180 days exclusivity. So, far ahead from the market, which gives Lupin a potential early mover advantage in the US, and hence because of this reason you are seeing the stock has seen a sharp rise when this news came out, which is up almost 1.5% in trade.
Okay, all right. So that's the update on Lupin. Let me get you a view from Dharmesh. Dharmesh, you've heard the update. The stock is up about 1%, but longer term trends. What's your opinion on Lupin? And then maybe also you can weigh in on some of the subsets of the pharmaceutical space which you might be positive on.
Yeah, definitely. I mean, Alex, we have been quite positive on Lupin. If you look at last 5 quarters earnings, they have been spectacular. Each quarter they have delivered a very good growth with improving margins, and multi geographies exposure also give them a hedge against purely US exposure. So well diversified company. The products have been doing fairly well, and this first to file exclusivity is always beneficial for any company to begin with in the generic space. So that advantage is there. Somehow the stock price has not had that traction compared to the others in the peer group. It's one of the cheapest. I mean, it's available at less than 16-17 P multiple 1 year forward, given the growth trajectory which it is on, with an ROE of 27-28%, and margins now over 30% kind of a margin it is enjoying. So a good value buy to our mind. But the stock price has to, give the particular action. We expect that by the end of the year, this should do well. From the other subsidiaries which you have spoken about, it's more in the molecule space. And there, I think Laurus Lab has been consistent with the numbers flow. And going forward also, we expect a similar trajectory for Laurus Lab. It may appear expensive on the valuation chart, but the growth trajectory on which it is, which is likely to grow for next couple of years, is around 50% plus kind of a CAGR we are expecting on the revenue growth, primarily driven by small molecules. So that's the CRDMO space is where they have got it big time right. And capacity expansion and all, they are doubling everything. The AP government has given them land and the opportunities there. So big plans in the offing, and one has to just stay invested. As far as the valuation or target price is concerned, we would like to look at Q2 numbers before coming out with that. Earlier, we were going by 1600 target price, so that has already been scaled with the company. So now the idea is to hold, and if you can add on, you can add on, but revision will be after Q2 numbers are played out. A good story in the making.
And Rahul, your technical picks amongst the pharma names this year, they have run up. Laurus Labs, we see this year is one of the top gainers in the Nifty Pharma Index. That's up 70%. Gland Pharma up almost 68%. Sai Life also doing well, up 60%. So do you think that this space has much more risk reward left, and if it's there, where will that action be?
Well, our pick also happens to be, Laurus Labs. The thing is, these stocks in this kind of a market, on the one which is expensive has become more expensive. We're seeing new 52-week highs being taken out every day. Laurus Labs is not different. In fact, in today's session, it has again given a small breakout above the 1880 mark. And now it's ready for a possible target of 2,000 rupees on the upside. So we are strictly advising to be traders in this space. High momentum, have strict stop losses, obviously because of the crazy heights that these stocks are at right now. But so far there are no signs of fizzling out as far as the volumes and momentum are concerned. So enjoy the party till it lasts. Have a stop loss placed at 1850 for longs. And I think 2000 is very much on cards for Laurus Labs.
Okay, so that's a view on Laurus Labs. Let me also ask you about what is happening, Rahul, in the IT space, because we've got a couple of days where it looked as if this pack would do okay, and then through the week so far, there's been quite a bit of selling, and today as well, these stocks are languishing. What is the call in the charts?
Yeah, so it's a classic money rotation that is happening. We saw that for most part of, in fact, in July, the IT index reversed in a big way, and a lot of that momentum continued into August as well in select counters like Coforge. Now, the thing is, because there are relatively better positions or opportunities available in something like metals or some of the NBFC space, probably that money is getting rotated into these sectors. So until unless I think the money flow reverses, I think IT may just consolidate for a bit. So if I talk of the IT index, it is again sort of gone into that neutral territory after spending a good bit of time around that 32,000, 31,500 mark. So as of now, we're looking for buying on dip opportunities. Some of the better setups, the blue-eyed boys, whether it is TCS or Infosys, can be looked upon for accumulating, at these levels, or maybe another 2-3% more. And I think, some bit of stability should come into these stocks. So these are not like an immediate roaring buys, but yes, and from an accumulation point of view, over the next 1 week or so, accumulation can be done. And probably once the reverse rotation happens, we may see IT stocks come back into flavor as well. So overall, the trend is up on IT. Maybe a bit of sideways action is what is happening right now.
All right, so that's a holistic view on the IT space. We'll get you a special piece on Persistent as well. That's lined up for you on the show. Before we do though, let's head across to my colleague Somit Sarkar, who's joining in to tell you what he's hearing from the dealing rooms in Heard on the Street. Good afternoon, Somit. What are you hearing about individual stocks? A lot of deals taking place.
Yes, sir, a lot of block deals that we are seeing in the market. In fact, the first two counters in my list is also on block deals. Viyash Scientific, a block deal took place in trade today. Now, dealers indicate that the promoter was looking to sell its stake. In fact, he was looking to sell a bit more, but the demand that came in was quite weak. Hence, the block deal was lowered in size. When it comes to Rubicon Research, again a block deal took place. Dealers indicate that General Atlantic, the promoter, was the seller here. Strong demand was seen across the board for this block. For Capacit Infra, there are buy flows on the PMS desk. Dealers expect some positive news flow very soon here. They're expecting a potential large order win that could also come in for Capacit Infra. For Ashok Leyland, that stock has been gaining in trade. There are buy flows on the large HNI desk. Dealing rooms are indicating that the August sales number are expected to be quite strong for Ashok Leyland. For Vimta Labs, there's a buzz of some M&A activity that could happen here. The company could well be a potential acquisition target. So keep an eye out for Vimta Labs. For Zydus Life, there's a buzz of some announcement related to acquisition that could be announced. Zydus Life could acquire either some drug or some company. So keep an eye out for Zydus Life. The stock has been buzzing for the last couple of trading sessions. Virtuoso Opto, that stock is up nearly 14%. There's buzz of some fundraise via preferential issue that can be done. In fact, the stock is now up nearly 16% on the back of this news. And lastly, when it comes to ITC and Apollo Hospital, there are some buy flows on the institutional desk. Delivery volumes are expected to be on the higher side.
All right, thanks so much for that, Somit. One of the stocks that is not doing particularly well in trade today is is Premier Energies, and we did speak with the management earlier today, and the stock is down about 5% at the low point of the day. A couple of points that were mentioned stood out to me with regard to the outlook for the current financial year, and based on the trajectory that is being spoken about, they feel quite confident that they will meet with the street's expectation of a close to 50% uptick on the revenue. So that's certainly something that will come to pass. And Dharmesh, I want you to listen to a few of these points, right? So revenue uptick is going to be there, but they're expanding into wafers and ingots, right? And that's capacity addition or capex that they're going to be spending over the course of the next couple of years. Obviously, on account of that, and this is not something that they've really explicitly spoken about, but they did accept that the ROCE or the ROCE, the return on capital employed, will reduce in the next couple of years before that backward integration kicks in. I wonder if that's something that the street has taken a bit of a negative view on. What would you say about Premier Energies? Any dips, opportunities to buy or no?
No, Alex, I mean, we are totally out of at least solar manufacturing renewable space. So last we did was Awari around 1500. From there, we have been having a buy recommendation. Fortunately, our target price of 3,800 was met, and there we were lucky enough to give an exit call. The reason is next 2 years, you will continue to see, I mean, till FY28, the numbers hitting 40 to 50% kind of a profitability growth. But thereafter, the dip will come in a big time. Incremental order wins are not there with the same run rate which they used to get in FY25 or FY26. Secondly, the margin pressure is coming. And third thing, if you have noticed recently, the real-time rate for solar power, the power solar producer solar is less than that of thermal. So if the end of take of power tariffs are coming down, you can't have much margin to play. One bottleneck which has plagued this entire industry is evacuation of power from solar manufacturers to the grid. So that transmission line will take its own course of time, and because of that, a lot of PPAs are not happening. So it's being a lot of problems or headwinds surrounding all the renewable solar power manufacturers. And I mean, the valuations may look justifiable in light of the growth which may come for 1 or 2 years. But going forward, it looks a very challenging space for them. And this backward integration is capital intensive. Right now, what they were doing was trading kind of a thing. There is no mode to manufacturing a solar panel. So they were procuring the materials and assembling them and supplying to the end user. So with backward integration like polysilicon to ingot itself is a very capital intensive process. So where Reliance and Adani have already ventured there because they have the capital and the muscle to do so. So I mean, the blanket call, Alex, is be out of this entire sector altogether.
Got it. All right. So that's the view on Premier Energies, trading very close, as I pointed out, to the low point of the day, down close to 5% at this stage. In case you want to view that full interview, it should be available on our social media platforms and certainly on the streaming platform as well. Persistent Systems is a stock that we want to talk about. It's a bit of a deep dive. This is not the cheapest stock. In fact, it is the most expensive stock in the IT pack, and there is a reason why. But what should you bear in mind? Where does it stand right now as you compare it to its peers? Let's find out. And to do that, let's head across to Jasmeet, who's joining in. Jasmeet?
Well, Alex, thank you for that. We have quite some analysis for Persistent Systems. Now, we have seen overall IT rally after the Q1 results, and Persistent System is such a stock that has rallied the most when you compare to the other peers. If you look at the key highlights, what we are capturing from here, the stock has rallied nearly 30% so far in Q2 alone. That's an uptick of about 30% in this quarter, and the stock has also turned positive over full yearly basis, where we have large cap IT still below the 5-year average. This is a stock which has turned positive on a full year basis as well. If you look at the third key aspect, the stock continues to trade at a very high valuation of nearly 46 times, which is quite premium compared to the competitor Coforge. While Coforge being a giant which has majority of buy call in the street, compared to that, Persistent is trading roughly 10x more than the Coforge. That's why the valuations are quite expensive compared to the Coforge. And in terms of the overall large cap IT, those stocks are trading roughly 14 to 15 times. Now, if you look at the other key highlights, what has led to the overall rally of Persistent? That becomes a key question. While the first one, the Q1 numbers were on point for Persistence, were largely in line, and even the CC growth was roughly at 4.1%, which had beaten the street estimate. That was a key major point. Well, the second one was the overall revenue has been growing from last 25 consecutive quarters for the company, and the management remains bullish to maintain this particular streak, and that's the key trigger for the stock as well. If you look at the third aspect, the company nearly doubled its overall TCV that they had signed in the Q1 at roughly at 1.15 billion versus 600 million the previous quarter, which becomes a key trigger, which shows a lot of visibility going ahead. While the fourth trigger is the overall acquisition. Well, the company was among the early players who had to come out and acquire entities in the AI space, and the overall Nagarro acquisition has been quite in line with the management's objective to intensify and expand the business in the Europe geography. And the fifth key trigger is a top clientele of the company has been growing consecutively. Even in the Q1, they have nearly grown by 9.4%. Now, while that's the reason why the valuations are remain expensive, but we also have few negative triggers as well, which will bear the entire question, can this valuation sustain going ahead? While the first key negative trigger is the overall investments and the margin. The increased AI investments is impacting the company's margin, and also in the Q2, we'll be seeing overall wage hike coming in the picture, which might further impact the margins. If we look at the second key trigger, the entire Nagarro acquisition, though it's a positive for the management, but the margins for Nagarro is at 11 to 13% versus Persistent roughly 16%. So there might be some overall margin dilution for the company going ahead once they acquire and make it under them. The third key trigger is the brokerages remain divided. While this is a stock which roughly has 50% buy call and rest 50 are sell and hold. So they still remains a key question among the street that will the stock really sustain the current valuations, and is the rally justified? If you look at the overall stock performance, the return potential for this particular counter is negative 2.6 odd % from the current levels. So streets expecting a degrowth from the current stock level. Now let's quickly pull out the valuation race chart for all the counters. We do note among the mid caps, Persistent remain at the highest of roughly 46 times, and next in line we have Coforge, while the LTM remains the last at 23 odd times. In terms of the 1 year forward, again Persistent still remains the most expensive stock. If we look at the return potential and the overall buy call in this particular counter, we again make a note that Persistent roughly has a 53% buy call, which states that the street still divided between the buy and the sell rating for its counter, and the return potential from here on is negative 2.6 odd %, while the Coforge at 1.5 and the highest for Hexaware roughly at 7.8 odd %. So this was the entire analysis of Persistent. Though we are seeing the stock rallying, but the valuation still remain a key concern.
Thanks a lot, Jasmeet, for that, and tracking the IT space, and also tonight will be NVIDIA earnings as well, where we'll get you in the entire analysis as well. But Dharmesh, Jasmeet has come out with a very detailed link on Persistent Systems, and when we talk about the mid-cap IT names, two stocks come to our mind generally. It's of course Persistent Systems and also Coforge. So Dharmesh, the question is, the valuations, are they on the expensive side, or is there more value left?
Yeah, sure. I mean, as long as they have not acquired Nagarro, things were working fine for Persistent Systems. They are the first one to get enterprise adoption and the rollout of AI modules into the place in the mid-cap space. At the same time, their outcome-based transactions are organizing the deals, and the revenue through that model is on the upswing, and that's good for the company. The entire problem started when they announced that Nagarro acquisition, to my mind. Because one, the balance sheet size is more than that of Persistent System. At the same time, the revenue is higher. And last 3 years, Nagarro has been losing on the profitability side. It's not a growth company. So, I mean, just offshoring can help them get an edge. It's difficult. And what are the markets you're looking for? You're looking into Europe and America, where already there is a disinflationary pressure continuing for the pricing part on for as far as the deals are concerned. So that will be a big challenge for Persistent. Not now. I mean, Q2 also can be a better one, but as synergies and the integration happens, then the real picture will emerge, and that would be a challenging time for Persistent. To my mind, at least FY28 is lost till this integration happens to come out and have the benefit of a better EPS accretion and better margin rollout. So that's the problem. Even Coforge, acquired Ancora, again the same set of a problem, a much larger company and with a lower margin base. So these are the challenges. They have taken a call on the aggressive call, I would say, but going by the way the things are unfolding in the IT space, it will be a big challenge. The only markets which will be left for you is Middle East, African countries, and some of the Asian countries where you can still expect more. Yeah.
Right.
So it's a negative call for my end.
Okay, so negative call coming in, but Rahul, today Nifty IT index is also the top loser, sectorally speaking. Let's get both the charts again in. Do you think more sell-off will continue in the IT pack, or medium-term basis? Is there any trade to be made?
Yeah, I think IT may remain a bit of a range bound. Maybe another 200, 300 points can go on the IT index, but overall the view is, the sector is has reversed, and after the rally, it is seeing a pullback of sorts. I think the better trade to look at it would be in the commercial vehicle space. Ashok Leyland is one pick which is looking very good. The stock is closing at the highs of the day at around 179. We feel that the risk reward is favorable for bulls. We have a target of 190 in the same on a short term basis and can be bought with a stop loss placed at 174.
So Ashok Leyland stock is near the day's high level as well. Interesting to talk about it, and Puneet was discussing about the Vahan data also in the earlier shows as well. There is a good momentum coming in, but it's time for a quick break. On the other side, we'll get you the top buy today, sell tomorrow picks.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे, केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
When outcomes matter, you trust accuracy and precision every time. Because cricket ho ya medical care, trust is earned with consistency. Welcome to Lord's Med. Empowering health, touching lives. Accuracy that shows up when it counts the most. State-of-the-art innovation, made in India. Or trust, puri duniya ka. When it comes to medical care, choose Lord's Universe. Precision with care.
Lord's Mark Industries, हमेशा आपके साथ.
We are turning a page in Nepal's political economy. On the bedrock of good governance and bold reforms, we want to accelerate the pace of economic catch-up.
In rapidly changing global landscape, foreign policy must be anchored in strategic clarity and shared prosperity.
Hello, I'm Shashi Tharoor, and beyond statecraft and former treaties lies the true heart of our partnership, our deeply rooted cultural diplomacy and people-to-people bonds.
I look forward to sharing our vision for industrial cooperation at NDTV World a week share.
Seamless trade and strategic cross-border investments are real drivers of modern growth.
Understanding the past and present is the key to unlocking the future in India-Nepal tie.
Join me at NDTP World Anveksha, Ideas Across Border in Kathmandu on August 27th as we explore Nepal's role in changing the world. Don't miss it.
From bullet trains to Suzuki, Toyota and Sony, Japan is already deeply integrated into India's growth story. Now, after Prime Minister Modi and Prime Minister Takaichi's summit, Commerce Minister Piyush Goyal brings 200 plus business leaders to Japan. Can the next phase of the India-Japan trade story be around semiconductors, manufacturing, investments and artificial intelligence? Join me, Rishabh Bhatnagar, as I travel with the Commerce Minister to Tokyo, Osaka and Nagoya to figure out where the next level of the India-Japan story lies.
New rules of engagement. Ambitions crossing borders. Voices refusing to wait their turn. India is chasing gears. Faster, bolder, more restless. It doesn't stop. Neither do we. NDTV, when it really matters.
Arunesh Chawla, the DPUM Secretary, speaking exclusively with us on NDTV Profit. How do you see the momentum from here, and what's your reading on the expectations around the Hindustan Copper OFS?
This is in line with Prime Minister's vision of sharing the national wealth with ordinary investors, minority stakeholders and citizens of India. Hindustan Copper, has good futuristic investment plans. And if you see the market analysts and the feedback, this is a stock which is forecast.
let's get you some updates from Japan, where Piyush Goyal is addressing a press conference. Listen in.
Market of 1.45 billion Indians, young, aspirational population, full of talent, modern infrastructure, and is very inviting place for Japanese businesses.
'I tell you what, that's a bit of a long question that Piyush Goyal was receiving in Japanese. What we'll do is we'll get the cliff notes of what is said in that press conference, and we'll get it to you later today. In the meanwhile, let me introduce you to Shivangi Sarda, who's analyst equity derivatives and technical at Motilal Oswal. And we've also got Sudeep Bandyopadhyay, who's joining us, a market expert, Group Chairman, IndiTrade Capital. Thank you so much to the both of you for taking the time and for speaking to us. Shivangi, I'll come to you first. Just 10 minutes to go for closing of trade for F&O stocks. Any short-term trades that you would suggest?
Very good afternoon. Thank you for having me. We've seen that September series have started on a slightly consolidated mode, and we're seeing some of the metal and the smaller banking name stocks getting in action. BTST trade, mine would be Kotak Bank. We've seen a price volume surge here with the PSU bank especially soaring high. Kotak Bank is balancing out from this side, but of course overall we've seen that there was a long consolidation in this one, and till the last hour we've seen buying continuing in this one. So this one to be kept on radar for 435 with a stop of 410.
And also, let's just get in these two counters, especially Milky Mist and Advait Jewels also. Both of these counters are in the upper circuits. Advait Jewels is up 20%, Milky Mist is also at 10%. New IPOs are stealing the limelight. Of course, we will discuss a lot about blocks also. But Sudeep sir, wanted to get in to these new IPOs which are coming. Good follow-on buying also coming in. Anything which is looking attractive here right now, or you need to wait it out?
Well, I had loved that Indo-MIM issue and had recommended that to everybody. And look what kind of numbers they came in the first quarter post-listing. And I think the momentum in that counter continues, and I definitely recommend long-term investors to buy even now into that counter. The other counters where I think I have a lot of interest is, one is Milky Mist. I think initially people were confusing it with typical dairy, but it's a value-added products company and is more akin to consumer companies rather than a pure play dairy. So that's the kind of valuation they are getting, and there is excitement in the counter. I think at this stage the value looks a bit full, but any correction, I think I would be a buyer there. We also like some of the companies which came, and there was a lot of excitement. The Bihari Lal, I think that's one company which there was a lot of excitement on the listing day. It's a good company. It's moved up quite a bit, but still, somebody looking at long term and considering the kind of work overall Indian manufacturing industry is doing, and the forecast for that, I think the demand for Biharilal Engineering's products will continue to be robust. And I think it's again a good buy even at current levels.
All right, so that's the focus on IPO space is heated up, but now let's move our focus back. A slew of counters are in focus on the back of block deals as well. Jasmeet is again with us. Jasmeet, it's 5, 7, 8. How much block deals are happening today?
Well, Shradha, we see quite heavy day when it comes to the overall institutional sales and buying in terms of the overall block market trades. We have about 7 block deals that took place today in trade, starting with the first one, going with the highest to lowest. First one is Grow. Roughly 12.5 crore shares changed in hand today in trade, forming 2% of the equity. Roughly about 2,500 worth crore shares changed their hands. Well, the second one is Physicswala, about 4.6 crore shares, followed by Rubicon Research with 1.3 crore shares, forming 7.8% of their overall equity. We also have Wellspun Corp, about 61 lakh shares, nearly changed their hand in the block deal, roughly forming about 1,400 odd crores. While we also have DMart with 69 lakh shares, forming 1% of the equity, which changed their hands today in deal. Then we also have overall scientific company, which 37 lakhs, Visha. Then we also have Hexavetech, lastly, with the most recent one, about 14 lakh shares, roughly changed their hands in trade, forming about 78 odd crores. And in total, summing up, the block deals in today's trade were roughly about 9,500 odd crores. So that's quite a number and quite a day for large block deals.
Yeah, very interesting. And I'd be curious to find out who the buyers are, because you've seen a change in the way that foreign institutions as well have participated on the fringes in the Indian equity market. Certainly, it can be said, Sudeep, that the selling has abated, and the buy figures that we're seeing and have been seeing in the recent past have perhaps been influenced by some of these large trades that have taken place. Is this positive in terms of the environment that you're seeing in the capital markets in India right now?
Alex, you're asking me?
Yes, Sudeep, that's for you.
Well, I think it's definitely a sign of maturity. Investors who have remained invested in a company will look at opportunities for exit at certain points of time, and they may need that money for investing in other companies. So the PE funds, or in some cases promoters, exiting their existing investment, after maybe holding on for a very long period of time, should be encouraged. And I'm very happy to see that there is appetite in the market to absorb these stocks. So I think it's a very healthy trend. I don't think I want to read anything more than that. We should offer opportunity for exit, and that will encourage more and more investors and newer funds to come and invest in Indian markets. So very healthy trend, I would say. I think we are very happy to be witnessing this.
Absolutely, and the amount of paper that is coming through is also quite a bit, and we'll be tracking that for some time. But there's a pack of stocks that's doing particularly well, and that's the metal pack as a whole. And a few stand out, right? You have Steel Authority of India Limited, that's up about 6%. You have Hindustan Zinc, that's up in about 6% or thereabouts. Hindustan Copper is up in about 4.6%. There's an update with regard to the OFS. It is fully subscribed, and that includes the green shoe option as well. Vedanta is up 4%. NMDC
and the
is up.
copper prices, the globally, Alex, that has also hit its record levels as well. And some important reversals are coming in. And generally, when you get in the metal space, there is a, we could say, negative correlation with dollar index.
Yes.
And that's at a 3-month low.
Yeah.
So there is a good buying happening here as well.
Absolutely. And so to a certain extent, you're going to have to track the moves in the treasury market in the US. And the fact that yields have actually come off, the action that the treasury has taken in the recent past to buy back bonds has had a bearing on the dollar. And we were actually having
that's the shift coming to the metals and the precious metals.
Exactly. So when the dollar price goes down, or the value of the dollar goes down, commodities across the board go up, and that is positive for metals. That's having a bearing on the prices as well. Shivangi, on the charts for some of these metal counters, and if you have a view on the underlying commodities as well, please do weigh in. Is it positive? And would you suggest going long in any one of them?
Metal pack has been quite active and volatile, I may say. But SAIL has been one stock which is quite resilient, and it has kind of moved up, from the last 8 trading sessions consistently, with any small declines being absorbed by the buyers. So overall, this one's quite positive, and we've seen that it is closing near its day's high level, which it has crossed after 11 weeks. It's recouped all of its losses of those times as well. So overall sale is quite strong, and we're looking at sale for the next immediate targets of 200 levels.
Actually, in the last trading session also, we saw, Alex, the sale up move coming in, and now also we're seeing that buying
and
again coming in.
sudden in the last part of the session.
Exactly. For second straight day, this is happening. So we'll be tracking this as well. But Cyient is also in focus as bulls see a rebound while bears are remaining cautious. Jasmeet is here tracking the IT space thoroughly. Two scenarios are there, Jasmeet, for Cyient. And of course, the management meet or the analyst day was very strong as well.
Well, right, sure. Rightly said. Yesterday, we were discussing about the overall takeaway from the investor day, and the stock was already trading at an 8% uptick in yesterday's trade. Even today, the stock is about 4% high. Well, the management remains quite bullish on the outlook, and they also span out the new areas where they want to expand. But there are a few concerns as well. So here's the bull and the bear case for the particular counter. If you look at the overall market which they want to address, they want to expand it from the current $100 billion to $2.4 to $3.2 trillion. Well, that's a huge jump they're seeing in the market, and they're doing this by expanding the overall services and making it a overall life cycle service from being just an ER&D space in an ER&D company. But on the other hand, the bear case, the overall life cycle and after sales service still contribute a very small part, and this overall expansion can be a far-fetched target by the management. If we look at the next bull case, brokerages remain divided on this particular counter. There are few of them expecting a double-digit growth, and even management calls FY27 to be a transformational year for the company. But on the other hand, we have few brokerages who are still seeing that FY27 could be a flat year for the management with roughly no to low growth. If we look at the next bull case, the management is targeting about 50% of its revenue to come from recurring source of revenue, so that they at least have a long-term view in terms of the top-line growth. But on the other hand, the management has faced few delays and ramp-up concerns back in the Q1. So that still remains an overhang by the management. But the third concern is the management targeting a 15% EBIT margin, also a industry-level margin growth coming ahead. But currently they sit at 13.2%, and they also plans to invest in the AI and semicon. So all of this investment can further impact on the margins. If you look at the next key concern, the overall semiconductor business, that's what the management remains quite bullish about, and even the streets liking it. They're targeting roughly a 4x jump by FY31, but the the overall business still remains at break-even. While management expects that the overall business to break even by FY28, which still remains a key concern as there is still no proof of concept. Now, if you look at the last bull case on the overall aspect, in terms of the brokerages, the overall ICICI Securities, well, they remain quite bullish and they retain ad on this particular counter. They also see the growth going ahead, and they also like the overall semicon business of the management. But on the other hand, we have Motilal Oswal, where they see that the overall recovery can still remain quite slow, and they can expect a flat to no growth in FY27.
Thanks a lot, Jasmeet, for that. And Shivangi, just a quick view coming in, especially for Cyient as well. Do you think a little bit of profit booking can happen in this counter now, since a good up move has come in for the last 2-3 days? What are the charts suggesting?
Cyient, I think this stock has given a consolidation breakout after 19 weeks. So definitely, the longer the consolidation, we expect longer the up move and more sustainable it is. And we've seen today is the second session after the breakout. So definitely follow-up action is also there here today. But of course, volumes are confirming this up move as well. And we are looking at a little more upside, although we've seen from the last 2 days, it has run up by more than 15%. So we could expect some consolidation, but onwards and upwards at these levels. We could see a level of around about 1100 for this one with a support base of 1020.
The comprehensive view on the bull and the bear case and the technical charts for Cyient. By the way, while we were speaking about Cyient, what has happened is that the cash segment for F&O stocks has actually closed, and the Nifty 50, the last tick at 315, has settled at 24,276.9. The Sensex, let's pull that one up as well for you, 77,614 is where it has ended up. And for the Bank Nifty, it's up about 0.6%, 57,876.8. If you remember, if you're watching yesterday, you would have noticed that HDFC Bank made quite the stride at the end during the cash session, up about 0.5% or so, and that swung the benchmark and the bank nifty.
And a lot of conversation on Dixon Tech also.
Yes, that's true.
So these two stocks were actually there in focus, and who knows, you might have a new stock today.
You might just do that, and we'll know soon enough in the next 10 minutes or so. As things stand, of course, this is where Dixon is trading in the cash and in the futures market. Or rather, it's not trading the cash market, the futures continue to trade. Shivangi, since we're on the subject of HDFC Bank, let me very quickly ask you about some of these large private sector banks, because they're really moving in different directions as things stand right now. Both ICICI Axis are doing okay today, HDFC Bank taking a bit of a back seat. Would you trade these?
HDFC Bank has been, a big laggard from the banking space. It's down by 26% in the last 8 months. And we've seen, on the other hand, stocks like Axis and ICICI have been relatively more resilient as compared to this one. Axis is kind of flat, while ICICI is up by around 6% in this same time frame. So overall, of course, HDFC Bank has underperformed. We've seen that recently Kotak Bank is coming in the picture and showing some bit of signs of up move. It's giving a Poland flag pattern formation breakout, of course, on the verge of it on the yearly basis. So Kotak Bank could be definitely kept on radar. But as of now, no buying signal in HDFC Bank. This elephant has to kind of move and sustain for the next leg of rally to commence.
But speaking on the BFSI space, Capri Global is gaining investor attention as rising gold prices fuel demand for gold loans. Let's get in Shivam to understand the key drivers. Shivam, the stock has been doing well for last 3 sessions, up 15%. What are the key takeaways here?
Well, yes, Capri Global remains in focus as there has been a rising prices in the gold in the international markets. But also, is this a good candidate for your profit going forward? So let's dive deep into our analysis. So gold loan AUM, that constitutes around 47% of the total AUM, and it has scaled up rapidly in past. Also, this is one of the major growing key segments for the company. Also, in terms of yields, that has remained largely stable for all the across the segments, which has also aided in better margins. And going forward, apart from the gold loan segments, the MSME segment and the home financing segment also looks very promising. In terms of the branch expansion, the company is increasing its presence across the South India region, and also the break-even time period for the branches is within 6 months, which is also a very good point. Also, going forward, the 90% of the branches have already become profitable. In terms of asset quality, that has remained steady, and also the rapid loan book has not impacted the asset quality adversely. In terms of lower borrowing cost, the borrowing cost that has remained lower, which is further going to improve the margins and overall improve the operating profit going forward. In terms of key highlights for the from the con call, the management is targeting around 28 to 30% of the of growth in the medium term, and also the co-lending business that constitutes around 20% of the AUM, and the management is aiming to increase this share to 20 to 22%. In terms of incremental gold loan branch expansion, the bank is targeting the focused in South India, as I said, and also including the Karnataka, Andhra Pradesh and Telangana state. In terms of valuation, the current valuation of the price to book value of the stock stands at 3.4 times, and when we compare it to the 5-year average price to book ratio of around 4.6 and 1-year forward price to book ratio of around 2.65, the valuations remain lower, and also the stock remains undervalued when compared on an overall basis. Also, the few of the triggers that we should look for going ahead is the branch expansion, as the management is planning to add 700 to 800 branches over the next 2 to 3 years, and from this around 600 branches will be for the gold loan branches. The gold loans that are expected to be around constitute around 55% of the AUM in next 2 to 3 years, and also the expansion in South India and the cost to income ratio, that will be the key monitorables that we should look for.
Okay, all right. Thanks so much, Shivam, for putting that together. The stock is up quite considerably. It remains in focus along with the rest of the pack. The stock is off the high point of the day, of course, 7% higher at this juncture. By the way, updates coming through. The promoter of ICICI Prudential is set to sell stake in the open market. Prudential Corp is set to sell 2% stake in ICICI Prudential AMC. The stock is down about 2% or thereabouts. Sudeep, I want to come to you on Capri Global and perhaps also a view on gold loan companies, because gold prices have shot up over the course of the last 1 month, and we spoke about that in the context of commodities. But what does this mean for the space? And it's continuing to grow at a very frenetic pace.
No, absolutely. I mean, roughly about 4 years back, the entire gold loan business was about 3 lakh crore. Now it's about 23, 24 lakh crore. So you can imagine in the last 3.5 years, how many times the entire gold loan book in the country has gone up by. So that this has led to 2 things. One is the margin is definitely under a bit of a pressure because of the competition, and it's bound to happen. And that's exactly what we are witnessing. The kind of margin the gold loan companies used to enjoy now has come down significantly. The second thing is because the gold loan business requires certain skill sets, and there is a significant demand for this skill, and the attrition amongst employees is huge. In some cases, I understand the figure is more than 50%. That's the kind of attrition companies are finding. And retention of employees is becoming a challenge, which is in turn leading to increase in costs. So overall, the way we analyze the scenario, the business will continue expanding because this is a secured lending book, and the security is absolutely liquid. So this is a preferred mode of lending. So the expansion of the book will happen, but the margins, both because of the competition as well as cost increases, will keep coming down. That's the scenario as far as gold loan is concerned. It's a good business. The leaders will continue to gain market share. The South India continues to remain the prime area for play as far as gold loan is concerned.
Right. But of course, if we are talking about BFSI stocks, remember these stocks have made money also for the promoters. And there's a saying, na baap bara na bhaiya, sabse bada rupaiya. And that is what is very interesting. And Puneet has got a very interesting data on that. Puneet, take it away.
Well, thank you for that. It's a big list that we put together now. India's finance boom, which is minting billionaires at this point of time, and 3 key things that you need to watch out for. Now, 15 finance fortunes is what we're looking at, and this is a list compiled through Bloomberg. We're looking at the 15 biggest fortunes that have been made in India by billionaires, looking and led by the BFSI vertical. Now, $65 billion of combined wealth. This is roughly 25% of the India's 500 biggest companies and our financial firms as well. Now, these are some familiar faces as you look at it, but when you look at the top 5, Uday Kotak comes at the number 1 spot. Kotak Mahindra Bank, very well known franchise, now across verticals at $16.4 billion of his own fortune, is one of the number 1 on the list. Muthoot family also, we were talking about the gold loans and the gold financing schemes, comes at number 2. Kamath Brothers not listed at all, but there have been, Zerodha as well as what has happened over the last 16 years with the company. Ajay Piramal, of course, and Motilal Oswal and Ramdev Agarwal both are roughly $3.9 billion as well. There are some other prominent names that, come up on our list too. You have to watch out for Sachin Bansal in his second innings now with Navi. You've seen Vijay Shekhar Sharma of Paytm ranking at the number 14 space, and Grow also comes on the list as well. On the 15th rank is Lalit Keshri with $1.1 billion in terms of net worth. There are also some new age names that came to our list too. Zerodha, of course, we spoke about, as well as Navi, and all of these continue to be in focus for the same as well. But as we look at, gold loans, that's the next billion maker as we're looking at it as well. Because Muthoot Finance with George Alexander has been at the helm, $9.9 billion. Malappuram Finance also on the list. And so is Capri Global, a stock we just discussed and put focus on as well. But these are the list and names of the 15 billionaires from the finance field who have made it big. And for shareholders too, they have made returns, but for themselves too. This list puts combined list and as well as the name and the numbers for what you have to watch out for.
Got it. Okay. Very interesting. All right. Puneet, that's a great list. And in fact, the financial space in India is creating wealth across the board, certainly for India's billionaires as well. Let's take a look at the markets and see whether rates have settled. Have they? We're still waiting. It's just maybe another couple of minutes to go. But some of those names are particularly interesting. I saw one AMC, there's a gold loan company, there's Paytm, which has gained quite considerably.
Even we have a brokerage also, Grow is also there. So much is happening. And Alex, you track the space of the financialization of India, how things are happening, just not in equity, but other asset classes as well.
Yeah, no, absolutely. A lot of conversations about the participation in B30 towns and cities, right? You had Turtle Mint today.
That's the mutual fund, right?
It's not just mutual funds. Turtle Mint, for example, was talking about the fact that a lot of their business comes through in the way of insurance and premium paid, comes through from tier 2 and tier 3. So financialization has an impact there as well. It starts with a two-wheeler insurance, and it moves up the value chain to health insurance and life insurance and also mutual funds.
It's a long way to go.
It is a long way to go. By the way, there's a clarification that's come through from DCB Bank. As you know, there was a little bit of a buzz of an acquisition of stake in DCB. It is clarified on reports, and it said that it evaluates various strategic and other opportunities. Shareholders are approved fundraising by various modes on the 3rd of July. It says it is not aware of any information that is required to be disclosed that is of material nature. So it's not really a denial. It's more to say that there hasn't yet been any material development that needs to be disclosed. By the way, you've had the market rates that have settled. Let's pull those up for you. And Sharad, you might want to make your way to the wall to just take a look at what the F&O Qs are. But in the meanwhile, let me mark those initial levels for you. Just as you had a 74-point up move in the CAS window for the benchmark Nifty 50 in trade yesterday, you have a 68-point downtick for the benchmark Nifty 50 in trade today, settling just above that 24,200 mark that is viewed as an important support level. The Nifty Bank dropping as much as 92 points. We're ending with cuts of about 0.5% or so for the benchmark Nifty 50. Sharad, what are the key details when you look at the internals though?
Well, looking at the internals, remember this is the first start of series under the CAS effect, and largely we see the up moves is kind of on the reversal side, but let's just give it more time, and this is the movement you're seeing. It's a downtick coming in. We need to see which segment or the stocks, is it a banking or a non-banking name which has dragged it in the last moments. Let's just show you the top gainers and the losers about on the CAS effect, how things are panning. Alex already discussed the differences between Nifty and Nifty Bank. Of course, up moves coming in from Asian Paints and Hindalco. These are not much big movers. The downtick is something I want to see. That's where the fall is happening. And yes, some little bit of concern coming in the auto names, especially Maruti and Trent as well. And lastly, 24,200 or 24,300. If you could just show the call and put segment of these segments, then we can get more clarity on where the open interest developments is happening. And it seems like this is where the action is happening in the put segment as well. And this is something which you should be tracking.
Let's also take a look at which F&O stocks, Sharad, have moved, right? So we looked at the key movers in the Nifty 50, but if we look at the broader F&O list to see what the top
and the
gainers
fresh rollovers are coming, Alex.
And the fresh rollovers that are coming. But what is the difference in the F&O list? If we can pull that data up. We don't yet have it. Okay, so we can talk about that. Okay, so but in the meanwhile, we've passed that 330 mark. So let's take a look at where we've closed things out. Pull up the benchmark Nifty 50. We've got cuts of about 0.5%. Then we look at the heat map for the Nifty 50. We look at the various metrics that we track at the end. 0.5% cuts for the Nifty 50. A little bit of a cool off for the Nifty Bank from the high point of the day.
But Alex, the small cap remains, I think, same, and the advanced decline ratio is still in the favor. So no major issues happening in the small cap space.
A little bit of gains being shaved off the top. But take a look at the heat map for the Nifty 50 just as we close off. You have more red on the screen than green. HDFC Bank is ending just about...
They have given up the game again. This for the second straight day.
Absolutely. So just about flat. Power Grid, Infi, a large number of those IT names are losing ground today. Kotak Mahindra Bank, Axis, HDFC Life, and you will see ICICI Bank as well. So private banks X of HDFC Bank doing well. Public sector banks also doing well. Metals doing well. So it's been an okay sort of a day. with the market breadth in favor of the advances, but the large caps once again taking a bit of a back seat.
And lastly, just point out the BSE 500 index stocks also, has that changed or not? And of course, we have UFlex, that's a new entrant coming into the list. IDBI Bank also seeing a good buying here. And amongst the sell-off names, we already, Varun Beverages was there. Now a little bit of profit booking continues in the sugar stocks, and interestingly, Graphite and Crompton also make it to the list. But nevertheless, a good day, Alex, for the small caps.
For the small cap, certainly in market breadth. But let's find out what tomorrow brings. In the meanwhile, it's a wrap on this edition of India Market Close. From Sharad and myself and the team that put the show together from the NDTV Profit Suzlon studio, thanks so much for watching. Stay tuned. This is NDTV Profit.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो पतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी.
When outcomes matter, you trust accuracy and precision every time. Because cricket ho ya medical care, trust is earned with consistency. Welcome to Lord's Met.
Hello and welcome to NDTV Profit. You are tuned into Crypto Minutes powered by CoinSwitch for your daily dose of news and updates from the crypto world with me, Sharad Dubey. Now let's take a look at the top headlines. Bitcoin remains steady near that $79,000 mark on profit booking. Japan officially moves government bond market on blockchain. 39 US banking groups build blockchain network. And lastly, Thailand's SEC releases draft rules for spot Bitcoin and Ethereum ETFs. Well, those were the top crypto headlines, and now it's time to go beyond the headlines and understand what's really moving the market. Bitcoin has seen a sharp move higher. What's the reason behind the surge, and what do the technicals tell us? Here's Vimal Sagar Tiwari, co-founder of CoinSwitch, with his view.
Thanks, Sharath. Let me explain what is driving this. Bitcoin crossed 80,000 yesterday. It touched just above 81,000 and then came back to around 79,000. This is the first time above $80,000 since May this year. There are three reasons behind this move. First, and this is not the most important one, the trigger was a macro event and not a crypto event. On August 19th, the US Treasury said it will double the maximum size of its long-term bond buyback program to $4 billion per session from $2 billion. The market read this as more liquidity coming into the system. The bond yields have come down, the dollar became weaker, and the investors became more confident. Bitcoin was one of the biggest beneficiaries of this event. Second, there is a policy angle. After last week's White House meeting with crypto industry leader, the market is more hopeful that crypto legislation will finally move forward in the United States. That is a positive signal for the whole industry. Now the third point, short sellers were caught on the wrong side. As the price went up, they were forced to buy back, and that made the move more faster. But here is the point I want to highlight. This is not a only short covering. The real genuine buyback is also there. US spot ETF took in almost 2 billion last week, the strongest week in last 10 months. That is the institutional money, and this is much more durable kind of demand. So Bitcoin is up more than 20% in 1 week. In this 1 week, it has wiped out
almost 3 months losses. So to sum it up, this is not one of those overnight crypto stories. The macro turned supportive, the policy signal has improved, and the institutional money has also came back. All three happened in same week. That combination is what took Bitcoin back over $80,000.
And the big question now is whether this rally can hold. Which downside level is the key must-hold support, and what should the market participants keep in mind? Listen into what else Vimal had to say.
Sure, Sarad. So the number I am watching is $75,000. If Bitcoin comes down but stays above that, the recovery still looks healthy. A pause after such a big jump is very normal. That is just the market taking a breath. My message to your viewer is that the bigger picture is genuinely encouraging. Institutional money is coming back through ETFs. The policy environment is improving, and the macro conditions have also turned supportive. Those are real foundation, and they were together not there in last few rallies. Yes, the swing will be bigger in both the directions, but the nature of the asset is still maturing, and the market is also maturing in the right direction. And of course, everyone's situation is different, so please do your own research before deciding anything.
Thanks a lot, Vimal, for that. And now as we wrap, remember you can reach out to CoinSwitch's dedicated helpline where anyone can connect with the in-house experts to get their queries resolved, whether it's about crypto, regulations, taxation, or the broader industry. The team is available to provide guidance and help users make informed decisions. Well, that's all on this edition of Crypto Minutes powered by CoinSwitch. Thank you so much for tuning in.
When outcomes matter, you trust accuracy and precision every time. Because cricket ho ya medical care, trust is earned with consistency. Welcome to Lord's Med. Empowering health, touching lives. Accuracy that shows up when it counts the most. State-of-the-art innovation, made in India. Or trust, puri duniya ka. When it comes to medical care, choose Lord's Universe. Precision with care.
लॉर्ड्स मार्क इंडस्ट्रीज हमेशा आपके साथ.
A world of questions. Ideas that challenge the ordinary. Conversations that connect countries and cultures. Where different worlds find common ground. NDTV World brings Nepal's ideas to the world. NDTV Anviksha, Ideas Across Borders. The Nepal Dialogue. 27th August, Kathmandu, Nepal.
Welcome to India's biggest grassroots innovation movement. Vande Bharatam, Bharatam, Vande Bharatam.
हमें ये पूरा रोड मैप क्लियर करके ज्यादा से ज्यादा लोगों तक पहुंचाना.
स्पंदन एक पोर्टेबल ECG मशीन है.
सिर्फ यहाँ पे थेरेपीज डिजाइन की गई है.
If you need any manufacturing help, do reach out.
And I'm more than happy to get your product to all of them.
हर हफ्ते आइडियाज के असली ग्रास रूट इनोवेटर दिखेंगे वंदे भारतम में. Coming soon on NDTV Profit.
From bullet trains to Suzuki, Toyota and Sony, Japan is already deeply integrated into India's growth story. Now, after Prime Minister Modi and Prime Minister Takaichi's summit, Commerce Minister Piyush Goyal brings 200 plus business leaders to Japan. Can the next phase of the India-Japan trade story be around semiconductors, manufacturing, investments and artificial intelligence? Join me, Rishabh Bhatnagar, as I travel with the Commerce Minister to Tokyo, Osaka and Nagoya to figure out where the next level of the India-Japan story lies.
Arunesh Chawla, the DPOM Secretary, speaking exclusively with us on NDTV Profit. How do you see the momentum from here, and what's your reading on the expectations around the Hindustan Copper OFS?
This is in line with Prime Minister's vision of sharing the national wealth with ordinary investors, minority stakeholders, and citizens of India. Hindustan Copper, has good futuristic investment plans. And if you see the market analysts and the feedback, this is a stock which is forecast to go upward.
80,000 crores, Mr. Chawla, is the target. You've already hit 52,000 crores in FY27. Do you expect to comfortably exceed this target?
I would say we are working hard and will achieve the target.
What is the dividend picture looking like for CPSEs?
Dividends, we have a plan, but you will see that plan becoming active in the second half, which is when the dividends come in.
3 decades of watching the world change.
Good evening, you're watching Market Express with me, Shreyansi Singh, and this is the show that's going to, over the next few minutes, get a snapshot in terms of the trading day, but also news and updates from within the country and across the globe. First things first, let's take a look at what the markets were up to. And when you talk about benchmarks, ended near the day's low, with the Nifty also settling around 24,200, Sensex losing over 180 points, selling pressure towards the close, also keeping the overall market tone quite weak. Moving on then, let's talk about the sectoral breadth that also remained quite weak, with most indices ending in the red. IT and consumption stocks led the losses. Meanwhile, you did have metals and PSU banks showing a little bit of relative resilience. Onto oil prices that were falling for the third straight day as Iran and Oman discuss an interim maritime corridor to restore shipping through the Strait of Hormuz as well. So you do have Brent that slipped below $87 with diplomatic progress and easing escalation risks also weighing on crude prices. US sanctions also stopped short of tougher measures on China, Iran's biggest oil buyer, and you do have rising US crude inventories that are adding further pressure onto the prices. When you talk about gold, that is consolidating after a 5-day rally, with investors now focused on the Fed's rate path ahead of the Jackson Hole summit. So bullion has pulled back to around $4,600, remains up about 7%. That's over the past week. When you talk about the key triggers, strong ETF inflows is something that you're looking at. Gold also moved above its 200-day moving average that you should be tracking very closely, and lots of cues to watch out for when it comes to gold. Moving on then, let's talk about copper that is climbing for a fourth straight day, closing in on its record high as tight supplies keep supporting prices. The metal has already surged about 16% this year, with stockpiles drained by heavy US shipments, while the recent market squeeze has also eased. Inventories also remain quite tight. You're looking at fresh withdrawal requests and falling Shanghai stockpiles that are reviving some of those supply concerns really. So longer term, AI, renewables and power grid demand coupled with mine disruptions continue to strengthen the copper bull case. Moving on then, let's talk about some stocks that were in focus. It's actually Lupin that was up quite a bit, gave up some of those gains by the end of the session, but won a key US court battle against Vertex with a court ruling that its generic does not infringe 4 patents related to Calideco. Now, Lupin has already had tentative US FDA approval, so the patent win removes a major hurdle coming in when you talk about the launch. The targeted oral granules market is worth around $51 million annually in the United States, and as the first to file applicant, you do have the company that could also secure 180-day exclusivity, giving it a potential early mover advantage. Moving on then, but keeping with the world of pharma, let's talk about Cipla on the flip side, that has completed a US FDA re-inspection at its Pithampur plant. With the inspection conducted from August 17 to 25th, the company received 7 observations in the Form 483 and says that it will respond within the stipulated time period that has been set out by US FDA. The facility was already under official action indicated status, making this re-inspection a key step towards regulatory clearance. And the market, of course, is going to be watching out for the next steps closely. Let's move on and talk about Finasa that has called off its proposed acquisition of a 58% stake in Fluence Pharma, about a 2% downtick coming in. As far as this particular counter is concerned, the deal was terminated after conditions required under the share purchase agreement were not fulfilled, though Honasa has not disclosed which conditions specifically remained unmet. But the deal was announced back in June, carried an enterprise value of close to 135 crore rupees, and the company had planned to acquire the remaining 42% over the next 5 to 7 years, which, by the way, is not going to be happening. Moving on, then, let's talk about Varun Beverages, that is entering the ready-to-drink alcoholic beverages segment, incorporating wholly owned subsidiary Kiva Spirits. Now, about a 3.8% downtick on this particular counter, and you do have the company appointing Pratmesh Mishra as CEO and Managing Director, bringing over 3 decades of industry experience though, and the move does expand the company's addressable market, creates a long-term growth opportunity, but it was largely the investment that the street was focusing on, and that's something based on which the stock was under pressure. You do have analysts also flagging tougher competition going forward for existing alcobev players and a complex regulatory environment that seems to have dragged the stock. Let's move on and talk about global brokerage Nomura, that remains bullish on India's oil marketing companies despite crude prices staying elevated, as we've mentioned. You do have Nomura expecting oil prices to ease over the medium to long term as rising global supply could create a significant surplus. Among the oil marketing companies, the brokerage is actually preferring Indian Oil Corporation and BPCL as well. So the positive view is coming in, even as OMC stocks have seen some bit of pressure this year. Moving on to business news now. Deloitte has agreed to pay $21.5 million to settle a US government investigation into its diversity, equity, and inclusion practices. The US Department of Justice alleged the consulting giant considered race in hiring, promotion, and staffing decisions while pursuing internal workforce targets. The company has denied any wrongdoing and said that the settlement does not amount to an admission of liability, and the company has also said that it chose to resolve the matter to avoid the cost and distraction of prolonged litigation. The case is coming in amid a broader Trump administration crackdown on corporate DEI programs and alleged discrimination linked to federal contracts. Moving on, then, let's also move on and talk about Meta Platforms and attorneys general from several US states that have discussed a potential settlement in the middle of a federal trial accusing the company of deliberately designing Facebook and Instagram to be addictive to young users. You do have outlets reporting that discussions are currently underway as the high-profile case continues in California. The lawsuit was brought by 29 states and is focused on allegations that social media platforms have harmed children and even teenagers. The trial began after a federal appeals court declined to halt proceedings. Any settlement could bring an early resolution to one of the biggest legal challenges facing Meta over youth safety. Moving on, then, let's talk about Hyundai Motor that plans to launch or refresh more than 100 vehicles. And I'm talking about worldwide by 2030, as it targets an operating profit margin above 9%. So the South Korean automaker is going to be introducing 58 models when it comes to North America, including an expanded hybrid lineup as it looks to gain market share and strengthen its presence in the underrepresented vehicle segments. Now, you do have the company describing this particular strategy, by the way, as its largest ever product rollout and a broad product offensive, and that's across regions. The company is also maintaining its target of returning at least 35% of net profit to shareholders. Despite the plans, Hyundai shares did fall about 3.3% following the announcement. Let's move on and talk about SpaceX that plans to build its largest launch facility yet in Louisiana, with the project valued at around $100 billion. So that's the whopping cost that you're looking at, which includes construction of Starbase that is expected to be beginning next year across a massive 125,000-acre site. SpaceX is saying that this facility is going to be supporting thousands of Starship flights annually, including missions to Earth orbit, the Moon, and Mars. The company aims to launch its first Starship flight from the new base in 2029. So that's really the year that you're marking on your calendars there. The project is expected to create more than 3,000 direct jobs and over 8,100 additional jobs indirectly. Expansion coming in as SpaceX faces pressure to demonstrate profitability following its blockbuster market debut. Moving on to some national news, Delhi is seeing a sharp rise in influenza cases, prompting the government to step up its preparedness at this point in time. The capital has reported around 3,000 influenza cases this year, including 2,308 H1N1 infections. Now, you do have Chief Minister calling an emergency review meeting to assess the city's response. The Health Minister, Pankaj Kumar Singh, also saying that the situation right now remains under control with adequate doctors, medicines and isolation facilities currently available, and that's across hospitals. Moving on then, let's talk about farmers in Maharashtra's Nashik district halting the onion express train at Lasalgaon as well, protesting over the quality of onions being transported. So you do have Prahar organization leader Ganesh Nimbalkar reportedly laying down in front of the train as well, demanding answers from railway and government officials. The farmers alleged that rotten onions were being loaded and demanded that the sacks be opened and inspected at this point in time. The protest disrupted train movement as farmers called for immediate action and transparency. Moving on to some somber news coming in on the international front. A massive flash flood has hit Nepal, leaving at least 8 people dead at this point in time and several others missing. You do have the Bhote Koshi river that surged through Nuwakot and Dhading districts with floodwaters coming from the Tibetan side of the border, washing away villages. At least 26 Nepal police personnel and 7 armed police personnel are also missing in Rasua. Several hydropower and transmission facilities have been damaged, while highways have been shut. In parts of the country, rescue and relief operations currently underway. Moving on, a devastating fire at maternity ward in Pakistan's capital Islamabad has killed at least 14 newborn babies. The blaze broke out early today at the Pakistan Institute of Medical Sciences, the country's biggest state hospital. 15 babies were in the ward at the time, with just 1 rescued. So you're looking at quite the update coming in on this front as well. Moving on then, music legend Dolly Parton has died at the age of 80. Her family says that she passed away peacefully in Nashville. Parton was one of the most successful and recognizable artists in country music. With a career spanning nearly 6 decades, she sold more than 100 million records and won 11 Grammy Awards, while also making her mark as an actress, entrepreneur and philanthropist. From Jolene to I Will Always Love You, her songs became global classics. And moving on then, a Raksha Bandhan advertisement featuring actor Kriti Sanon has been withdrawn by jewelry brand Jiva following criticism on social media. The campaign drew backlash over Sanon's outfit and its portrayal of the festival, including a scene where she ties a Rakhi to a pet dog. Sanon defended her choice, saying festivals are about emotions and traditions rather than what a woman wears. Jiva has now removed this particular ad from all media, saying that it respects Indian culture and traditions and did not intend to hurt anyone's sentiments. And with that, it's a wrap on this edition of Market Express. Thank you so much for tuning in.
From bullet trains to Suzuki, Toyota and Sony, Japan is already deeply integrated into India's growth story. Now, after Prime Minister Modi and Prime Minister Takaichi's summit, Commerce Minister Piyush Goyal brings 200 plus business leaders to Japan. Can the next phase of the India-Japan trade story be around semiconductors, manufacturing, investments and artificial intelligence? Join me, Rishabh Bhatnagar, as I travel with the Commerce Minister to Tokyo, Osaka and Nagoya to figure out where the next level of the India-Japan story lies.
New rules of engagement. Ambitions crossing borders. Voices refusing to wait their turn. India is chasing gears. Faster, bolder, more restless. It doesn't stop. Neither do we. NDTV, when it really matters. A world of questions. Ideas that challenge the ordinary. Conversations that connect countries and cultures. Where different worlds find common ground. NDTV World brings Nepal's ideas to the world. NDTV Anviksha, ideas across borders. The Nepal Dialogue, 27th August, Kathmandu, Nepal.
Welcome to India's biggest grassroots innovation movement.
हमें ये पूरा रोड मैप क्लियर करके ज्यादा से ज्यादा लोगों तक पहुंचाना।
स्पंदन एक पोर्टेबल ईसीजी मशीन है।
सिर्फ यहाँ पे थेरेपीज डिजाइन की गई है।
If you need any manufacturing help, do reach out
and I'm more than happy to get your product to all of them.
हर हफ्ते आइडियाज के असली ग्रासरूट इनोवेटर दिखेंगे वंदे भारतम में, कमिंग सून ऑन NDTV Profit.
Arunesh Chawla, the DPUM Secretary, speaking exclusively with us on NDTV Profit. How do you see the momentum from here, and what's your reading on the expectations around the Hindustan Copper OFS?
This is in line with Prime Minister's vision of sharing the national wealth with ordinary investors, minority stakeholders and citizens of India. Hindustan Copper, has good futuristic investment plans. And if you see the market analysts and the feedback, this is a stock which is forecast to go upwards.
80,000 crores, Mr. Chawla, is the target. You've already hit 52,000 crores in FY27. Do you expect to comfortably exceed this target?
I would say we are working hard and will achieve the target.
What is the dividend picture looking like for CPSEs?
Dividends, we have a plan, but you will see that plan becoming active in the second half, which is when the dividends come in.
We are turning a page in Nepal's political economy. On the bedrock of good governance and bold reforms, we want to accelerate the pace of economic catch-up.
In rapidly changing global landscape, foreign policy must be anchored in strategic clarity and shared prosperity.
Hello, I'm Shashi Tharoor, and beyond statecraft and formal treaties lies the true heart of our partnership, our deeply rooted cultural diplomacy and people-to-people bonds.
I look forward to sharing our vision for industrial cooperation at NDTV World a week share.
Seamless trade and strategic cross-border investments are real drivers of modern growth.
Understanding the past and present is the key to unlocking the future in India-Nepal.
Market ended under session with pressure, with the Nifty falling over 0.5% as Bharti Airtel and Power Grid led the losses. Broader markets, however, outperformed. The mid-cap 150 closed largely flat, while the small-cap 250 gained nearly 0.6%. Metals were the top-performing sector, rising almost 1.6%, while it was the biggest laggard, down nearly 1.3%. It's a busy day in the primary market. Gaja Alternative Asset Management has made a strong debut, listing around a 16% premium after its 550 crore IPO was subscribed over 31 times. Meanwhile, luxury fashion platform Purple Style Labs is lining up its 660 crore IPO, setting a price band of 546 to 575 per share and seeking a valuation of over 4,600 crores. Credit card growth stayed robust in July, with HDFC Bank leading card additions and SBI cards topping spending growth. Industry card spends rose 7.4% year-on-year. Finance Minister Nirmala Sitharaman is making a fresh pitch to Canadian investors, calling for greater engagement with India and its growth story. The comments come during the Finance Minister's 9-day official visit to Canada and the USA, with investment and economic ties in focus. It is day 3 of NDTV Profit in Japan, where Piyush Goyal says that India and Japan are set to review their trade deal, highlighting that the 15-year-old CEPA needs to be made more contemporary and expanded in scope. A massive flash flood has devastated parts of northern Nepal near the Tibet border, washing away villages, roads and bridges in the Rasua district. At least 8 people have been confirmed dead, with several others missing as rescue teams, including the Nepal Army, police and disaster response forces, continue search and relief operations. Meta and a group of US states have reportedly discussed a potential mid-trial settlement in the landmark case accusing Facebook and Instagram of being deliberately designed to addict young users. The federal trial involves claims from 29 states, including allegations around children's data and platform design. Meta has denied the allegations. Hello and welcome. This is Profit 360 on NDTV Profit, and I'm your host, Nimit Dikshit. Along the next half an hour, we'll bring you the latest on markets as well as national and international news. But before we go to that, let's go to the markets. Benchmarks ended nearly at a day's low, with the Nifty settling around 24,200 and the Sensex losing over 180 points. Now, selling pressure towards the close kept the overall market 1 week. Now, Jasmeet is here. Now, Jasmeet is in green today, but the markets are slightly in red. Jasmeet, tell us how the markets have been reacting.
Well, thank you for that. As rightly said, we see a weak day for markets today. If we talk about the cash side of the business, we are noting a downtick of about 70 points in Nifty, while Sensex saw a downtick about 140 odd points. Talking about the market specifically, Nifty 50 ends in red and loses about 0.5 odd %. In terms of top losers in the markets, we have stocks like Bharti Airtel and Power Grid, both losing over 2 odd % in today's trade and dragging the Nifty down. In terms of the broader market, while that outperforms the benchmark in today's trade, Nifty Midcap 150 ends flattish in today's trade, while the top gainers are among Anthem, Biosciences and Steel, both gaining about 5 odd %. Now, if you look at the small cap 250 side of the business, we are again noting a positive ending of the small cap 250. It ends about and gains 0.6 odd % in today's trade. In terms of the top gainers in small cap 250, we have stocks like SBFC and Jindal Saw, both gaining about 7 odd %. Talking about the key sectors, while we have noted a trend about mixed ending for the key sectors, in terms of the top gaining sector, we have Nifty Metals, which gained about 1.3 odd %. And in terms of the top gainers in Nifty Metals, we have stocks like Hindustan Zinc and Steel Authority of India, both gaining about 5 odd %. And metals, most of the stocks were in green in today's trade. If you look at the top losing sector, we have Nifty IT losing about 1.5 odd %. And in terms of the top losers in Nifty IT, we have stocks like Infosys and Tech Mahindra losing the most. While Nifty IT also remains in key focus as ahead of the Nvidia earnings, so we'll be getting you more information on that as well. If we look at the key trends in today's market, Nifty